And it's causing, well, a mix of anxiety and a lot of hope for millions of Americans,
A huge amount of hope.
especially for those living on fixed incomes. We're talking about the announcement from the president about a major potential financial dividend.
And the number being thrown around is big, upwards of $2,000.
$8,000, yeah. And the big question, the one we hear constantly, is will this payment actually include the people who need it most?
Right. Will it finally reach the fixed income community? We're talking about people on Social Security, SSI, SSDI, low-income veterans.
Folks who, often feel like they're the last ones considered when government funds are being handed out.
They absolutely do. And they need clarity on this, right now.
And the simple answer, based on the principle that was laid out in the initial announcement, is broadly yes. Inclusion is definitely expected.
And this is a huge but.
The entire conversation, everything we're about to discuss, it all hinges on one single crucial variable that hasn't been defined yet.
And that is the definition of high income.
That's it. That phrase is everything.
So we are dedicating this deep dive to walking you through every rule, every historical precedent, and every potential pitfall. We're going to clarify the income thresholds from the past.
We'll also debunk some of those persistent myths.
Oh, absolutely. The ones about needing to file taxes or that this is only for people who are working.
Which is completely irrelevant.
Completely. And we'll guide you through how a payment like this would likely be delivered. So if you are on a fixed income, this analysis is going to give you the definitive information you need about this potential $2,000 plus payment.
Welcome, and thank you for trusting us with this deep dive.
Yeah,
Our mission today is very specific and, I think, very critical. We
absolutely.
want to cut through all the speculation, all the misinformation that's already flying around about this significant financial update, and just provide some actionable clarity.
And this isn't just some abstract policy discussion, is it? I mean, this is information that directly impacts the bank accounts of millions of people.
Millions.
People who rely on monthly federal benefits. We're talking Social Security retirees, survivors, individuals on SSDI, that's Social Security Disability Insurance.
And SSI, Supplemental Security Income.
Right, the need-based benefit, plus VA benefits and, of course, Railroad Retirement Board benefits. We know this community has been, well, historically frustrated.
Frustrated is a polite word for it.
It is. They feel overlooked or tangled up in all this bureaucratic red tape during previous payments.
And that frustration is completely warranted. I mean, the psychological toll of just the uncertainty of not knowing if financial relief is coming your way, it's very real.
It's immense.
So our commitment here is to address that emotional context with clear, factual information based exclusively on the sources that are available right now. We want you to walk away from this knowing exactly where you stand.
Okay, so let's start at the source. We've isolated the core statement that started all of this.
The exact words.
The president announced a proposal for, and I'm quoting here, at least a $2,000 dividend for everyone will be paid, not high-income people.
Okay. That statement alone is a really powerful starting point.
It is. It locks in the potential amount, which is significant, $2,000 or even more.
And it establishes that the sole primary reason for being excluded is income.
Not high-income people. That's the phrase that matters.
Right. Let's unpack that core concept, starting with where the money is actually supposed to come from. Because the mechanism here, the funding, it fundamentally differentiates this payment from, say, the stimulus checks of the pandemic era.
It's a completely different animal.
Right. In those previous relief efforts, like the CARES Act checks, the money was largely generated through deficit spending.
Right. The government was essentially borrowing the money.
Exactly. And the goal was to stimulate the economy and to do it fast during a crisis. But this new proposal is structured very differently.
It is. The source material explains this explicitly. The funding is proposed to come from the distribution of revenue generated by federal tariffs.
Tariffs, okay.
And this is a distinction that is just crucial for you to understand. Tariffs are, essentially taxes or duties that are levied on goods and services imported into the United States.
So when companies bring products in from other countries, they pay a tax on them.
Precisely. And when those fees are collected by the government, they become federal revenue.
So the proposal isn't even labeling this as traditional stimulus or relief in the same way.
No, not at all.
Instead, it's being framed as a dividend. It's a return of revenue that's being distributed back to the population.
Which is a very different economic argument. The idea is that the revenue generated by our national trade policy should be shared directly with the citizens.
And that framing, the whole using trade revenue thing, that's a critical political and economic point, isn't it?
No, it's huge. It suggests a policy mechanism that avoids increasing the national debt to fund the payment.
Which is always a major point of contention in these discussions.
Always. And if we look at the historical precedent for this kind of approach, I mean, distributing specific categories of federal revenue directly back to the people is a tool that's been discussed in various forms throughout American history.
Rarely on this scale.
Rarely, if ever, implemented on this scale. It really creates an entirely separate category of financial aid.
Okay, so if we go back to the specific language that was used, that quote, let's repeat it.
Quote, "At least a $2,000 dividend for everyone will be paid, not high-income people."
And that phrase right at the end immediately brings us to the biggest piece of missing information, the elephant in the room.
That phrase, "not high-income people," is the gravitational center of this entire proposal. It is the single most important detail that we are currently missing from any kind of legislative text.
It's everything.
Until Congress or the relevant agencies actually define that specific income level, we can't finalize who is eligible. We can't finalize distribution models. It's all on hold.
So what is the threshold specifically? I mean, does high income mean an individual who is earning, say, $50,000 a year, $75,000, $100,000?
That is the multi-billion-dollar question.
That line in the sand dictates who gets the payment and who doesn't, and it determines the size of the population receiving the benefit.
And while that ambiguity is, it's frustrating, we can offer some pretty strong reassurance to our core audience here.
To seniors, older adults, people with disabilities, low-income individuals.
Exactly. For the vast majority of beneficiaries who are living solely on fixed incomes, your eligibility is only going to hinge on your income being below that yet-to-be-defined threshold.
And given that the average fixed income is significantly below any historical or even likely definition of high income.
Right. The chances of you being included based on this singular criterion are exceptionally high.
So the uncertainty then isn't really about the principle of whether fixed income folks will be included.
No, not at all.
It's about the exact number that Congress will ultimately decide on.
Right.
The mechanism itself is clearly designed for a very widespread distribution, excluding only the very top end of the income spectrum. Okay, so let's move past the funding mechanism for a minute and address the most urgent practical question for our listeners.
The one everyone is asking.
Are recipients of federal fixed benefits, so Social Security, SSI, SSDI, VA, spousal benefits, survivor benefits, and Railroad Retirement Board, are they included in this dividend proposal?
The simple, clear answer, based on all historical precedent and the income-based principle that's been articulated, is broadly yes.
Broadly, yes.
But we need to define exactly why that is the case and maybe clarify the different benefit types we're talking about because the details really do matter here.
Okay, let's break down those categories just for clarity's sake. So first, we're talking about SSDI.
Social Security Disability Insurance. So benefits for those who have a sufficient work history but are now disabled.
Then there's SSI.
Supplemental Security Income. That's the need-based, very low-income program for aged, blind, or disabled individuals. And crucially, it's often paid to people who don't file taxes.
Right. Then you have your standard Social Security retirement and survivor benefits.
The traditional monthly payments that are based on the work credits you've earned over your lifetime.
And, of course, VA disability compensation or pension.
Right. Benefits for veterans, especially low-income or disabled veterans.
And finally, RRB.
Railroad Retirement Board benefits, which is, very similar to Social Security, but it's specifically for railroad workers.
Okay, so for all those groups, why are we so confident they would be included?
Because when Congress writes legislation for widespread financial payments like this, especially ones framed as dividends or broad economic relief, they are always income-based.
Always.
They set a specific threshold, and they use a standard income metric to do it. Typically, it's your adjusted gross income or AGI or sometimes a modified AGI.
What they don't do is write in specific exclusions for certain types of income.
Exactly. Lawmakers do not usually insert language that says something like, we will count your W-2 wages, but we will specifically disqualify your Social Security retirement payments. It just doesn't happen that way.
That distinction is so key. The money you receive from these benefits, whether it's SSDI, VA, or retirement, it's treated as income.
That's right.
And if your total income from all sources is below the threshold, you qualify. period.
The reason this community often feels left out is usually because of the bureaucratic hurdle of actually getting the money.
Especially for non-filers.
Exactly, which we will definitely discuss in more detail later. But it's not about the initial eligibility.
And we have to acknowledge where that frustration comes from.
We do. During the first 2 rounds of pandemic relief, there was a lot of initial confusion and some serious delays for Social Security non-filers.
It was a mess at first.
It was. But once the legislation was clarified and the agencies figured it out, inclusion was confirmed. And that precedent is exactly why we are so confident now. The intent is always to include low-income Americans, regardless of the source of that low income.
So just to be crystal clear, the comprehensive list of those who are expected to be covered includes virtually all low-income and fixed-income individuals whose total annual income falls below that final limit.
You are not excluded just because you rely on federal benefits rather than a traditional paycheck.
That's the bottom line.
And to put an even finer point on this, the critical watchword in the final legislation when it's written will be AGI, or MAGI, as long as your benefit payments count toward that total income number, and that total number is below the high income cap.
You're in.
Inclusion is assured. The fear of being excluded simply because you're a senior or you're disabled is, historically speaking, unfounded when the legislation is explicitly income-based.
Now, let's dive deep into the numbers. To really understand what not high income is likely to mean for this dividend, we have to look at the best historical roadmap we have.
And that's the income limits that were established for the 3 previous stimulus checks, the ones administered between 2020 and 2021.
Using this historical data, it gives us critical context.
It does. It allows you, the listener, to project your likely status, which can hopefully reduce some of that anxiety. We can't guarantee the final number will be the same, of course, but history offers some very strong clues.
Okay, so let's run through the specifics, the precedents. Let's focus on the individual thresholds first.
All right.
For the very first stimulus check, that was the $1,200 payment under the CARES Act, the individual income threshold where the payment started to phase out was $75,000 in adjusted gross income.
But the full payment didn't phase out completely until $100,000 for single filers.
Right, and that $100,000 completion point, that became a point of confusion for a lot of people.
It did. So for the next 2 payments, stimulus check number 2, which was $600, and stimulus check number 3, the $1,400 one.
Congress tightened the limits.
They did. The individual threshold where the phase-out started was set definitively at $75,000 AGI.
So that $75,000 mark is the most recent and the most consistently applied precedent for defining what a non-high-income individual looks like.
It's our best guidepost.
And this data is immensely relevant to you, the listener. We'd ask you to just consider your own annual adjusted gross income.
AGI is usually the easiest metric. It's essentially your total income before you take certain specific deductions.
So is your income below that most common, most stringent historical limit of $75,000 a year as an individual?
And if your answer to that internal question is yes, and for the vast majority of people who are relying solely on Social Security or SSDI or SSI, the answer is comfortably yes, then you've met the primary financial eligibility requirement.
At least based on all past precedent and the stated intent of this new dividend proposal.
And if you're married and filing your taxes jointly, the historical precedent for that phase-out starting point was typically double, so $150,000 AGI.
And just a friendly reminder to our listeners, we love your engagement in the comments, but please respect your privacy. Do not share specific personal income figures.
Please don't.
Knowing where you stand, just for yourself, relative to that historical $75,000 individual or $150,000 joint threshold is really the essential takeaway here.
Now, we should probably address the critical mechanism for those individuals whose income does go over that threshold.
Right. Maybe because you have a fixed benefit plus some part-time work, or you have a substantial private pension kicking in.
This is where the phase-out comes into play.
The phase-out. It's a legislative tool that's designed to prevent an unfair, what they call a cliff effect.
Exactly. It avoids a scenario where someone earning, say, $74,999 gets the full $2,000.
And then someone earning just $2 more at $75,001 gets zero.
Right. It creates a gradual linear reduction in the benefit amount as your income rises.
So how does that formula typically work?
Let's detail it because it's critical for our informed listener. Based on the past stimulus models, the reduction rate was set at $50 for every $1,000 you earned above that initial threshold.
50 for every 1,000.
That specific ratio is often linked to approximating a 5% effective tax rate on the excess income.
Okay, let's run a detailed example so this is really clear. Let's assume the final threshold for an individual is 75,000 AGI, and the payment is $2,000. What happens if someone earns, say, $78,000?
Okay, so at $78,000, they are $3,000 over the limit.
Right.
Using that 50 per thousand formula, you'd calculate $3,000 divided by 1,000 equals 3.
Okay.
You then multiply that 3 by $50, which equals $150.
So 150 is the reduction amount.
That's the amount that's phased out. So they would receive $2,000 minus $150 for a final payment of $1,850.
And this gradual reduction just keeps going until the payment hits zero.
Exactly. If the reduction is $50 per thousand, it takes 40 of those $1,000 increments to phase out a $2,000 payment completely.
So if the starting point is 75,000,
then the payment becomes zero once your income hits 115,000 AGI for an individual.
the crucial reassurance here is really twofold then.
It is. First, fixed benefits like Social Security are very rarely high enough on their own to trigger this phase-out limit for the majority of recipients.
And second,
Second, if your income is just slightly above the threshold, you will still receive a substantial portion of the dividend. You are not automatically disqualified. Understanding the phase-out is crucial for people who have that mix of income.
fixed income plus a little bit from somewhere else? Okay, we need to transition now and start busting the two most persistent and frankly anxiety-inducing myths that confuse fixed income recipients every single time a government payment is announced.
Every time. And this confusion often centers on seniors and people with disabilities who, use the SSA or the VA as their main point of contact with the government.
So the first major myth that we have to comprehensively debunk is the idea that you must file a tax return to be eligible.
This assumption causes an immense amount of stress for non-filers.
Let's be definitive here, and we can rely on the mechanism that was established in previous rounds. The ability to receive this dividend is entirely income-based.
It has nothing to do with whether you filed a tax return whatsoever.
So why is this myth so persistent? Where does it come from?
It's historical. When the very first stimulus checks were implemented, the IRS initially only had data for people who filed taxes. That's who was in their system. But subsequent legislation clarified that the government could use data from non-filing benefit recipients, specifically from the Social Security Administration, the Veterans Administration, and the Railroad Retirement Board to automatically process those payments.
And this technical detail is what matters most to you, the listener. If you are a non-filer, the SSA already has your income data.
They do.
And they are generally equipped to share that information directly with the Treasury Department.
Which means you receive the money through your existing payment method.
Your direct deposit details, your direct express card.
Without ever having to touch a tax form.
The SSA's role here is often overlooked, but it is absolutely essential.
It is. They act as the data conduit for low-income beneficiaries who fall below the income level required to file taxes. They process your benefits, and in cases like this dividend, they provide the necessary data to confirm your income and where your payment should go.
So it doesn't matter if you file every year, or if you're required to file because you have a higher income, or if you haven't filed in 20 years because your income is solely from, say, non-taxable SSI.
Your filing status does not determine your eligibility.
It only determines which government agency is processing your data, IRS or SSA.
Exactly. The second massive misconception that just needs to be shattered is that this dividend is only for working people.
We hear this all the time.
The proposal is for everyone below the high income threshold.
Again, we can state this definitively. It doesn't matter if you're currently working or if you're retired or if you're disabled and unable to work.
The eligibility test is always focused on the dollar amount of your annual income, not the activity that generated it.
If your only income is your fixed benefits, you are included, as long as that income is below the limit.
Working status is entirely irrelevant to receiving the benefit.
Okay. So while the goal is broad inclusion, we have to pivot now to some critical financial exclusions and offsets.
Right. These are often the reasons that a payment that is technically due to a recipient never actually reaches their bank account.
And the most common exclusion involves federal back taxes.
If a beneficiary owes significant past taxes to the federal government, specifically to the IRS, the dividend check may not be issued directly to them.
What happens instead?
Instead, under something called the Treasury Offset Program, or TOP, the government will keep the dividend and apply it directly against your outstanding federal liability.
So they're not going to write you a check for $2,000 just to have you turn around and pay that same $2,000 back to the IRS.
Exactly. It's an automatic offset, and it's mandatory under federal law when certain debts are owed to the government.
It's vital to note, though, that this is usually restricted to federal debts.
That's a great point. State taxes, local taxes, or private debts like medical bills or credit cards are generally not covered by the TIAPU mechanism for offsetting these specific dividend payments.
The second important offset that we saw in previous stimulus rounds, and could see again, relates to past due child support.
Yes. In the past, these payments were vulnerable to being offset to cover significant court-mandated past due child support obligations.
It's often a nuanced legal point, but it remains a potential impact that could reduce or even eliminate the payment for some recipients.
For the overwhelming majority of our fixed-income audience, though, people who do not owe substantial federal back taxes or past due child support, these offsets should not be a concern.
Your payment should flow directly to you.
And, of course, we have to emphasize we're providing general rule guidance here based on the sources and historical precedent.
This isn't personal financial advice.
No. If you have significant federal debt or complex legal obligations, the best course of action is always to consult an accountant or a legal professional to understand your personal liability status regarding these offsets.
So, after this pretty extensive deep dive into the eligibility mechanism, where exactly do we stand today?
Right. What's the current status?
We have a clear public proposal for a $2,000 plus dividend. It's funded by tariff revenue, and it's targeting everyone except high-income people. But we are still operating with two crucial gaps in our information.
Absolutely. And these two missing pieces create a necessary delay. First, we need the official, legislatively defined income threshold.
A magic number.
Is it going to be that $75,000 individual AGI precedent? Or will it be adjusted for inflation since 2021? Until that specific number is written into law, we can't confirm the exact size of the excluded population.
And second, and this is the big one, we need the passage of the necessary legislation.
Public announcements are only the first step.
Right. Congress has to draft, debate, and pass the bill that actually authorizes the expenditure of that tariff revenue for this dividend. And that legislative process is often lengthy and subject to change.
It can be very lengthy. So until those two pieces are confirmed, the final high-income definition and the legislative passage, we can't provide an official payment date.
And that uncertainty is precisely why reliable, verifiable updates are so crucial right now.
Because scams are inevitably going to proliferate.
This brings us directly to what might be the single most critical section for the safety of our listeners: financial protection and scams.
Yes. Our audience seniors, older adults, people with disabilities, and low-income individuals are, statistically speaking, the most targeted by financial fraud.
Especially when news of a large potential payment like this is circulating.
And this is a very stern and necessary warning. These fraudsters, they're highly organized, and they capitalize on the confusion and the urgency surrounding money. They will use the exact figure, $2,000 plus, in their attempts to steal your money or your critical personal information.
So we have to be crystal clear on this point.
Absolutely. No legitimate government agency, not the IRS, not the Social Security Administration, not the VA, not the Treasury Department, will ever initiate contact by calling you, texting you, or emailing you to demand money.
Or to request your bank account number.
Or insist you pay a fee using gift cards or Bitcoin or a prepaid debit card to release your dividend.
If they call you, it is fraud. Hang up the phone.
The government communicates critical financial updates and payment confirmations through highly formal official channels.
That means official letters mailed to your residence with a verifiable letterhead.
Or through verified, secure government websites like SSA.gov or IRS.gov. They will never cold call you demanding sensitive financial details.
You need to listen for the key warning signs. Things like urgency. They'll say you have to act now.
Right. Or demands for payment in unconventional methods. No government agency wants an iTunes gift card.
Threats of legal action if you don't comply immediately, or being asked to verify your full Social Security number over the phone. These are all immediate red flags.
And we advise every listener to have a specific plan in place for if you receive suspicious contact. If you get a call, just hang up immediately.
Don't engage. Don't argue.
Just hang up. If you receive a text or an email, delete it without clicking on any links. Do not engage with the scammer. And then take the essential step of reporting the attempt immediately to the Federal Trade Commission, the FTC. Your report helps law enforcement track these criminal operations.
And our commitment to you is continuous. As soon as the final official definition of high income hits the wire, or when the distribution methods are solidified through an enacted law, we will issue an immediate deep dive.
And we'll break down payment dates and the specific distribution logistics, direct deposit, direct express, paper checks, all of it.
So please use the comments section to ask any questions that we haven't answered or suggest areas where you might need a dedicated follow-up discussion.
Things like specific scenarios related to being an international recipient or having a representative payee. Your input ensures we focus on the issues that are most important to you. So, as we conclude this expensive deep dive, let's provide a final, concise summary of the most important facts for you, the listener, to retain right now.
First, the update. We are discussing a potential $2,000 plus financial dividend, which is distinct from past stimulus payments.
And it's funded by federal tariff revenue and aimed at a very widespread distribution across the populace.
Okay. And who qualifies?
Fixed income recipients, that includes SS retirees, survivors, SSI, SSDI, VA, and RRB beneficiaries, are fully expected to qualify.
And your eligibility is contingent only on your total annual income being below that finalized legislative threshold.
Which, based on historical precedent, we expect will be around $75,000 for individuals and $150,000 for married couples filing jointly.
And just as important, what doesn't matter?
Your eligibility is not determined by whether you file a tax return. The SSA and VA data will be used for non-filers.
And your current working status is entirely irrelevant.
It's a simple, singular income test.
There are a few key caveats, though.
Yes. If you owe significant past federal taxes or child support, you need to be aware that your payment may be offset under the Treasury Offset Program. And always, always remain vigilant against scammers who are using this news to solicit your personal information.
We understand that this potential payment offers far more than just monetary value. I mean, it offers crucial breathing room.
It's a hedge against inflation.
It can help with unexpected bills, and it offers a degree of dignity for those who are struggling to manage on fixed budgets. We're here to be your trusted, comprehensive guide through these often confusing policy changes.
The process is in motion, but we are awaiting those two crucial legislative details, the final income cap and the final bill passage. We will not stop researching until we have those definitive answers for you about when the money will arrive.
So we strongly encourage you to subscribe to the deep dive and make sure your notifications are turned on. You absolutely do not want to miss our next update, which will focus entirely on the distribution methods and payment dates once that crucial legislative information is finally made public.
And please, share this deep dive with any other friends or family members on a fixed income who need this kind of precise, clear information.
And finally, a thought to leave you with.
This proposal, driven by the distribution of tariff revenue, it establishes a really unique policy mechanism for financial aid. It diverges significantly from previous relief efforts that were funded by increasing the national debt.
So think about the broader economic debate that this sparks. Should widespread financial support be primarily financed through specific trade revenues, making it, revenue neutral?
Or should it remain tied to deficit spending when a crisis hits? This distinction, it raises some really important questions about the entire future of how government aid is financed. If you're watching this, you know how precarious things feel right now. For so many Americans, especially if you're relying on a fixed income, on Social Security, SSI, SSDI, or VA benefits, I mean, every single dollar matters.
It really does.
And that is exactly why we need to focus on a major financial commitment that has, well, it's basically dominated the headlines for the last few days.
Yeah.
We're talking about a potential $2,000 payment promised directly to the American public. And this isn't just a rumor.
No, not at all. The commitment has been unprecedented in its coordination. We've heard it publicly, repeatedly, from the president, the Treasury Secretary, the chief economic advisors.
All of them.
All of them affirming their dedication to delivering this specific $2,000 payment.
They've put the number right there on the table and basically dared Congress to stop it.
Yeah.
We've gathered 5 specific verifiable pieces of evidence, official statements, clips, direct presidential posts that not only confirm this push, but also, they start to reveal the proposed funding and who they're targeting.
And that level of public unified commitment, it dramatically increases the political stakes. For you, if your budget is already stretched thin, understanding the reality behind this promise is It's crucial. When the entire economic team publicly says this money is coming, it generates hope.
Right.
And the administration will face, an intense political backlash if they fail to deliver. So our mission today is to cut through the noise and really analyze the fiscal and political viability of this payment.
Welcome back to the deep dive. Our listener today, and really a huge part of our audience, is focused squarely on financial stability. The ability to pay the rent, cover medical costs, just maintain dignity in retirement. So when a figure like $2,000 is thrown out there by the White House, it stops being some political talking point, and it starts being a lifeline. Today, we are focusing purely on this recent, highly concentrated commitment from the administration.
And the goal here is precision.
Okay.
We're not interested in the hypotheticals of if the government might send money. We are analyzing the specific, recent evidence that proves the administration's active, serious intent to legislate this payment into existence, and to do it now. It moves the whole conversation from speculation to logistics.
We're looking for the concrete data points. And the first point of discussion has to be a language itself, because it tells us so much about the policy's intent.
Absolutely. When you have multiple high-ranking individuals echoing the exact same commitment and using the same unique terminology dividend, it signals a strong, coordinated strategy. We really need to examine that distinction before we even look at the evidence for the funding.
Okay, so let's start there. The president has been, I'd say, meticulous about his language. He refers to this as a $2,000 stimulus check or dividend payment.
Right.
But then he specifies the preferred mechanism, stating he wants at least $2,000 in the form of a dividend to everybody except high-income people. That shift in terminology feels very, very deliberate.
It is. It is the heart of the administration's fiscal narrative for this payment. A traditional stimulus check is, it's generally understood to be deficit spending.
Money they have to borrow or print?
Exactly. Money borrowed or printed to inject liquidity into the economy quickly. A dividend, in this context, suggests something completely different. It suggests a distribution of accrued, existing government revenue, which is typically linked to a specific source of income.
Which, in this case, they're saying is tariffs.
In this case, it's tariffs.
So by framing it as a dividend, what they're really trying to do is preemptively neutralize that criticism that this is just adding to the national debt. Is that right?
Precisely. It attempts to reframe the payment as a financial return to citizens from money already collected through trade duties. And that has massive political utility.
Okay, but it's more than just politics, isn't it? The term dividend could carry specific legal and tax implications.
It could, and those details are still being worked out by the economic advisors. For instance, sometimes dividends from government-managed funds are treated differently for tax purposes than, say, general income or an emergency stimulus.
Potentially making it tax-free.
Potentially. Or altering how it interacts with eligibility for other means-tested benefits, which is a major, major concern for our audience on SSI or Medicaid.
That's a critical point for our listeners, especially if you're on SSI, SSDI, or housing assistance, where a sudden influx of what looks like taxable income can jeopardize your ongoing eligibility for vital aid. So the wording choices here matter deeply.
They do. And the president's phrasing, to everybody except high-income people, it just underscores the intent to make this a broad-based measure. It's aimed squarely at middle-class, working, and fixed-income Americans.
It defines the goal by exclusion, promising universality up to a certain point.
Exactly.
But we have to anchor this discussion back to reality. This is not yet money in the bank.
Absolutely not. As the administration's chief economic advisor, Kevin Hassett, he explicitly confirmed this. He said this money will require legislation, and that is the highest hurdle.
It's everything, really.
It's everything. It cannot be enacted via a simple presidential memorandum or an executive order. Congress must draft, debate, and pass a law authorizing the appropriation of this specific tariff revenue and establishing all the rules for its distribution.
So despite all the public enthusiasm, the final decision rests on Capitol Hill, in the hands of lawmakers who are, let's be honest, often hesitant to pass broad, expensive measures.
Which is why the administration's coordinated pressure is so telling. They are trying to make it politically impossible for Congress to say no.
They're strategically leveraging public demand.
And the 5 data points we are about to discuss, they serve as the foundation of that political leverage. They're committing the administration so deeply that failure to deliver would just be politically disastrous.
This is where the political messaging meets the policy planning. The administration hasn't just mentioned this idea in passing. They have saturated the media landscape with the identical message, all within about a 72-hour period.
Yeah, it's been a full court press.
This strategy of painting themselves into an extremely tight corner, as one source observed, it just suggests total institutional buy-in.
It's a very high-stakes move.
Yeah.
For the audience relying on financial predictability, this signals that the promise has passed the initial, vetting stage and is now in active development. We have to scrutinize the statements of the people doing the groundwork.
Okay, so let's start with the economic gatekeeper, the man who provided the financial justification for this entire proposal.
Right.
Economic advisor Kevin Hassett.
Kevin Hassett is the economic advisor. He's the person responsible for crunching the numbers and confirming feasibility.
His statement was pivotal because it provided that financial anchor for the dividend narrative. So what did he specifically claim regarding the funding?
Hassett asserted that the current influx of tariff revenue has created, and this is a quote, enough room to cover those checks and not go into the rest of the budget.
Okay, that is a profoundly important claim.
It is.
If that's accepted, it shifts the entire debate from being about deficit spending to one of revenue distribution.
Completely.
Okay, let's unpack that fiscal narrative. Hassett is essentially claiming that the money derived from import duties, from tariffs, is sufficient and separable from the general federal budget pool, allowing it to be returned to the people without affecting, say, existing Social Security funding or military spending.
Yes, and this relies on a specific accounting argument. While all federal revenue generally goes to the U.S. Treasury's general fund, the administration is arguing that the source of the revenue, the tariffs, can be earmarked for redistribution as a dividend. Hassett confirmed they have enough money in the current stream to fund the full $2,000 checks.
And he also confirmed he's working on it now, right?
He did. He confirmed that he is actively studying the matter and getting the numbers straight so the president has all the choices he needs, which proves the proposal is in a technical analysis phase, not just some talking point.
But here's where we need to stop being recorders and start being analysts. Our sources noted a significant internal contradiction. While Hassett claims the funding works, there was an internal note suggesting that the numbers that we're calculating on a year-over-year basis, it doesn't really make sense. So what does that contradiction tell us? Is this tariff funding a sound economic solution, or is it just a political justification?
That internal tension is the most fascinating part of the data. Look, tariff revenue is inherently volatile.
Of course.
It fluctuates based on global trade volumes, trade war dynamics, specific tariff rates. To rely on it for a massive fixed one-time payment of $2,000 per person is, well, it's fiscally questionable over the long term or even year to year.
So the internal skepticism makes sense.
It does. It suggests that while they may have a large cash reserve right now due to recent tariff policies, projecting that revenue consistently is very difficult. Therefore, Hassett's public statement is arguably more of a political assurance, saying we found the money, don't worry about the debt, than a pure reflection of long-term fiscal stability.
Yeah.
So the political fact is that the chief economic advisor has given the green light, regardless of the nuanced economic reality.
Right.
For the administration, that public assurance is enough to justify the next step, defining who gets the money.
Yeah.
Exactly. Which brings us to evidence number 2. Treasury Secretary Scott Bessent.
Right. Next, we had the Treasury Secretary, Scott Bessent, who would be the person to oversee the actual distribution. He confirmed the commitment, and he gave us the first specific figure regarding eligibility.
Bessent provided a tentative eligibility idea when he was discussing who would receive the rebate. He mentioned it would be for families making less than, say, $100,000.
Okay, now for our audience, that $100,000 figure is crucial.
It is.
Because it provides a clear indication of where they intend to draw the line. It confirms they are targeting the vast majority of households, specifically fixed income and middle-class earners, while excluding the highest earners.
But we do have to be careful here. Bessent clarified that this $100,000 was merely a figure in discussion, and that no final threshold has been decided upon yet.
So it's not set in stone?
Not at all. Previous stimulus checks have used varying thresholds, sometimes based on adjusted gross income, sometimes on modified AGI, and they often phase out the benefit above that line rather than just cutting it off abruptly.
Right, a gradual reduction.
Exactly. But the fact that they are discussing a cap around this figure confirms that the definition of high-income people is being quantified right now, and it's likely aligning with thresholds used in prior relief efforts, just to simplify the rollout.
This discussion of an income cap is, I think, particularly reassuring for anyone on Social Security or disability, because it signals that if you weren't considered high income under prior relief efforts, you're likely the exact demographic this dividend is intended to support.
That's the takeaway. The commitment is broad, aiming for maximum impact on people who need financial breathing room, which is so often our fixed income audience. Okay, let's move to the messaging front. Evidence 3. Press Secretary Caroline Leavitt. Her statement confirmed the active process that's underway. She stated clearly that the White House is, quote, committed to making that happen. Yes.
Leavitt's contribution was essential because it laid out the logistical commitment. She confirmed they are currently exploring all legal options to get that done.
Which corroborates Hassett's work.
It does. They're actively researching the best legal vehicle to move the tariff money to the American people.
She did have to temper the expectations a little bit on the timeline, noting that no timeline or further details are available yet.
But the overall message was one of relentless dedication. And this confirms the sequencing we're seeing. Commitment first, then technical analysis, then legislative action. For the public, knowing that the White House press secretary is confirming the active exploring of legal options is powerful evidence that this is not some shelved idea, but a live proposal. And then finally, evidence 4 and 5, the commitment was cemented directly by the president himself on his public platforms. This is what transformed the statement from an interview, quote, into an undeniable public promise.
The use of Truth Social to reinforce the promise, twice within just a few days, on a Sunday and then again on Monday, that is a classic political tactic. It's designed to lock in the public narrative and prevent the message from being diluted by other news cycles. And the repeated phrasing was precise and identical. The distribution of at least $2,000 in the form of a dividend to everybody except high-income people will be paid. That verb choice, will be paid, is so definitive. It is. This repetition, coupled with the specificity of the amount and the mechanism, provides the clearest possible evidence of political intent. Together, these 5 data points demonstrate a singular focus across the administration.
The message is clear.
The $2,000 payment is a top priority that is now past the point of casual discussion. They've made the commitment, now they have to deliver. Now that we've established the commitment is real, we have to deal with the inevitable hurdles, starting with eligibility and the legislative process itself. The core intention is clear. Target everyone who is not high income. And the administration's broad language means that once that specific income threshold is finalized, and it's likely around that $100,000 family AGI discussion point, most beneficiaries of Social Security, SSI, SSDI, and VA benefits will almost certainly qualify.
Yeah.
These fixed income groups are precisely the people who need this financial support most and who would not be captured by any high-income exclusion.
But the mechanism, that remains the critical constraint. Since Hassett confirmed this relies on tariff revenue and requires legislation, we are looking at Congress. What does require legislation actually entail in this scenario? I mean, this is crucial for understanding the timeline.
This is where the deep dive really starts. When a major financial distribution is proposed, Congress has several options, and the choice they make matters significantly for timing.
So what are the most likely paths here?
Well, the first is a standalone bill, passed through regular order. This is typically slow, it's vulnerable to amendments, and it requires bipartisan support to clear procedural hurdles.
Which is hard to get.
Very. Given the size and nature of this payment, a standalone bill could take months or even fail entirely due to political deadlock.
And the alternative? What's the faster route?
The more streamlined path, which I'm sure they're exploring, is budget reconciliation. Reconciliation allows Congress to pass certain measures related to spending, revenues, and the federal debt limit with a simple majority.
Bypassing the filibuster.
Bypassing the usual threat of a filibuster. If the administration can successfully frame this as a revenue distribution measure linked to the collection of tariff duties, they might attempt to use reconciliation.
But that's not a guarantee.
No, it's not. Reconciliation has very strict rules regarding what is permissible, and whether a direct dividend payment qualifies under those rules, well, that would be subject to intense Senate scrutiny.
So the complexity of the legislative path means this is far from a slam dunk. Yet our sources suggest lawmakers are reportedly warming up to the idea of these $2,000 payments. Why the sudden warmth?
There are 2 main drivers, I think. First, the political pressure generated by the White House's public commitment is immense. Lawmakers know that voting against a measure that provides $2,000 to their constituents,
Right.
especially if the funding is publicly claimed to be separate from the debt, that's a difficult electoral decision to make.
And the second driver?
The second is that there may be internal legislative compromises at play. To get the necessary votes, the administration might be bundling this payment with other legislative priorities, or perhaps adjusting the eligibility criteria slightly to appease specific factions within Congress. The fact that the initial rejection we often see with massive spending proposals is absent suggests that strategic groundwork is already being laid.
It really seems the economic viability, dubious as it might be over the long term, is being overshadowed by political necessity. The narrative of returning tariff money to the people is proving highly effective in lowering congressional resistance.
That narrative is the key. It allows budget hawks to conceptually support the measure as a redistribution of collected revenue rather than approval of new debt. This subtle shift in framing is likely the reason for the reported warming up. The speed at which this moves now depends entirely on the legal team's success in defining a legislative vehicle, like a reconciliation bill, that can pass quickly.
Okay, let's transition to the practical implications. This is where this deep dive becomes most relevant for our audience. What does this strong commitment mean for the likelihood of the money actually arriving? And critically, how will it affect existing benefits?
The repeated public commitment is a massive factor. They are in a high-risk situation. If the administration, after the president posted this twice, and his top 3 financial officials confirmed it, if they failed to deliver, the resulting political blowback would be catastrophic.
So that risk works in the listener's favor.
In a way, yes. That inherent risk actually serves as a guarantor for you, the listener. The internal motivation to succeed is now maximized.
Let's dive deeper into the financial complexities, specifically Hassett's tariff funding claim. If the money is coming from tariffs, does that genuinely make it fiscally sound?
This is where we have to maintain that critical distance. Hassett's assertion that the revenue exists and will not require digging into the existing federal budget is the administration's public line. However, that contradiction we noted in the sources, the year-over-year accounting challenge, it suggests that this funding source may not be sustainable or stable. If Congress passes this bill based on the tariff revenue, and that revenue suddenly dips, they will either have to cut the amount of the payment, delay future payments, or ultimately fund the difference through conventional means, like debt.
So for the listener, the confidence of the economic advisor provides a legislative justification, but the long-term solvency of the mechanism is, it's secondary to the immediate political goal of distribution.
That's a good way to put it.
Yeah.
Okay, let's assume, for the sake of the audience, that the legislation passes and the $2,000 payment arrives. We have to address the most pressing concerns for our fixed-income and low-income audience: taxes, other benefits, and scams. These are crucial concerns that must be addressed, even without the final legislative text.
Starting with taxability. If it's labeled a dividend from tariff revenue, does that protect it from being taxed?
It offers a possibility, but it's not a guarantee. Past stimulus checks generally have been non-taxable income because they were structured as refundable tax credits.
Okay.
If this payment is structured purely as a dividend distribution, its tax treatment would depend entirely on the specific language in the final bill. We would strongly advise our audience to assume, just for planning purposes, that the funds could be considered taxable until Congress explicitly declares them tax-free.
But for most of our audience whose incomes are low, any tax liability would probably be minimal, right?
It would likely be minimal or offset by other credits, yes.
A far more urgent concern for those on means-tested benefits like supplemental security income, SSI, SNAP food assistance, or Medicaid is the impact on their eligibility. Can a $2,000 payment jeopardize that vital aid?
Historically, Congress has been very protective of these benefits during relief efforts. During prior stimulus rounds, the money was specifically excluded from counting as income or resources for a 12-month period for SSI and other federal means-tested programs.
And that protection is absolutely vital.
It is. If Congress fails to include this exemption in the new legislation, a $2,000 lump sum could push an SSI recipient over the $2,000 asset limit, causing them to lose benefits. Given the political focus on low-income Americans, we expect, and frankly advocate for, Congress to include these explicit protections to safeguard eligibility for ongoing benefits.
And what about garnishment? Can debt collectors or outstanding judgments seize this money upon arrival?
This is another area where the final legislation must be explicit. For the payment to be safe, the bill needs to include garnishment protection, declaring the funds exempt from legal processes that would attach them to satisfied debts.
We've seen that protection before.
We have, but listeners must monitor the final bill. If you are concerned, you should deposit the money into a protected account as quickly as possible. And finally, let's address the inevitable dark side of financial news scams. This is a highly vulnerable audience. This is perhaps the most important guidance we can offer today. The administration has provided strong evidence of its intent, but the details are still pending. Therefore, listeners should anticipate a massive wave of fraud attempts. The official channels, the IRS, the SSA, or the VA will never call, text, or email you asking for money, banking information, or personal data to process your $2,000 dividend. The distribution of federal funds almost always relies on information the government already has on file.
So what should you do if you receive a suspicious communication?
You should hang up immediately, delete the text or email, and report it to the appropriate agency. Trust only official letters sent via mail or verified government websites ending in te.gov. No legitimate entity needs payment or sensitive information to send you money you are already entitled to receive.
We've established the commitment is strong and the need for protections is high. But when can people expect to see this money? What are the next concrete steps we should be monitoring? Because the administration is still exploring all legal options, we lack those crucial definitive details. A final income threshold, a definitive timeline, and the specific distribution plan. The timeline is just inextricably linked to the legislative path chosen. If Congress chooses the slower, regular standalone bill path, we could be looking at many months. If they successfully use a mechanism like budget reconciliation, the timeline could shrink dramatically.
Correct. The most important thing listeners can do is monitor the movement of the legislative proposal in Congress. Look for official announcements regarding the introduction of a bill number in committee discussions. That will be the primary indicator that the wheels are truly turning.
And what about the administration? They promised an update once the economic advisors finish their work?
Yes. Watch for a joint announcement from the White House and the Treasury Department. That update will likely contain the finalized income threshold, the process of distribution, direct deposit, paper checks, direct express cards, and an estimated timeline based on congressional cooperation.
And they'll need to detail how the SSA and VA will coordinate to get the money out.
Exactly. How they will coordinate with the Treasury to get the money to existing beneficiaries quickly and correctly.
In the past, these payments have often been tied to a beneficiary's birthday for staggered distribution. Should listeners expect similar administrative complexity this time?
Likely, yes. The distribution will leverage existing infrastructure. For current Social Security and SSI recipients, the Treasury will rely on the payment files maintained by the Social Security Administration. If the payment is a one-time event, they will likely adopt a staggered schedule based on either the benefit received, so SSI first, then Social Security, or the recipient's birth date, as a means of managing the massive volume of payments and ensuring the system doesn't overload.
So the best preparatory step is just to make sure your info is up to date.
Maintaining up-to-date information in the My Social Security portal is the best preparatory step you can take right now. So the guidance remains. Manage expectations. Understand the commitment is genuine, but action is still pending. And prioritize safety against scams above all else.
Exactly. The commitment is a political reality. The delivery is a legislative logistic. Do not plan your budget around receiving this money immediately, but recognize that the likelihood of passage is extremely high given the political pressure the administration has created for itself. Wait for the concrete legislative text before making any financial decisions based on this proposed dividend.
This has been a crucial deep dive into a promise that could provide significant financial breathing room for millions of Americans, especially those who rely on fixed incomes and struggle against rising costs. Let's summarize the key takeaways. The evidence for the $2,000 payment is undeniable. 5 high-profile officials have publicly confirmed the administration's commitment, and the payment is framed as a dividend funded by tariff revenue, a fiscal narrative that's been confirmed by the economic advisor.
The mechanism requires Congress to act, and while legislative movement is possible, the speed depends on the choice of legislative vehicle, such as a standalone bill versus budget reconciliation. For you, the promise of a $2,000 influx means potential relief from mounting bills. And the critical conditions for our audience are twofold. The final legislation must explicitly exclude this payment from income calculations for means-tested benefits like SSI, and it must provide garnishment protections. And we strongly advise constant vigilance against scams targeting this specific promise. This political commitment is designed to be a significant measure of support for those needing financial help the most. The administration has made its intent clear.
And that leads us to our final thought for you to consider. Given that the administration has committed itself so publicly to this tariff funding narrative, and knowing the internal accounting challenges. What specific legislative concessions, beyond just the $100,000 income threshold, do you anticipate Congress demanding in exchange for swift approval of this highly publicized payment?
The clock is ticking, the pressure is building, and the details are about to matter immensely. We encourage you to keep following these updates closely as the administration works to fulfill this very public, potentially life-changing promise. Thank you for diving. Welcome to the deep dive. We're here to take that huge, complex pile of financial and political source material and really just pull out the facts that matter to you.
And today, we are diving into one of the biggest, most impactful financial proposals we've seen in a while.
I mean, it's dominating the headlines. It's the promise of a pretty substantial and, for many people, a really life-changing cash distribution. We're talking about at least $2,000 per person.
Right, and this isn't just background noise. This is a conversation that directly affects millions of Americans, especially, and this is so important, especially for those of you relying on fixed benefits.
Absolutely. Social Security retirees, people on SSDI, SSI, veterans.
We've just seen a massive number of questions flood in about, eligibility, and maybe even more importantly, trust. Can we actually believe this is going to happen?
Yes, that's the core question. The chatter has gone from, like, a whisper to a roar. So our mission today is laser focused. We're taking all the sources we have, the official statements from the White House, confirmations from the Treasury, all the research reports, and we're going to cut right through the speculation. We need to clarify exactly what is being offered, what the administration is, putting on the line here, and most importantly, what this really means for your bank account, especially if you are in that low or middle income bracket.
And let's just anchor this right at the start. The key fact, and it's been confirmed repeatedly across all our sources, is the administration's solid commitment to a financial distribution of at least $2,000 per person.
At least. That's key.
It is, and they've been very, very precise about the target audience. They're stating this is explicitly for everyone, not including high-income people. So the whole design is to make sure those benefits flow directly to low- and middle-income citizens.
Now, we have to set the context here, which is just crucial for a deep dive like this. These announcements are, they're coming directly from the president and his top team.
Which, by definition, makes them politically charged.
Exactly. So our role here is not to advocate for or against this. We are strictly, data analysts. We are the impartial guides. Our only job is to unpack the factual details, to analyze the feasibility based on the numbers they've provided, and just explain what all these public statements mean for your financial reality and your stability.
So, okay, let's start with the basics, the terminology, because the sources have shown that the administration is kind of struggling to land on one single name for this payment.
It's true.
You'll hear it called a $2,000 stimulus check. Sometimes it's a $2,000 dividend, other times just a distribution or a rebate.
It's a real payment name game, and if you look closely at the analysts' notes in our sources, you can kind of see the strategy behind it. The name itself, functionally, it's irrelevant. It's just the movement of money from the government to you. But one source suggests the president has deliberately chosen the term dividend.
Right, because it, quote, sounds better.
It sounds better. It sounds like you're getting a return on an investment, rather than just a handout. And that little rhetorical shift is really meant to make the payment more palatable to broader political groups.
But regardless of what you call it, a check, a dividend, whatever, the core promise, which is what matters to every single person on a fixed income, it remains the same.
And that promise is?
A dividend of at least $2,000 a person. And I'm going to keep stressing that at least part. It's a really critical linguistic marker. It signals an intention not to disappoint, or maybe, just maybe, to even increase the amount later on, depending on political pressures.
And what's genuinely startling here, what really gives this proposal real weight, is the frequency, how often they've made this commitment.
Yeah, this isn't a one-off comment.
Not at all. The sources highlight that this is the fourth time the president has officially endorsed some kind of mass money distribution plan. Just since taking office back in January of this year, we're seeing a pattern solidify.
And we really have to trace that progression because it tells a story. It's a story of, frankly, escalating political necessity.
Yeah.
You mentioned the first attempt way back in February.
Yeah.
That was the quickly dismissed $5,000 Doge dividend proposal.
Yeah.
Now, for anyone who missed that, it was a highly unusual suggestion.
Unusual is one word for it. For a deep dive, we really have to pause and look at that. The sources described it as like bordering on performance art.
Right.
But it was a serious proposal to use cryptocurrency, specifically Dogecoin, as the way to get money to people. The analysts they dismissed it almost instantly.
Well, of course. I mean, the logistical and legal barriers to sending $5,000 through a volatile, non-federally managed asset like Dogecoin to millions of retirees and low-income citizens were just, they were astronomical.
It died very quickly. But it did signal an intention. It showed they wanted to distribute money, even if the method was out there.
So then you fast forward to August, and the commitment becomes a lot more conventional. We see the introduction of the American Worker Rebate Act of 2025. That proposed a $600 rebate check.
Okay, so a concrete legislative attempt.
Exactly. Then, in early October, the president started talking about a distribution range, somewhere between $1,000 and $2,000.
And now, just a few weeks later, here we are. We're firmly anchored at least $2,000. The pattern is crystal clear and, honestly, fiscally startling, as one source put it so well.
Every time he opens his mouth, the dollar amount gets bigger.
It just keeps going up. And this escalating promise, it significantly ratchets up the political stakes for them.
It does. And what increases the seriousness even further is that this isn't just, rhetoric from the top.
Right.
We now have formal, high-level cabinet endorsements.
That's a huge point. We saw the Treasury Secretary, Scott Bessent. He came out and confirmed that the $2,000 rebate is, quote, in discussion.
He didn't wave it off as some hypothetical idea.
No, not at all. He framed it as an active policy consideration.
But the most definitive statement, the one that really locks them in, came from the White House press secretary, Caroline Leavitt. She stated, and this is a direct quote from the official transcript.
What did she say?
She said, "The White House is committed to making that happen. Yes." And then she went on to elaborate, saying they are currently exploring all legal options to get that done.
Okay, hold on a moment. That is a very, very strong commitment. But let's pause and apply a critical lens, which is what we do here. When a top official says they're exploring all legal options, how much weight should our listeners, especially those of you on a tight budget, really put on that kind of political optimism? Is that a commitment or is that a goal?
That is a crucial distinction. In the political world, committed means they're intellectually and, publicly dedicated to the outcome. But in the practical legislative world, exploring all legal options means they haven't figured out the logistics yet.
Or secured the votes in Congress.
Or secured the votes. The sources all confirm that this statement really puts the White House out on a limb.
Right.
They have now committed to the outcome, that $2,000, which forces them to now figure out the nearly impossible mechanism, how to fund it and how to pass it.
Right. So it signals that for the administration, their policy position is fixed. It's non-negotiable, even if the pathway through Congress is going to be turbulent, to say the least.
Exactly. And that strong multi-level confirmation from the president, from the Treasury, from the press secretary, that's what makes this a real proposal and not just a rumor.
Okay, so let's move directly to the section that I think matters most to the vast majority of our audience. Eligibility. Who actually qualifies for this proposed $2,000 dividend? And what is the guarantee for those of you relying on Social Security, SSDI, SSI, or VA benefits?
Well, the excellent news here, really, is that the core principle has remained consistent through all of this. Income. Income is the only metric that matters.
That's the key takeaway. It's so important for everyone listening to hear that. Eligibility is always income-based. It doesn't matter what specific benefit you receive, whether it's Social Security retirement, SSDI, SSI, VA benefits, railroad retirement, it doesn't matter.
Your employment status, too. Whether you're currently working or not, that's secondary to your adjusted gross income.
So let's detail this evolving income threshold debate. In past stimulus rounds, they typically used, what was it, $75,000 for an individual?
Yeah. $75,000 for an individual, $150,000 for a married couple. And that captured around 85% of the American population. That was kind of the benchmark analysts were using.
But the administration seems to be aiming higher this time. Maybe they're seeking broader middle-class support. The Treasury Secretary, Scott Bessent, he specified that the threshold they're talking about is for individuals earning less than $100,000.
Right. And if we just extrapolate from that, based on what they've done in the past, doubling that for married couples would put the upper limit at $200,000 for full eligibility.
Wow.
Which immediately brings more, high-earning middle-class Americans into the fold than previous distributions did.
Let's reflect on that for a second. The political calculus behind raising that cap from $75,000 to $100,000, That's a massive, what, 33% increase in the income ceiling?
It is.
Why would they float a number that's just going to make the total cost even higher than it already is?
The sources suggest two main reasons. First, it's about political appeal. $100,000 threshold, it broadens the base of support for the policy. It makes it feel less like a low-income welfare distribution and more like general middle-class relief.
Okay, that makes sense. And the second reason?
It's a negotiating tactic. If you start the bidding at $100,000, Congress can then negotiate it down to, say, $85,000 or $80,000.
Right.
And the administration can claim a legislative win by meeting them in the middle.
While still making sure that the core fixed income population is absolutely covered.
Precisely. Which brings us to the absolutely crucial point for our listeners, the inclusion of fixed income recipients. This directly addresses that constant anxiety, that fear that every time a payment is announced, those on federal benefits will somehow be excluded because of some technicality.
We get so many questions about this.
And the sources are unequivocal on this point. Fixed income beneficiaries are broadly and explicitly included. This covers Social Security, that's Title II, so retirement, SSDI, spousal survivor benefits. It covers SSI, which is Title X6, and it covers VA beneficiaries.
And why? What's the simple reason?
The simple reason is the very nature of these benefits means their income is inherently well below that $100,000 ceiling. For the vast majority, it's far below even the historical $75,000 mark.
So the payment is targeted at low and middle income people.
And that is exactly where these beneficiaries sit.
So the simple sanity check for you listening is this. Is your annual income below $75,000? If the answer is yes, you meet the primary requirement. This is about your income level, not your benefit type.
Now, can we tackle the single biggest source of confusion and fear?
The tax return myth.
The tax return myth. The narrative that goes, I don't file a tax return so the IRS won't know I exist and I won't get the money.
We need to spend some real time dispelling this because for so many SSI recipients and low-income retirees, they just don't have enough taxable income to justify filing a return.
And this is a critical misconception. It's rooted in how the system might have worked decades ago, but it's not how it works now. Filing a tax return has nothing to do with your eligibility when you receive benefits through the SSA or the VA.
The government does not need the IRS to be the middleman for data collection.
Yeah. Let's just break down the technical process. Sometimes it's called the non-filer method. When you are a recipient of Social Security or SSDI or SSI, the Social Security Administration or the Department of Veterans Affairs already has a complete profile on you.
A comprehensive profile.
Exactly. They have your name, your current mailing address, they have your direct deposit information if you get your benefits that way, and crucially, they know your exact income level because they're the ones paying you that income. They have a fully functioning payment system that is completely separate from the IRS's tax filing system.
And here's where we can clarify the legal mechanism behind this. The payment is structured as an advance of a refundable tax credit, and that specific phrasing is really important.
The word refundable is key. A traditional tax credit might only reduce the amount of tax you owe. So if you don't owe any tax, that credit is useless to you. A refundable credit means that even if you have zero tax liability, even if you haven't filed a tax return in 20 years, you still get the full amount of the credit back as cash. It is designed precisely to make sure non-filers and low-income individuals benefit.
And that's why Treasury Secretary Bassan referred to citizens seeing substantial tax refunds. He's using the technical term for the mechanism, even though for most of you on a fixed income, it won't feel like a refund at all. It's just a direct payment.
For the vast majority on Social Security Retirement or SSDI, that payment will come automatically through the SSA's existing payment rails. No action needed.
We should also briefly touch on the difference between, say, Title II and Title X6 recipients.
Good point. For SSI recipients, that's Title X6, the process is slightly different because SSI is a needs-based program. Now, the SSA still handles their payments, but historically in past rounds, those payments were often sent out a little later than the general Social Security population.
Why is that?
It's usually just due to internal processing delays between the SSA and the Treasury.
Yeah.
But the fundamental requirement is exactly the same. No separate application, no tax filing is necessary. If you are in the SSA system, they will find you.
Okay, so we've established the commitment and we've established who qualifies. Now, let's pivot to the really crucial question that exposes the core political contradiction in this whole proposal.
The funding.
The funding. Where is this $2,000 per person going to come from? And is the math even remotely feasible? The administration has repeatedly claimed the money is intended to be a distribution of revenues generated by the massive new tariffs. It's being pitched as giving tariff revenue back to the people.
And this is where we have to shift from, the optimism of the proposal to the hard reality of the numbers provided in the sources. We have to analyze the gap between what's coming in and what they want to send out.
So let's start with the revenue stream. The sources are reporting that these tariffs are currently generating about $1 billion a day.
$1 billion a day, which is a massive influx of cash. It totals out to approximately $350 billion per year.
Okay. $350 billion a year. That sounds like a gargantuan sum.
It is a gargantuan sum, but now let's compare that to the expense. We established that the estimated cost of this proposed $2,000 payment, if it's sent to 85% of the population, that's roughly 284 million qualifying Americans. The cost is a staggering $568 billion, more than $500 billion.
So wait, let me get this straight. We need $568 billion for this one-time payment.
Right.
But the annual tariff income is only $350 billion.
Which leaves a gap of $218 billion.
So the math instantly confirms that the administration's current story, it's incomplete.
It is. Funding one single $2,000 payment for most eligible Americans would eat up nearly a year and a half of all current tariff revenue. And that's assuming they halt every other government spending project that uses that revenue.
And waiting that long, 18 months or more, is just politically and practically impossible for a distribution they've promised for early next year.
It's impossible.
Yeah.
Which leads us directly to the technical reality that the sources all point to. The government cannot fund this payment based on current annual revenue alone. The only way to do it is by leveraging future income. And that means borrowing.
Borrow.
The sources confirm the tariffs are projected to bring in over $3 trillion over the next 10 years. So the revenue is guaranteed to be collected over time, but the money hasn't been collected today.
Right.
Therefore, to deliver the payment quickly, the government would have to borrow the required $568 billion today, send it out to all of you, and then pay that debt back over the coming decade using those future tariff revenues as collateral.
Okay, let's use an analogy here because these numbers are just huge. Think of the government like a big company that just signed a massive guaranteed 10-year contract worth $3 trillion.
Okay, they know the money's coming.
They know the revenue is coming. But they decide they need to give a $568 billion bonus to their employees today. They don't have the cash on hand.
So what do?
They go to the bank. They take out a massive short-term business loan based on that guaranteed 10-year contract. They send the bonus out immediately.
But they've just attached the cost of that immediate payout to their national credit card. They're adding $568 billion to the national debt right now.
And this borrowing mechanism is the only way for them to easily swing a large distribution quickly, rather than waiting a year and a half to collect the full amount.
And it exposes the political contradiction. Publicly, they're saying the money is from tariffs. Technically, they have to use debt to front the cost.
And that reliance on borrowing, that underscores the whole policy risk here. The administration is asking Congress to knowingly increase the national debt by over $500 billion today to fund a dividend that's being marketed as being paid for.
This will be the central point of contention. When this bill inevitably reaches the highly partisan chambers of Congress, this is what they will fight about.
So let's look at the alternatives discussed in the sources. The two levers Congress could pull to reduce the cost if they just absolutely refuse to increase the national debt by that much.
The first lever is simple. You reduce the dollar amount. If they were forced by fiscal conservatives to cut the payment from $2,000 down to $1,000,
that cuts the cost in half.
it immediately cuts the total cost to $284 billion.
Yeah.
That amount is easily feasible within 1 year of current tariff revenue, which eliminates the immediate need for major borrowing.
Okay, so that's option one. What's the second lever?
The second lever is to tighten eligibility.
Yeah.
You could keep the full promised $2,000 amount, but drastically reduce the number of people who get it if you only sent it to, say, the lowest 50% of the population who are struggling the most, instead of 85%.
That cost also lands near that $284 billion mark.
Right. And this creates a really critical policy choice that we need to spend a moment on.
Yeah, let's unpack that. Do lawmakers prioritize sending a smaller amount, say $1,000, to a much broader group of people, 85%, which includes the fixed income core, but also a lot of middle income families who are, doing okay?
Or do they honor the full $2,000 commitment, but limit it only to the subset of the population, maybe the lowest 50%, who demonstrably need that full amount the most?
That decision will be the true test of their priorities, because for our listeners who are on SSI or only Social Security, that $2,000 can be the difference between just struggling and actually having some dignity.
Absolutely. Cutting that to 1,000, even if it goes to more people, is a huge reduction in the actual impact for those with the deepest need.
Okay, so let's transition now to the practical details, the timeline and logistics. When is this money actually expected to arrive?
Well, the simple truth is that no exact calendar date or month is known, but we can frame the timing within the political and legislative process to give you a realistic window.
And the key anchor point, as we mentioned earlier, came from the Treasury Secretary, Scott Bessent. He indicated that citizens will see substantial tax refunds early next year.
Right. And given that this announcement is happening in late 2025, early next year, means the first few months of 2026.
And this whole timeline is dictated by the legislative pace.
Completely. Even if a bill were introduced tomorrow, getting it passed through the House, then reconciled with the Senate version, and finally signed by the president.
Yeah.
That takes, at a minimum, a month to a month and a half.
And that's if everything goes smoothly.
That's if everything goes smoothly. Then the Treasury Department needs another 4 to 6 weeks to reprogram their payment systems and actually start the distribution. So that whole process just inherently pushes the earliest possible delivery into late Q1 of 2026.
So we're talking March, maybe April in a best-case scenario.
That's the best-case scenario. Now, if we look at the broader political drivers, the sources suggest the most likely window for distribution actually stretches all the way until the midterm elections in November of 2026.
Why so late?
Because historically, politicians on both sides of the aisle tend to use these kinds of distributions or rebates, what some of the sources bluntly call a bribe, to boost voter sentiment right before a major election.
So that provides a solid maximum deadline for them to act.
Exactly. So for you listening, you should view early 2026 as the optimistic target, with the period leading up to the November 2026 midterms being the high probability window for the money to actually hit your account.
Okay, let's talk about a crucial protection: financial offsets and garnishment. So many people on fixed incomes worry that this money will be announced and then immediately seized by creditors or deducted because of old debts. We need to detail the very rare conditions where a payment might be reduced or withheld.
The primary condition for an offset is if you owe a liability directly to the federal government. We have to be really clear about that. This specifically includes things like past due federal income taxes, or in some past distributions, delinquent student loan payments that are owed to the federal government.
And let's be blunt about how that works. If you owe the federal government $10,000 in back taxes, they are not going to cut you a full $2,000 check.
No. They will keep the $2,000 payment, and that will reduce your liability down to $8,000. It's an offset. It's not a seizure for general debt.
We should also remember the specific criteria from past stimulus rounds. Past due child support was also a reason for offset.
Yes, and that is a major liability that could definitely apply again, but it all depends on the final legislative text.
But here is the critical reassurance for the vast majority of our listeners on a fixed income. If you are on Social Security, SSDI, or VA benefits, and you do not have significant outstanding federal liabilities, which is the case for most of you, the payment should be received without any offset.
And critically, these payments are typically protected from general debt collectors, unlike your regular income.
So a credit card company can't touch it.
A credit card company or a hospital debt collector, they cannot garnish these funds once they hit your bank account. And that protection offers immense relief. It provides that much-needed breathing room and, frankly, the dignity to pay your essential bills without the fear of immediate seizure.
Finally, in this section, we have to address financial security and scams. The sources are very clear about how these payments would arrive through existing SSA, VA, and Treasury records.
And that confirmation is the perfect foundation for a very strong warning. Scammers will inevitably try to exploit the confusion around this proposal.
So let's be absolutely 100% clear.
This is non-negotiable advice. The SSA, the VA, and the Treasury Department already have your information. They have your direct deposit details. They have your address.
Yeah.
You do not need to do anything to receive this money if you are already a federal beneficiary.
Therefore, if anyone calls you or texts you or emails you or sends you a direct message asking for money or for your bank account verification or personal information like your Social Security number to process your $2,000 dividend.
That is a scam. It is 100% fraud.
The government does not initiate contact this way for unsolicited payments. Ever.
Trust only official letters sent through the mail or verified government websites. If a payment is coming, you will see it show up in your existing Direct Express account or your bank account. Do not engage with anyone claiming to be from the IRS or the SSA asking for a processing fee for this dividend.
And you should report any suspicious contact immediately to the Inspector General's office.
Okay, let's turn our attention now to the underlying political and economic forces at play here. This is where the deep dive really earns its name.
Yeah, why is the administration pushing this so aggressively? They've made 4 separate commitments when the funding math is so obviously difficult. The sources suggest they've really boxed themselves into a corner.
They have. The commitment is now so deep that the potential damage from failing to deliver is immense. One source explicitly noted the intense political danger here.
What did it say?
It said that if they do not follow through with this payment, and specifically with the promised $2,000 amount, their credibility, particularly with that crucial low and middle-income electorate, is, quote, going to go down the toilet.
Wow.
They called the failure to deliver a really bad messaging campaign.
And the analogy used in the source material is potent. It says the administration is dangerously close to becoming the kid who cried wolf way too many times.
They've set the expectation now. If the delivery is delayed indefinitely, or if the amount is cut dramatically to, say, $500, the resulting collapse of trust would be devastating, especially among the fixed-income population who rely on these funds the most.
So this high political risk tells us they view this payment as essential. But beyond the politics, we have to analyze the economic catalysts. Stimulus is rarely just political.
It's almost always pegged to underlying economic anxieties.
And the sources reveal a really stark contrast. You have the official government reports claiming the economy is booming.
And then you have the underlying data, which is described as actually very bad. There's a major bifurcation. High-income earners are doing well, and they're driving certain spending indicators up. But the vast majority of low and middle-income Americans are really struggling. They're tapped out, and they're dealing with persistent inflation that's not going away.
So what are the triggers? What could make this happen faster?
The sources cited several specific implosion triggers as potential reasons for rapid stimulus action. One key concern is the risk of a crash and burn in the economy due to factors that are largely invisible to the public.
Like what?
Things like massive corporate bankruptcies that are currently brewing, the unstable private credit market, and escalating global tensions that are threatening our supply chains.
So the analysis is pretty straightforward. The public message is about tariffs, but the real trigger for Congress to act swiftly, to bypass all that partisan gridlock, will be an economic collapse.
Exactly. If the economy spirals downward, this payment suddenly becomes an emergency necessity, not just a political promise.
And we have historical precedent for this kind of rapid response, which should, reassure our listeners that the government can act quickly when it really needs to.
Absolutely. Just remember the 2020 CARES Act. When the economy spiraled quickly into lockdown, Congress scrambled and passed a multi-trillion-dollar package, including stimulus checks, in just a matter of weeks. The consensus in the sources is clear. If the economy starts showing undeniable weakness, that's when money is approved.
So you have this confluence of factors creating massive momentum. You have the administration's public commitment driving the political expectation.
And you have this significant underlying economic weakness that could necessitate stimulus action anyway.
Yeah.
Both pathways point strongly toward a distribution within that target window of early 2026, leading up to the November midterms.
Okay. This has been a necessary and I think a very deep dive into a proposal that could provide really significant financial stability for millions of you, especially those of you who depend entirely on fixed benefits. Let's just reinforce the 4 essential facts you need to walk away with right now.
Okay, first, the amount. The administration stated 4-time commitment is for a dividend of at least $2,000 per person. That is the number they are publicly on the hook for.
Second, eligibility. The target is explicitly low and middle income. So if you're a fixed income beneficiary on SS, SSDI, SSI, or VA, you are overwhelmingly included, as long as your income is below that proposed ceiling of $100,000 for an individual.
Third, application and protection. For the vast majority of you receiving fixed federal benefits, no application is required. The agencies already have your information. And remember, those funds are protected from general debt collection once they're deposited.
And fourth, timing. The distribution is currently forecast for early 2026, linked to tax refunds, but the final delivery is contingent on that legislative process, and it could stretch all the way through the midterm elections in late 2026.
And we understand truly that for many of you listening, this payment is more than just a number on a screen. It's a vital lifeline. It represents breathing room to handle your essential bills, maybe finally fix a leaky roof, or just offer some financial dignity in a really tough economy.
We hope this clarity provides some certainty in what is a very uncertain time.
Mm-hmm.
So let's close with that provocative policy question we examined, because it's really going to define the debate in Congress. Given the need to finance this payment and that huge gap between the tariff revenue and the $568 billion cost, lawmakers might be forced to compromise.
They will be.
So if they had to choose just one option to reduce the cost to align with the available revenue, should they prioritize sending a smaller amount, say $1,000, to 85% of the population to ensure that there's widespread relief?
Or should they prioritize honoring the full $2,000 commitment, but limit it only to the lowest 50% of the population, the SSI recipients and the truly lowest income retirees, the people who need that full amount most desperately?
The ultimate decision they make, broad relief or targeted deeper impact, that will reveal their true policy priorities. And that is what you need to watch for as this proposal moves toward a vote. Thank you for trusting us to take this. A major financial update is on the horizon, promising a payment of at least $2,000 for millions of Americans, especially those of you on a fixed income.
That's right. This isn't just another proposal. We're talking about a commitment from the highest levels of government.
So, are you eligible? Will you need to apply? And when could you actually see this money?
We're going to break down all the official details, separate the facts from the fiction, and give you the clarity you need.
Stay with us. Welcome to the Deep Dive. We're the show that takes all the noise, the confusing reports, the press briefings, the official statements, and boils it all down into what you actually need to know.
And today, we're tackling a huge one. This is the topic you've been asking us about nonstop. That proposed $2,000 plus dividend payment.
Right, and this isn't some abstract economic policy. This is aimed directly at low and middle income Americans.
And most importantly, for so many of our listeners, it's especially targeted at those of you who rely on fixed income programs like Social Security or VA benefits.
Exactly. For many people, this isn't just a news headline. It's a potential lifeline. And because the stakes are so incredibly high, so is the skepticism. People are asking, is this real?
That's our mission today. To cut straight through all that noise and just deliver clarity. We've gone through everything, the reports, the live streams, the official statements, to get to the core facts.
So the big questions are, is this $2,000 payment actually going to happen? Who specifically is guaranteed to get it, especially if you're on, say, Social Security retirement or SSDI or SSI?
And the question everyone wants an answer to, when? When could you realistically expect this money to arrive in your bank account?
Now, we have to be upfront. The sources we've synthesized, they're vast. We're talking multiple reports, transcripts from White House press briefings, and even statements from the president himself.
And because of that, a lot of this is, of course, politically charged. It's coming directly from the top of the administration.
So let's be absolutely clear about our role here. We are not here to endorse any political viewpoint. We're not here to oppose one either. Our only job today is to impartially report and unpack the facts, the actual commitments we found in these sources.
And the biggest fact, the one that really frames this whole conversation, is that the commitment, at least on paper, seems very real.
How so?
Well, the administration has repeatedly, and I mean repeatedly, confirmed their dedication to a financial distribution of, and this is the key phrase, at least $2,000 per person.
And the targeting is specific.
Very specific. The sources are clear that this payment is designed for, and I'm quoting here, everyone, not including high-income people. So the target is squarely low and middle-income citizens, which by definition includes the vast majority of people on a fixed income.
Okay, so let's start there. Let's unpack what this distribution actually is, because the name itself seems to be a moving target.
It really does. That's actually where a lot of the initial confusion comes from. It feels like they're sort of testing out different branding for the same concept.
Yeah. What have you seen it called?
Oh, all sorts of things. In our source material, it's been called a $2,000 stimulus check, a tariff check, a rebate, a distribution.
And the most recent one seems to be a $2,000 dividend.
Exactly. But the sources were really explicit about this point. The name doesn't matter. Whether you call it a dividend, a stimulus, a rebate, it doesn't change the fundamental reality. It's the direct distribution of money to people.
And there's a reason for that word dividend, isn't there? I saw one source quote, a high-level official.
You did. They noted that the president is deliberately using the term dividend because, frankly, it sounds better.
It sounds better than stimulus.
It sounds more, I don't know, cool or politically attractive. The word stimulus now carries a lot of baggage from the last few years. This is really just an exercise in political branding.
But the substance remains the same.
The substance is money in your pocket. The core promise, no matter what they call it, is a dividend of at least $2,000 a person.
And this isn't just a one-off comment. The reason we're taking this so seriously is because of the pattern, right? The consistency.
That's the crucial context. This commitment is gaining weight because it's part of a very consistent and actually escalating pattern of endorsements coming straight from the top.
This is now the fourth time, isn't it? The fourth time since the inauguration in January that the president has personally backed some kind of mass money distribution plan.
Fourth time. So you can't look at this as just a random idea. It's a clear, committed narrative they're building.
Let's trace that progression, because I think the timeline is really telling. It started way back in February, didn't it?
It did. It started with a very unconventional idea, I think it's fair to say. The highly speculative $5,000 Doge dividend.
Right, which the media jumped all over. It seemed to tie the payment to cryptocurrency or some other unusual funding source.
And to be fair, our source material was quick to dismiss that one. The analysts we read saw it as pretty unlikely to happen, mainly because the funding was so speculative. There was no clear legislative path for it.
So that one kind of came and went. But then in August, something more concrete appeared.
Much more concrete. That was the proposal for a $600 rebate check. And that was significant because it was formally introduced in Congress. It had a name, the American Worker Rebate Act of 2025.
So it went from a kind of wild idea to actual legislative language.
A huge step.
Mm-hmm.
But then after that, the dollar amount started to climb.
By early October, the conversation shifted again.
It did. In a public interview, the president started floating a new range, saying the distribution would likely be between $1,000 and $2,000.
So already moving away from that smaller $600 rebate.
And now, most recently, the sources all confirm he has settled on this new floor, repeatedly declaring an amount of at least $2,000.
That upward trend is really what makes this feel different. One of the analysts in our sources had a great line about it.
I think I know the one you mean.
Every time he opens his mouth, the dollar amount gets bigger.
Exactly. And what that escalation does politically is it effectively boxes the administration into a corner. It makes it much, much harder for them to walk this back.
Which brings us to the official confirmation. This isn't just a remark anymore. It's been backed up by high-level officials.
And this is what elevates it. It's not just a tweet or an off-the-cuff comment. This has been formally acknowledged by the top non-elected financial people in the administration.
The sources cite two key people here. First, the Treasury Secretary, Scott Bessent.
Right. When he was asked about it directly, he confirmed that the $2,000 rebate is, quote, in discussion. He didn't dismiss it. He validated as a serious, active topic inside the Treasury Department.
And the second one was even stronger. The statement from the White House Press Secretary, Caroline Leavitt.
That was the big one. She gave the most explicit, unambiguous statement of intent you could ask for. She said, and this is a direct quote, "The White House is committed to making that happen.
Yes.
And we are currently exploring all legal options to get that done."
Committed to making that happen. That's incredibly strong language.
It's as strong as it gets. Exploring all legal options. That phrase transforms this from, a campaign promise into a major, committed, and imminent policy goal.
Okay, so that level of official buy-in really sets the stage for everything else. We've established the White House says they're dedicated to it.
But commitment doesn't equal cash in the bank.
Exactly. So now we have to get to the part that really matters to everyone listening, who actually qualifies.
This is the most crucial point for so many people. Who qualifies? Especially those of you who depend on fixed benefits like Social Security or VA payments.
Because historically, these groups, They often feel like an afterthought.
They do, and that creates this deep-seated anxiety. One expert we read put it perfectly. He said that for fixed-income recipients, it feels like every good financial announcement is followed by that terrible little footnote.
Oh, except for Social Security beneficiaries.
But our source materials suggest that this time is different. We can dispel that fear right now. We can. The fundamental rule, and this was reinforced across every single source we looked at, is this. Income is the only metric. That's it.
So eligibility for this payment is based purely on your income level. It doesn't matter where that income comes from.
It is completely irrelevant. It doesn't matter if it's from Social Security retirement benefits or disability insurance SSDI or supplemental security income SSI. Doesn't matter if it's from VA benefits, the Railroad Retirement Board, or a full-time job.
And it might be good to just quickly clarify those acronyms since we'll be using them a lot.
Good idea.
Yeah.
So SSDI, Social Security Disability Insurance, that's for disabled workers who've paid into the system. SSI, or Supplemental Security Income, is a needs-based program for the aged, blind, and disabled who have very limited income and resources.
And RRB is the Railroad Retirement Board.
Correct. But the good news is, for this payment, they're all looked at under the exact same income umbrella.
The president's own words were that the payment would go to low and middle income people and would exclude high income people.
Right. So our main job is to figure out what is that specific income ceiling? Where is that line drawn?
And this is where we're seeing a bit of a negotiation playing out in public, it seems.
It is. The initial speculation, naturally, was based on what we've seen before. The stimulus rounds in 2020 and 2021 used a threshold of $75,000 for an individual.
And $150,000 for a married couple.
Exactly. And that threshold, historically, included about 85% of the entire U.S. population. So that was the baseline assumption.
But that's changed.
It has. Treasury Secretary Scott Bessent gave us a new and much higher number. He specified that the threshold currently being discussed is less than $100,000 for an individual.
Wow, so $100,000, and that would imply, what, up to $200,000 for a married couple filing their taxes together?
That's the implication, yeah.
That's a huge deal. That $100,000 ceiling would bring a lot more people into the fold.
It absolutely would. But this is where we have to apply a bit of political reality based on what the analysts in our sources were saying. While the administration is talking about $100,000, moving the cutoff that high makes the total cost of the program explode.
You're adding billions and billions to the final price tag.
That's the conflict. So the sources anticipate that even though the public message is $100,000, the final number in any legislation might get negotiated back down.
Back towards that historical $75,000 or maybe $80,000 mark.
Exactly. And the reason would be purely financial. If you can lower the overall cost, you dramatically increase the chances of the bill actually passing through Congress, especially a fiscally sensitive one.
But here's the key takeaway for our listeners, right? Regardless of where that line ends up, $75,000 or $100,000, the message for most people on fixed benefits is one of inclusion.
Absolutely. The answer is a definitive yes. Beneficiaries across Social Security, so that's retirement, SSDI, SSI, and across VA and RRB programs, are, by and large, included.
The math just works out.
The math is irrefutable. The income from these fixed benefits is almost always well below $75,000, let alone the higher $100,000 threshold.
So when the president says low and middle income people, beneficiaries are squarely in that low income part of the target audience. If you're relying mostly on those benefits, your income already qualifies you.
And this brings us straight to a myth that we have to bust. It's one of the biggest sources of anxiety we saw mentioned in the source material from previous payment rounds.
The tax return myth.
The tax return myth. The worry that goes, I don't file a tax return so the government won't know I exist and I won't get the money.
That worry needs to be put to bed completely.
Completely. The sources confirm that filing a tax return has nothing to do with eligibility. One report emphatically said the president never, not once, mentioned filing a tax return as a condition.
And the reason is all about how the government already operates.
It's foundational. Social Security Administration, the VA, the RRB, they already have all the information they need to send you the money.
They have your name, your address.
Your direct deposit information, and most importantly, they have your certified income level. They know what you make.
The mechanism here is the key, the legal structure of the payment. It's not a welfare check.
No, it's legally structured as an advance of a refundable tax credit. And that technical detail is why the Treasury Secretary keeps talking about people seeing substantial tax refunds early next year.
Okay, let's break that down for a second because refundable tax credit can sound complicated.
It sounds more complicated than it is. A refundable credit just means that if the credit is worth more than the taxes you owe, or if you don't owe any taxes at all, the government pays you the difference. It's cash back.
So because the government will have passed a law saying low and middle income people are due this specific credit.
The Treasury Department is then legally allowed to advance you that payment. They can send you the money now using the records they already have from the SSA or the VA. You don't need to fill out a new form with the IRS.
So all those special tools for non-filers that we saw in the past, they aren't really necessary this time around.
For most people, no. The systems at the SSA and VA are already plugged into the Treasury's payment system. If you got a stimulus check without filing taxes, the government already knows how to find you. You are in the system.
You are covered. So to wrap up this section for our listener, forget about the tax filing process. Just focus on the income number. If your fixed income is below that cutoff, you're eligible, and the payment should come to you automatically.
That's the bottom line.
Okay, so we've covered the commitment, we've covered who's eligible. Now for the really tough part, the money. Where is it coming from? This is where we get into the cold, hard numbers.
Yes. The administration has been very specific about the funding source. It's supposed to come from the distribution of revenues generated by massive federal tariffs.
And this is the section where, the political messaging collides with economic reality.
It really is. The sources reveal a pretty significant financial challenge here. We have to do the tariff math, as one report called it, using their own numbers to see if this is even feasible.
Let's start with the money coming in, the revenue.
Okay. The sources say these tariffs are currently bringing in about $1 billion a day.
$1 billion a day.
So over a full year, that adds up to roughly $350 billion in annual revenue. And the long-term projection is even bigger. They're projecting over $3 trillion from this revenue stream over the next 10 years. So that's the pool of money they're looking at.
Okay, so that's the income. Now, what about the cost of sending out these checks?
For the cost, we'll use the most common estimate from the sources. They assume the $2,000 payment will go to that same 85% of the population that qualified for past stimulus checks.
And that 85%, what does that translate to in terms of people?
Well, with a U.S. population of roughly 334 million, 85% of that is about 284 million eligible recipients.
Okay, so 284 million people, each getting $2,000. The multiplication there it's huge.
It is staggering. That comes out to a total cost for just one single payment round of $568 billion.
$568 billion, more than $500 billion.
And right there, that's the gap. That's the problem. The source material flags immediately.
The math doesn't work. You need $568 billion now.
But your annual income from the tariffs is only $350 billion. You're short by more than $200 billion.
One of the analysts did the math on that, didn't they? At $1 billion a day.
They did. At that collection rate, it would take 568 days, that's almost a year and 7 months, of collecting tariff revenue just to cover this one payment.
So that completely blows up the administration's timeline of early next year. You can't send a payment soon if you have to wait 18 months to collect the money.
You can't. And that leads directly to the only realistic way to fund this payment quickly.
Borrowing. It has to be connected to the national debt.
It's the only way to easily swing it, as one source put it. Instead of waiting for the cash to come in, the government has to use the mechanism of borrowing.
So how does that work? How do they justify that?
Well, remember that 10-year projection of over $3 trillion in tariff revenue?
Right.
The government can essentially use that future income stream as collateral. So the Treasury would need to borrow the $568 billion today, send out all the checks, and then simply pay that debt back over the next few years as the tariff money actually comes in.
So this is the big contradiction that the sources point out. The payment is marketed to the public as a tariff dividend.
We're implying it's money we already have that we collected from trade.
But financially, to get it out the door quickly, it has to be debt funded today.
Precisely. One report noted, look, the national debt is going up by billions every day anyway. This strategy just lets them front the money for the checks, attach that cost to the debt, but publicly give all the credit to the tariff policy.
That's a critical distinction. So when they say it's funded by tariffs, what they really mean is that the repayment of the loan will be funded by tariffs.
That's the justification. It's functional and it's political. Functionally, the tariffs are essential to paying for it long term. Politically, dividend just sounds a lot better than we borrowed more money for you.
Okay, so Because that borrowing amount is so big and adding to the debt is always a tough sell in Congress, the sources expect lawmakers to look for ways to bring the price tag down.
And they have two main levers they can pull to do that.
What's the first one?
The first one is the most obvious.
Yeah.
You just reduce the dollar amount of the payment.
So instead of $2,000, maybe it's $1,000.
Exactly. And if you do that, if you cut the payment in half to $1,000, the total cost for that same 85% of the population immediately drops to $284 billion.
Which is an amount that is well within the $350 billion they collect in a year.
Right. Suddenly, it's financially feasible without having to do massive immediate borrowing.
Okay, so that's lever number one. What's the second option?
The second lever is to reduce eligibility.
So you keep the payment at the full $2,000, but you send it to fewer people.
Precisely. Instead of the broad 85% of the population, Congress could tighten the income rules dramatically. For example, what if only the lowest 50% of the population gets the full $2,000?
And what does the math on that look like?
Interestingly, the math is almost identical. Setting the full $2,000 to only the lowest 50% of the population also costs right around $284 billion.
Wow. So that sets up a really profound political choice for them, doesn't it?
It's a huge one, and the sources suggest this will be the main fight in Congress. It's not just a financial choice, it's ideological.
Do you maximize the reach by sending a smaller check to almost everyone? Or do you maximize the impact by sending the full check, but only to those who are the most economically vulnerable?
The final decision on that one will tell you everything you need to know about the real goal of this relief package.
Let's switch gears to the practical stuff. The questions that really affect people's ability to plan. When can you expect this money? And what kind of financial protections are in place?
Okay, timing is always tricky because it depends on Congress, but we do have some strong clues. The biggest one comes directly from the Treasury Secretary.
The substantial tax refunds comment?
Yes. He said citizens would see substantial tax refunds early next year, 2026.
So early next year is our baseline. That's the earliest possible window.
It is. And that timeline makes sense when you factor in the legislative process. A bill this big needs to be drafted, debated, negotiated. It has to pass the House, then the Senate, then get signed by the president.
Even when they rush, that process takes time.
It does. Based on past experience, even an expedited process takes a bare minimum of a month to a month and a half. So with the year-end holidays approaching, that schedule naturally pushes the actual delivery of money into the first few months of 2026.
And if we look at the bigger political picture, there's another deadline looming, isn't there?
The midterm elections in November of 2026. The sources were pretty clear that the real window for delivery is any time between now and then.
Because historically, major financial distributions like this are often timed for maximum political effect right before an election.
It's a powerful incentive. So while early 2026 is the official forecast, there are strong political reasons for them to get this done well before the midterms.
Okay, what about financial protections? This is so important for people on fixed incomes who might be dealing with old debts. Can this $2,000 payment be taken away?
It can, but only under very specific and rare conditions.
What are those?
The main threat is what's called an offset, and it only applies if you owe money directly to the federal government.
So things like unpaid back federal taxes.
Exactly. Unpaid federal taxes or other non-tax federal debts. The sources confirm the Treasury is authorized to keep your payment and apply it directly to what you owe them.
The example they used was pretty clear. If you owe, say, $10,000 in back taxes.
They would intercept the $2,000 payment, you wouldn't receive it, and your federal tax debt would be reduced to $8,000.
And in past stimulus rounds, past due child support was another big one.
Yes, because that's often enforced through federal systems. So that could also be a reason for an offset.
But, and this is a huge, but what about private debts? Credit cards, medical bills.
And this is where the crucial protection comes in. Because this money is structured as a government relief payment or a tax credit, it is generally protected from private creditors.
That's a life-changing detail for a lot of people.
It is. It means for the vast majority of fixed-income beneficiaries, people who don't owe back taxes or child support, this $2,000 should arrive in full, and it should be safe from a credit card company or a private debt collector trying to garnish it.
So the key distinction is federal debt versus private debt. For most people, the money will be safe.
And that flows perfectly into the scam warning we have to give.
Right. Because the sources are so clear about how the money will arrive, it makes spotting scams much easier.
It does. And we have to say this as loudly and clearly as possible. No legitimate government agency, not the IRS, not the Social Security Administration, not the VA will ever call you, text you, or email you asking for money or personal information to get this payment.
They will never ask you to pay a fee or buy a gift card.
Never. If you are already receiving benefits, the government already have everything it needs. They have your direct deposit info. There is no application for most beneficiaries.
The money will just show up.
It will just arrive in your bank account, or it'll be loaded onto your Direct Express card. If you get a call, a text, or an email that seems suspicious, do not engage. Hang up. Delete it.
This is a prime target for scammers, isn't it? Especially targeting older adults.
A massive target.
Right.
If you get a letter that looks official, but it asks you to go to a website and validate your bank details to get your dividend, it is a scam. The only thing you need to do is wait for the money to arrive automatically if you are eligible.
Okay, let's zoom out for the last section and look at the big picture. The political stakes and the economic reasons that are really driving this whole proposal.
Right. We need to connect all those endorsements from the president back to the immense pressure the administration is now feeling.
They've really gone beyond just floating an idea. They are actively building a huge amount of public expectation for this $2,000 payment.
They are. And that aggressive commitment, especially those really strong words from the White House press secretary we talked about, has painted them into a very, very tight political corner.
One of the analyses we read put it in stark terms.
It did. It noted the danger very clearly. If they fail to follow through on this, after endorsing it 4 separate times, their credibility and trust is, and I'm quoting, going to go down the toilet.
A political disaster.
A total disaster. The sources warned it would be a really, really, really bad messaging campaign. They would risk becoming the kid who cried wolf way too many times.
And that erodes public trust in everything they promise in the future.
So that political pressure makes delivering this payment an absolute imperative for them, even if the funding math is a bit messy.
And that's just the political side. There's also the economic pressure. Stimulus proposals like this are always tied to how the economy is doing.
Always. And while you might hear some official reports saying the economy is booming, the sources we reviewed paint a much more complicated and, frankly, a darker picture for many people.
What are they seeing?
They indicate that the underlying economic data, especially for low and middle-income consumers, is actually very bad. While wealthy consumers are still spending, the vast majority of people, including those on fixed incomes, are described as being completely tapped out.
Still struggling with inflation, high interest rates.
All of it. And that financial stress creates what the sources call potential implosion triggers.
Meaning things that could cause the economy to decline very quickly.
Exactly. They pointed to a few risks. The rising number of corporate bankruptcies is one. Another is the shaky state of the private credit market, which is basically unregulated lending that could trigger a sudden downturn. And of course, global tensions are always a risk.
And the key thing to remember here is what happens when the economy does take a nosedive.
History is our guide. We just have to look back to the 2020 CARES Act. When the economy started to plummet, that bill passed in a matter of weeks. The political gridlock just vanished.
The sources are clear on this. When the economy genuinely starts to collapse, that's when money is approved. And it's approved fast. That economic risk is a much more powerful driver than just political promises.
And then finally, there's the one we already mentioned, the midterm election factor. You just can't ignore it.
With the elections coming in November 2026?
Politicians know the power of putting money in voters' pockets right before they head to the polls. One source used some pretty charged language, which we'll report neutrally, saying politicians historically try to bait the hook or bribe us with rebates before an election.
So when you put it all together, the economic weakness, the need to avoid a credibility crisis, and the looming midterms.
You have 3 massive forces all pushing Congress in the same direction toward delivering some kind of financial payment, even if they have to borrow the money to do it.
This has been a really detailed look at a proposal that could have a huge impact on millions of people, especially those on fixed incomes who are just looking for some breathing room.
It really could. So let's try to boil everything we've talked about down into the essential facts you need to remember as the story develops.
Okay, the 4 facts. What's number 1?
Number 1 is the amount. The administration's repeated, stated commitment is for a payment of at least $2,000 per person.
Number 2, eligibility.
This is for low and middle-income people only. And crucially, fixed-income beneficiaries, Social Security, SSDI, SSI VA fee broadly included, as long as your income is below that proposed ceiling, which is currently being discussed at up to $100,000 for an individual.
Number 3, application.
No application is needed for the vast majority of you receiving fixed benefits. The government already have your payment information and will send the money directly. It's treated as an advance of a tax credit.
And finally, number 4, timing.
The official forecast from the Treasury is early 2026, probably tied to the tax refund season. But keep a close eye on the economy. A sharp downturn could significantly speed up that timeline.
You know, we recognize that for so many of you listening, this isn't just a number in a government budget. A payment like this can represent dignity. It's a chance to catch up on bills. It's just a central breathing room.
It absolutely is.
Yeah.
And we spent a lot of time on the financial mechanics, showing that the math makes it hard to send that full amount to everyone without borrowing.
And that financial friction, as the sources laid out, forces lawmakers into a very difficult choice.
Which brings us to our final provocative thought for you to take with you.
Given that they'll likely have to reduce the total cost of this program to get it passed, they face a real moral and political dilemma. So, option 1. Should they prioritize sending a smaller amount, like $1,000 to almost everyone, that 85% of the population, to ensure broad-based support?
Or option 2. Should they prioritize maximizing the impact by sending the full committed $2,000, but only to the lowest 50% of the population, the group that statistically needs it the most just to get by?
The choice between wide reach with less impact versus targeted impact with less reach.
It's a defining political question. And the choice they ultimately make between those two options will tell us everything about their true priorities. That's the question we'll leave you with as this all moves forward.
We really hope this deep dive has given you the detail and the clarity you need to follow this critical financial story. Thanks for
Welcome back to the deep dive. Today we're cutting through all the noise. We are not talking about, speculation or some political whispers.
No, not at all.
We're talking about something much more solid, cold, hard, public confirmation. We've seen this synchronized effort by the White House to really double down on a potential $2,000 financial payment, and it's aimed directly at American families. So this really isn't just a rumor anymore. It feels like an executive mandate.
That's exactly the right way to put it. That is the key distinction here. We have moved entirely past let's call it the idea phase.
Right.
The commitment we're seeing is, frankly, it's stunning. And it's coming straight from the top. We're seeing the administration's most influential figures. I mean, you're talking about the economic advisor, the Treasury Secretary, and the chief messenger, the press secretary.
All of them.
All of them, in just a matter of days, confirming that they are not only, researching this, but they're actively mapping out how to disperse this $2,000.
And here's the part that I think makes this whole proposal so politically unique and, frankly, economically fascinating. It's the source of the funds.
Yeah, the funding mechanism.
Exactly. They are promising to pay for this whole thing entirely using existing tariff revenue. They are framing it as, a cost-neutral measure?
That's the term, yeah. Stating explicitly that it won't dig into the rest of the budget. And that, right there, it just reframes the entire discussion we usually have around financial relief.
It really does.
That funding mechanism, it changes everything. It's an explicit attempt to, neutralize opposition from the deficit hawks.
Sure.
And it signals a very specific type of political resolve that, honestly, we haven't seen since maybe the initial rounds of pandemic aid.
So our mission today in this deep dive is to synthesize and analyze all 5 pieces of evidence that have come out. We've got 3 high-profile video clips and 2 immediate presidential social media posts. We want to show you exactly how real this $2,000 payment has become. And maybe even more importantly, what the critical, non-negotiable next step is that needs to happen for you to actually see it.
That's the key.
For those of you relying on some financial stability right now, this information is absolutely vital. The evidence trail it's just far stronger than a lot of people might realize.
I think so, too.
Okay, so let's get started. Let's really try to define the scale of this commitment. Because when the White House commits to a specific dollar amount, $2,000, and a specific funding stream, especially when they do it repeatedly and across different cabinet roles, that signals an intention that is, it's pretty difficult to walk back from. Our sources are confirming that over a really short period, the administration has shown this massive, very public commitment to getting this payment out.
And for any measure of this financial magnitude, a $2,000 payment that could potentially reach tens of millions of families, The level of rapid, high-level, and synchronized discussion we've seen is extremely telling. This isn't, some random cabinet secretary floating an idea at a press conference. This is a unified policy front. It's coordinated.
And for so many families, $2,000 right now is. It's the difference. It's the difference between keeping up with bills or falling behind. It's not just a political number floating around out there. For a lot of people, it's a critical lifeline.
It really is.
And that's why we need to unpack just how serious these claims are and the political pressure the administration is now under to deliver.
And that pressure, that brings us to what the source material called the urgency of commitment, which I think is a great phrase.
It is.
By talking about this payment so frequently and so publicly, the administration is effectively painting themselves into an extremely tight corner.
That analogy is just.
Yeah.
It's spot on. They are defining the terms of success for themselves publicly. If they go out and they repeatedly promise a $2,000 dividend.
And they have.
And they confirm that their top economic team is diligently studying the funding and, who gets it. The public expectation for them to actually follow through becomes immense.
Precisely. Because if they fail to deliver on a promise that is now so specifically detailed, we've got the amount, $2,000, the funding, tariffs, the target, sub-$100,000 families, the risk is a really significant erosion of public trust.
Yeah, massive disappointment.
Massive disappointment. They're actively digging in on this proposal, which suggests to me they genuinely believe they have a viable and, importantly, a legal path to implementation, even if it requires a tricky legislative maneuver to get there.
Okay, so for this deep dive, I'm here to guide you through the raw evidence. We're going to look at the specific quotes, the context of these video clips, and the timeline of how these statements came out.
And I'm here to provide the synthesis, the deep analysis, and the context you need to understand why these orchestrated, high-profile statements are just fundamentally different from, your typical political rhetoric. So let's look at the sheer weight of these sources.
All right, let's unpack this crucial evidence trail. Because this commitment, it isn't just coming from one person, from one source. It's more like a triangulation of high-level administrative power.
That's a good way to describe it.
We've established these 5 distinct data points that all sort of materialized within just a few days of each other. 3 video clips featuring these critical officials, and then 2 separate presidential social media posts that basically confirm the mandate.
And when you have the economic advisor, the treasury secretary, and the press secretary all echoing the exact same specific policy mandate, well, it indicates a singular executive-level priority. This is what a policy rollout looks like, It's not a political leak.
No, this is deliberate. We have to start with the man who holds the calculator.
Kevin Hassett.
Kevin Hassett, the administration's chief economic advisor. His role here is paramount because at the end of the day, he's the one who has to determine the viability and the technical feasibility of paying out billions and billions of dollars.
Right. And Hassett's testimony, from the clips we've seen, it provided 2 absolutely pivotal pieces of information that really defined the entire scope of this proposal.
Okay, so what's the first one?
First, he was very clear that this is, and I'm quoting, something that will require legislation. And that immediately tempers expectations, right? This is not an executive fiat. It's not something the president can do on his own. It necessitates congressional approval. And that, right there, is a crucial insight into the legislative path forward.
Okay, that's huge. That sets the stage for everything else. So what was the second piece?
The second piece was the budget justification. This is the political core of the entire plan. He directly confirmed that, based on the current volume of tariff revenue coming in, there would be, and again, I'm quoting him, enough money to pay for the $2,000 checks. And he did that by saying they would utilize those specific funds, ensuring they do not go into the rest of the budget.
So he's building a firewall around this money.
He is. That statement, coming from the foremost numbers cruncher in the White House, is the conceptual foundation for this whole thing. It attempts to shield the $2,000 dividend from criticism by framing it as revenue redistribution.
Not as spending.
Exactly. It makes it budget neutral in the context of general federal spending. And that's where the political genius of the plan lies, right? It's a direct appeal to lawmakers who would otherwise refuse to support any proposal that adds to the national debt.
And his current activity, what he's actually doing right now, that confirms the priority level too. Hassett didn't just speak theoretically. He stated, very plainly, that he is actively studying the matter and getting the numbers straight so the president has all the choices he needs to decide what to do.
Right.
That's not a vague goal. That's a description of ongoing, detailed technical research. They're looking at implementation models right now.
It means the policy is past the conceptual stage, and it's currently in the, let's call it the engineering phase.
I like that.
The question is no longer if it can be done, but how it can be done. How can it be done efficiently, legally, and within the constraints of that tariff revenue?
Okay, so moving along this commitment chain, we next look at the Treasury Secretary, Scott Bessent. His involvement sort of reinforces the plan from the other side, the implementation and disbursement side.
Yes, Bessent's discussion was critical because he was the one who was really challenged on the financial responsibility aspect of it. You know, whether using tariff revenue specifically for this purpose was really just shuffling debt around.
Classic budgetary shell game.
Exactly. And while he navigated that complex budgetary metaphor pretty carefully, his main commitment remained resolute.
He didn't make excuses or try to deflect. Bessent confirmed the White House is exploring all legal options to get that done, and that they are looking into it intensively. And while he couldn't provide a firm timeline, which, is understandable given that legislative hurdle we just talked about, getting that commitment from their office that's responsible for actually processing the payments, that is a huge sign of momentum.
It really is. I mean, the Treasury Secretary's office is the engine of disbursement. When he confirms they are exploring legal options, it implies they are likely looking at the most efficient ways to use existing government infrastructure.
So, like previous rebate programs.
Probably something very similar to that. They want to minimize delays, minimize bureaucracy. The last thing they want is to have to create a massive new administrative system because that would just slow down delivery and add to the overall cost.
Okay, makes sense.
Oh.
And then finally, we have the official confirmation from the top, from the White House Press Secretary, Caroline Leavitt. Her voice, it represents the unified policy direction of the entire administration.
And Leavitt provided the necessary political capstone all this. She definitively stated that the White House is, quote, committed to making that happen.
And what was her reasoning?
It was simple. It was driven by the fact that the president made it clear he wants to make it happen. This is the messenger confirming the mandate directly to the public. There's no ambiguity there.
So when you stack those three officials up, you have Hassett confirming the math and the need for legislation.
Mm-hmm.
You have Bessent confirming the financial mechanism and the legal exploration.
Right.
And then Leavitt confirming the executive mandate. And this all happens within a few days. It's just an extraordinary show of coordination. It transcends mere political talk. It suggests a highly motivated, high-priority project is underway.
Absolutely. It's a full-court press.
So now that we've established this deep commitment and the unified executive intent behind the $2,000 payment, we need to pivot to the two most critical details for you, the listener.
Right. Who gets it and how is it paid for?
Exactly. Who actually qualifies and how exactly does this tariff revenue system work?
And the eligibility question is, it's often the most confusing part of any aid proposal, isn't it? The initial announcement used very broad, very sweeping language. But the subsequent high-level discussions, they provided the critical specificity we needed to understand the policy's real target audience.
Okay, so let's break that down. The president's original announcement spoke of a $2,000 dividend to everybody except high-income people.
Mm-hmm. Classic political language.
It is. It sounds universal, while at the same time promising to exclude those who, presumably don't need it. But what does high income actually mean in a policy context? It can mean anything.
And this is where the clarification provided by the officials is so invaluable. During the discussions, Treasury Secretary Bessent, he provided a crucial data point. He mentioned that the rebate would be aimed at families making less than, say, $100,000.
Okay, say $100,000. The difference between the general promise of everybody and that specific figure is monumental.
It's huge.
A $100,000 family income threshold, while it's still certainly more targeted than a truly universal check, it makes the policy much clearer. It focuses the relief squarely on the middle and upper middle class, in addition to lower income households.
And we have to stop and scrutinize that one word, say.
Right. I was going to ask about that.
The source mentioned Bessent used the phrase, say $100,000. In policy discussions, that word is often a very strategic qualifier.
It gives them wiggle room.
A lot of wiggle room. It means they have identified $100,000 as the preferred internal benchmark for eligibility, but they are giving themselves flexibility. It suggests this is the current starting point for negotiations.
So the administration is internally focused on that $100,000 number, but by using say, it prevents them from being locked in if, for example, they need to lower the threshold to maybe 80,000 to save on costs.
Or raise it.
Or raise it slightly, yeah. To maybe 120 to win some key congressional votes in those high cost of living areas. It's a calculated ambiguity that allows for legislative maneuvering down the line.
That's it, exactly. It suggests the scope is intended to be generous, but the final legally binding number might shift based on final tariff revenue calculations or, just raw political necessity.
So it's crucial for you to understand that the $100,000 figure, it represents the administration's stated intent, but it's not yet etched into law.
Not at all. It's the target.
Okay. Let's move on to the tariff revenue strategy. This is the most distinguishing element of this whole plan. Why are they choosing tariffs specifically, and what's the political strategy behind that choice?
Well, the core proposal is, as you said, brilliant in its simplicity and its political framing. The idea is to use tariff revenues, which are essentially just taxes collected on imports, to fund the dividend. And Kevin Hassett's reasoning confirms the political motivation here. Using this specific revenue stream ensures the cost is covered without affecting the existing general federal budget.
This strategy basically transforms the payment from being stimulus or aid, which is typically funded by future debt,
Right.
into a dividend or a rebate funded by existing incoming revenue. This is a critical rebranding exercise.
It is extremely appealing to budget hawks, regardless of their political affiliation. They're making the argument that money that came into the government coffers is simply being redistributed out to the people who paid the cost of those tariffs, either directly or indirectly through higher consumer prices.
So it's like a refund.
In a way, yes. By walling off the tariff money, they position this as fiscally responsible redistribution rather than new deficit spending.
Now, this is where we had to introduce some intellectual friction, as the critique suggested. The person who originally vetted these sources and compiled all this information, they made a very interesting observation. They noted that when they tried to calculate the year-over-year tariff numbers against the cost of this payout, they found that, and I'm quoting, it doesn't really add up, and that it doesn't make sense to fully fund the proposal this way.
This is the single most important conflict embedded within all the source material, and we absolutely must analyze it.
It's a huge discrepancy.
It is. On one side, you have this external calculation suggesting the math is insufficient, that maybe the current tariff receipts just aren't enough to cover $2,000 for millions and millions of families below $100,000.
Okay.
But on the other side, you have Kevin Hassett, the White House economic advisor, stating unequivocally, based on his internal numbers, that it works.
So who do you believe? We can't just dismiss the external skepticism, but we also can't just dismiss Hassett's claim. If the numbers don't add up externally, what are the possible explanations for Hassett's confidence?
Well, there are a few possibilities. One, Hassett might be relying on projected tariff revenue growth.
Future money.
Exactly. He might be anticipating much higher collections over the next 12 to 18 months that just haven't materialized yet in the public data. That's one possibility.
Okay, what's another one?
Two, the eligibility threshold might end up being much narrower than the, say, 100,000 that Besson mentioned.
So fewer people would qualify.
Right, meaning Hassett's calculation might assume a lower number of total recipients, which would make the per-person math work out.
Yeah.
Maybe the final number is 75,000, not 100.
Or 3. And this is maybe the most cynical interpretation. Hassett is defining budget neutral very, very narrowly.
How so?
Perhaps meaning it's neutral only within that dedicated tariff fund. But that fund might still need a transfer or a boost from another government account that isn't being publicly acknowledged yet.
That's a very real possibility. And that third point is exactly why we have to maintain neutrality here. For the purpose of policy tracking, we report the administration's claim. The official stance is that the tariff revenue is sufficient and it will serve as the sole funding mechanism.
Right.
However, you have to understand that the viability of the entire proposal hinges on that specific mathematical claim holding true under congressional scrutiny. If Hassett's math is proven wrong in hearings,
The whole thing falls apart.
the entire political justification for the plan collapses, and it will almost certainly stall in the legislature.
Okay. Finally, to synthesize this whole commitment, we have to look at the president's own actions. We have the 2 social media posts that were shared in the source material, and they provide undeniable evidence of a sustained executive-level focus.
These posts are the ultimate proof of concept. The Sunday Post contained the original specific declaration, at least $2,000 in the form of a dividend paid to everybody except high-income people. That was the shot fired across the bow.
And then the Monday Post, which confirmed that the president immediately doubled down on the payment just 24 hours later. And in the world of high-stakes politics, where statements are so often quickly refined or even walked back, for him to confirm the announcement the very next day, that shows it was not a mistake. It wasn't a trial balloon. It was a firm, deliberate, executive intention.
When you put it all together, the numbers man, the disbursement man, the messenger, and the chief executive all pushing the exact same $2,000 tariff-funded message. It shows a level of coordination that rarely, if ever, happens by accident. Which brings us, of course, to the biggest hurdle of all, the legislative path and the political momentum. We've established the executive commitment, but commitment alone doesn't print checks.
No, it does not.
We need to talk about the actual mechanisms of getting this proposal through Congress.
So let's just confirm the current status based on what Hassett testified to. Nothing is approved yet.
Right. Still in the works. The matter remains in discussion. That means the internal research on the viability and the legal options is ongoing, but the legislative clock hasn't fully started ticking yet.
And as Hassett clearly stated, the bottleneck is congressional action. He confirmed this will need to be out of Congress. This is such a crucial distinction. The White House is providing the mandate and the funding blueprint, but Congress, and only Congress, holds the key to implementation.
And the legislative process is, well, it's complex. Even a seemingly budget-neutral proposal like this can get stalled by disagreements over the fine print.
Like the eligibility definition.
Exactly. Does $100,000 mean adjusted gross income? Does it mean total household income? How are dependents counted? Are single filers capped at $50,000 or $60,000? All of these details must be debated and then codified into law.
But what's fascinating here is the potential political softening that the source material seems to point toward. They mentioned seeing information that lawmakers are warming up to the idea of these $2,000 payments.
And this suggests that the budget-neutral framing is having the desired effect.
It's working.
It's working. Lawmakers who might otherwise oppose large relief packages on fiscal grounds now have a politically palatable way to vote yes. If the public is enthusiastic about a $2,000 dividend, and the administration provides this novel funding source, the tariffs, lawmakers can support it without carrying the political baggage of being seen to increase the national debt.
So the political resistance seems to be softening, but that legislative step is still the critical bottleneck. The administration's doing its homework, they're exploring legal options, but until a bill is actually introduced, debated, and passed, the payment remains a very high probability, but not a certainty.
It is an extremely high probability, I would argue, simply because the administration has made the promise so public. As the source notes, the high volume of talk creates a pretty high likelihood. However,
There's always a however.
there is. Congress gains significant leverage by controlling the legislative process. They can demand changes to that $100,000 eligibility cap, or they could try to divert the tariff funds to other purposes entirely. That's always a risk.
We also need to clarify the nature of this payment because the terms are often used interchangeably. Is this a stimulus check, a rebate, or a dividend? What's the difference?
In this context, the administration is being very specific. They're using the term dividend precisely because of the funding source.
Okay.
A stimulus is typically broad aid designed to spur economic activity, and it's often funded by debt. A rebate is usually a return of overpaid taxes. A dividend, in this specific framing, is a share of government revenue, in this case tariff revenue being paid out to the people.
So the distinction is purely political.
Yeah.
By calling it a $2,000 one-time dividend or rebate, they're clearly positioning it as relief paid out from a specific revenue stream.
Right. And it's designed to offer some breathing room rather than being a permanent structural entitlement change. This sets the expectation. This is a one-time event. This is not a recurring annual benefit. And it completely avoids the complex, lengthy legislative process that would be required to reform long-term entitlement programs. This is designed to be fast, targeted relief, even if fast still means waiting for Congress to act.
Right. Okay, so moving into the analysis of the financial implications, we have to acknowledge a constraint here. The source material gave us zero detail on critical factors like, is this taxable?
Yay.
What's the specific payment timing? Is it protected from garnishment by debt collectors?
All unknown.
So we have to limit our discussion to the one financial mechanism that was explicitly confirmed by the officials.
Which is the intended budget neutrality. This is the cornerstone of the entire proposal, so it's worth digging into.
Let's drill down on the significance of funding this thing entirely with tariff revenue. Why does budget neutrality matter so much for the political life of this proposal?
It matters because it neutralizes the primary conservative talking point against almost all aid packages, which is deficit spending. By presenting this as a closed-loop system tariff revenue in, $2,000 dividends out, they are attempting to present a solution that is palatable across the aisle. This intent is crucial. They are trying to position this as relief that does not draw upon existing deficit spending.
And critically, that it doesn't pull funds from politically sensitive areas like Social Security or Medicare.
Oh, absolutely. That would trigger massive, immediate opposition and kill the bill on arrival.
Hassett's explicit confirmation that there would be enough room to cover those checks and not go into the rest of the budget. That means that when this bill reaches Congress, the administration is going to promote it as having a $0 impact on the general fund.
It leverages the fact that this tariff revenue is already being collected. It's not new money, it's just reallocated money.
And that right there is the key takeaway for you regarding the financial plan. If this passes, it will establish a precedent for non-deficit funded emergency relief.
It's a powerful new tool in the policy toolbox provided. And this is the big if, provided the math holds up to intense scrutiny from Congress.
Always comes back to the math. So given the current status, we have high commitment, a firm dollar amount, a unique funding strategy, but it's stalled at the legislative level. What should you, the listener, be actively watching for?
There are two immediate concrete signals that will indicate movement from discussion to imminent reality.
Okay.
First, legislative action. You need to watch for a specific bill number, something introduced in either the House or the Senate that explicitly mandates the $2,000 dividend and specifically names the tariff revenue as the required funding mechanism.
That legislative language will be so critical. It's going to contain the final codified eligibility requirements, the official income number, not the, say, 100,000 estimate. That is the necessary hurdle that has to be cleared.
And second, you need to look for a specific timeline or concrete disbursement details from the administration.
Right. Besson and Leavitt confirmed they're exploring legal options, but neither of them gave a payment date.
Exactly. So a major public announcement that specifies when the first payments will go out, or if it's going to be direct deposit, which is most likely, that will be the final sign of progress, the finish line.
And until those two things happen, a specific bill number and a firm date, we really just remain in the monitoring phase. Continued vigilance over official administration updates and, of course, congressional schedules is essential.
It is.
This has been a really intense analysis, and it's focused on this unprecedented level of commitment and the unique financial architecture behind this potential $2,000 payment. So let's quickly reinforce the absolute key takeaways for you.
I think the biggest takeaway is just the depth of the executive resolve. The White House has repeatedly confirmed its dedication to making this $2,000 payment happen. We've seen 5 distinct pieces of public evidence from 3 top officials and the president himself. This isn't a trial balloon anymore, it's a stated policy intent. Second, eligibility. While it's still being negotiated, it's focusing on a specific economic range. The working figure for who's included is focused on families making less than, say, $100,000. Which is far more targeted than that initial universal promise.
Third, and this is the fundamentally unique part, the payment is proposed to be funded entirely by tariff revenue. This mechanism is the administration's core political argument. They're positioning the payment as budget-neutral release based on the calculations from their economic advisor, Kevin Hassett.
Even though that external skepticism about the precise numbers still remains.
Right. That's a key caveat.
And finally, the next critical steps are all legislative. It's about congressional action and the subsequent development of a firm public timeline. Without a passed bill, the payment is delayed indefinitely.
And understanding these 4 points allows you to accurately track the proposal's progress and, identify when the political maneuvering is serious versus when it is merely talk. And on that note, we'd encourage you to use this information. As the source material suggests, sharing this information and building momentum and support behind this can actually put necessary pressure on Congress. The higher the public attention and support this specific tariff-funded proposal receives, the greater the likelihood that lawmakers will feel compelled to act and act quickly.
Let's close with a thought that looks a little bit past the immediate payment itself. If the administration successfully navigates the legislative process, if they secure bipartisan support, and they actually manage to fund these large, broad payments using only tariff revenue, what does that precedent mean for the future?
That's interesting. They are effectively creating a blueprint for major non-deficit financial relief, a dedicated walled-off revenue stream specifically for redistribution.
Exactly. This new funding mechanism, using specific incoming revenue streams rather than new debt or budget cuts, could fundamentally change the political and economic blueprint for how future emergency or targeted financial support is conceived, debated, and ultimately financed in the United States.
So this structural approach to funding, it's arguably more important than the $2,000 amount itself.
I think it is, and it is a mechanism that is worth watching. Okay, if you are watching your mailbox or, checking your bank account, anxiously tracking any sign of financial relief that could ease the strain of rising costs, well, this is the deep dive you absolutely cannot afford to miss. We are tracking a major financial update that has gone from maybe rumor to near certainty.
Yeah.
A potential payment that could put a significant amount, at least $2,000, directly into your pocket.
That's exactly right.
Yeah.
The speculation phase, I think we can say, is over now.
Yeah.
We have concrete, high-level confirmation. After the president's initial statements, Treasury Secretary Scott Bessent has stepped forward, and he's actively confirming and discussing this substantial payment. That gives us the crucial logistical and eligibility details we've really been waiting for.
And here's the truly game-changing detail, I think, especially for those maybe in the middle income bracket who felt kind of excluded before. The income threshold for eligibility is significantly higher than anything we saw in previous stimulus rounds. I mean, much higher. Yeah. This means many more low-income, fixed-income, and yes, middle-income Americans could qualify. It offers crucial breathing room, against inflation and those high utility bills.
And so today, we are diving deep into the source material, the direct comments, the analysis surrounding Bessent's recent remarks. Our mission is really to provide the critical clarity you need right now. We'll meticulously cover who exactly gets this money, why the Treasury Secretary is framing it as a tax refund, which is interesting, and the highly specific legislative timeline pointing toward potential payments in, early 2026. This is the financial deep dive you need to manage your expectations and your budget effectively.
Welcome back to the Deep Dive. Today, we're undertaking a crucial financial analysis. We're moving past the headlines and really getting into the fine print of the newly released information concerning this potential $2,000 payment. For our listeners on fixed incomes, retirees, low-income citizens, and those relying on benefits like Social Security, SSDI, or VA payments, these funds aren't just a bonus. They could be truly life-changing, offering a critical buffer against the relentless pressure of current economic realities. The interest in the subject is understandably through the roof.
It really is. And the level of governmental engagement, that's what differentiates this from just, mere rumor or speculation. The momentum is driven by recent public announcements from the president, and it's been quickly crystallized and detailed by comments from a key player, Treasury Secretary Scott Bessent. When the Treasury Secretary speaks about the logistics, about transferring hundreds of billions of dollars, that signals that these payments are rapidly moving from just a proposal into an active, high-priority governmental initiative. And that necessitates a full deep dive into the specifics, like we're doing.
Right. So our mission today is to cut through all the confusion and the jargon. And believe me, there is a lot of jargon swirling around this. We need to clarify exactly what this $2,000 is, who the Treasury Secretary says is eligible, which, again, sounds like a much broader category than we've seen. And crucially, we need to provide a realistic timeline. When might we actually see this money arrive? So let's start with the fundamental nature of this payment, because the terminology itself is causing a lot of worry, I think. Is it a $2,000 stimulus check? Is it a dividend payment? Or is it, something else entirely?
That's the absolute essential first step, yeah.
Right.
And we need to clarify this immediately because the language chosen by the administration is highly strategic. While the president initially used the term dividend payment, the Treasury Secretary, when he's detailing the actual mechanism for distribution, he consistently uses the term substantial tax refunds. Now, the core technical concept behind this payment is that it's being structured as an advance of a specific type of benefit, a refundable tax credit, something that would typically be claimed when an individual files their annual tax return.
Okay. Advance of a refundable tax credit. I can almost hear the collective sigh of confusion from our listeners right now. That sounds like complex financial jargon that immediately creates panic, right? Especially among our audience of retirees, veterans, or maybe those on fixed disability benefits who, well, they may not have filed a federal tax return in a decade or even more. They hear tax credit and they automatically assume, oh, I'm excluded because I'm a non-filer.
And that assumption, that's precisely the biggest point of confusion and anxiety we have to address, like right now with authority. Based on the history of these types of large-scale federal relief payments, like the ones distributed back in 2020 and 2021, the fact that it's technically an advance on a refundable credit, well, that's strictly a legal and technical mechanism. It's used for efficient distribution. It's not an eligibility barrier. The source material, drawing on the Treasury Secretary's comments, is crystal clear on this. Filing a tax return does not matter for eligibility.
Okay, that is a critical reassurance. But we need to expand on why that's true because the logic, it seems kind of counterintuitive. If it's a tax credit, why don't you need to file taxes?
Okay, yeah, good question. The key lies in that word refundable. Let's try to break down the technical difference. Maybe an analogy helps. Think of a tax credit like a coupon. A non-refundable tax credit is like a regular coupon you use at the store. It can reduce the price of your purchase, maybe down to zero, but you don't get cash back if the coupon's value is more than the item costs.
Right. Okay.
But a refundable tax credit, that's different. It's more like a prepaid gift certificate issued by the government. So if the government issues you, say, a $2,000 prepaid certificate, and maybe you only owe $50 in taxes, the government still refunds you the entire difference. That's the $1,950 in this case. Because the credit's value isn't limited by how much tax you owe.
So hang on. If I owed zero taxes because my income was really low, I'd still get the full $2,000.
Absolutely.
Yes.
And that's precisely why it's the mechanism of choice for relief aimed at low-income populations. Now, the advance part just means the government doesn't wait for you to submit paperwork in April. They plan to proactively send the money out. They use the tax credit structure to define the benefit legally, sure, but they use existing Treasury infrastructure to actually distribute it. The source analysis confirms this strong assertion. If you don't file a tax return, it doesn't really matter. Has nothing to do with that whatsoever. It's entirely a function of qualifying for the credit based on income thresholds alone.
Okay, that immediately addresses the biggest hurdle, I think, for our fixed income and retired listeners. But digging a bit deeper, how does the government know where to send the money if someone hasn't filed a return in years? I mean, back in 2020, there were significant delays and, frankly, a lot of confusion for non-filers who relied solely on Social Security or SSI.
That's a really skeptical and necessary question, yeah, given those historical issues. The reason the Treasury Secretary can be so confident now is because the infrastructure used for those previous stimulus payments, well, it remains in place. And crucially, it's been refined. The Treasury and the IRS have established data matching agreements with the Social Security Administration, SSA, the Veterans Affairs, VA, and other federal benefit agencies.
Meaning, what does that mean practically?
Practically, it means that if you're receiving regular federal benefits, Social Security retirement, SSDI, SSI, VA compensation, the Treasury already has your current address, your direct deposit information, or your direct express card data on file. They don't need a tax return to verify you exist or know how to pay you. They simply match your benefit file against the income threshold set for this new $2,000 credit. So this system, it basically bypasses the traditional tax filing hurdle for the vast majority of non-filers who receive federal payments.
Wow. So the system is actually designed to identify and pay the non-filers automatically, just as long as their income falls below that target threshold. This really speaks volumes about the political intent, doesn't it? They know this relief is fundamentally aimed at those segments of the population.
Exactly. The government is, in essence, characterizing this as a straightforward cash transfer. But they have to cloak it in the technical mechanism of a refundable tax credit for legislative reasons, primarily for speed, and establishing a legal precedent for disbursement. This political maneuvering, framing it as a tax refund rather than stimulus, that's key. A tax refund sounds fiscally responsible, right? It suggests the return of money already collected. A stimulus check sounds like new government spending, which is much harder to pass through a divided Congress.
That distinction, responsible return versus new spending, that's fascinating. And it drives directly into the political expediency, the choice of words. It's strategic shorthand, really, to make the, nearly $500 billion expenditure more palatable.
It's definitely an exercise in political linguistics, yeah.
Yeah.
And let's not lose sight of the dollar amount itself. The president's original announcement stated a dividend of at least $2,000 a person.
Mm-hmm.
Well, that at least is potent, But the base $2,000 is already a substantial headline-grabbing figure. It provides real, meaningful relief compared to some of the smaller, more targeted release packages we've seen. It sets a very high expectation right out of the gate.
The clarity here is invaluable, I think. So message is, ignore the tax language if you're a non-filer, trust the income threshold, and pay attention to the flow of information because the administration is clearly prioritizing this.
Yeah. Okay. Now we get to the core of the good news. Eligibility. This is where the source material suggests a massive expansion of aid. The income threshold being discussed by Treasury Secretary Besson is substantially higher than we originally thought, potentially making more people eligible for this than in any previous relief round. Seriously, this is big. This expansion is arguably the most surprising and financially impactful detail we've seen. Scott Besson was explicit about the income thresholds the administration is currently advocating for. For an individual, the eligibility line is set at $100,000 or less in annual adjusted gross income.
$100,000. Wow, that is a huge figure to define the ceiling for federal aid like this.
It really is, and it truly defines where the line of high income now stands, at least for this specific initiative. Now, while Besson specifically focused on the individual limit, the source analysis assumes, and it's a logical assumption, that for a married couple filing jointly, the threshold would likely double. That indicates an upper limit of around $200,000.
Okay, we absolutely have to put this in context for our audience. Let's compare this to the two previous major stimulus payments back in 2020 and 2021. For those payments, the full benefit usually started phasing out around $75,000 for individuals and $150,000 for married couples. What does this jump from $75,000 to $100,000 actually mean in real terms?
Well, it means the inclusion of a demographic we might call the squeezed middle. It really does. This includes skilled workers, maybe dual-income households, even retirees with substantial private pensions who were previously phased out of relief. Someone earning, say, $80,000 or a couple earning $160,000 who might be struggling intensely with mortgage rates, childcare costs, inflation. They are now squarely in the qualifying zone. This decision, it reflects a policy choice, I think, to recognize that the current economic squeeze is affecting families well above the traditional poverty line, deep into that middle income bracket.
Yeah, and the political framing here, linking it back to the president's original intent to be clear about not including high-income people, that's revealing. By setting the cutoff at $100,000, the administration is essentially making a public statement about what they view as the line between the struggling middle and the, financially comfortable in this current climate.
Precisely. Besson is defining high income in this context as those earning over $100,000 individually. It establishes a necessary boundary. The source emphasizes that Besson's position is firm on this. Nobody over 100 grand of income for an individual is going to get this. This clarity is crucial, but it brings us to a major financial planning detail.
Yeah.
Is this a hard eligibility cliff, or is there likely to be some kind of phase-out mechanism?
Right. That's the essential nuance for our financially astute audience. If I earn $100,001, do I just get nothing? That seems harsh.
Yeah, it would be. While the Treasury Secretary specified the $100,000 figure as the maximum eligibility, previous relief payments of this nature have typically included a phase-out mechanism. It's designed to smooth the transition and avoid that extreme cliff effect you mentioned. A phase-out basically means that for every dollar you earn above the threshold, the benefit decreases by a fixed percentage. Now, the source material doesn't detail the exact phase-out rate for this proposed $2,000 dividend, but financial precedent strongly suggests there will likely be one. That would stretch the income eligibility slightly higher, but it would reduce the total payment amount as you go up. For budgeting purposes right now, though, our listeners should probably operate under the assumption that the full benefit is guaranteed up to that $100,000 mark.
Okay, that's helpful context. And let's just reiterate the core rule of eligibility, particularly for those on fixed benefits. Does my status, as a recipient of Social Security, SSDI, SSI, or VA benefits automatically guarantee my eligibility?
No, it does not guarantee eligibility, but it does ensure ease of payment, which is important. Eligibility is always based on income alone. The type of benefit you receive is irrelevant if your adjusted gross income exceeds that $100,000 threshold, or the presumed $200,000 for couples. The source material is really consistent on this. They don't give a rip about all the other details when it comes to benefit type. The one and only determining factor is your annual income. This focus simplifies the distribution process immensely for the government and ensures that low to middle income earners are treated equally, regardless of whether their income comes from work, a small pension, or federal benefits.
Got it. So if we have, say, a retired couple who combined, maybe they receive $45,000 from Social Security, maybe $10,000 from a modest investment portfolio, and $25,000 from a private pension. Their total income is $80,000. That's well below the likely $200,000 threshold. So they qualify easily and automatically based purely on the income test.
Correct. And because they're already in the federal benefit ecosystem, their payment delivery will be streamlined through those existing Treasury systems. It bypasses any need for new applications or tax filings. This is exactly why the high-level confirmation from Besson is so important. It validates the process for the people who, frankly, need this money most urgently.
Okay, let's turn our attention now to probably the most urgent question for anyone watching their budget: the timing. When will this money actually arrive? Scott Besson's statement provided the clearest indication we have so far, he said. Substantial tax refunds coming early next year, explicitly meaning early 2026.
Right. Given that we're discussing this in November 2025, early 2026 might sound close, but the reality of the legislative process, well, that can make it seem like an eternity.
Yeah.
We really need to provide a crucial reality check here and analyze the legislative timeline in detail because Congress, it moves at a geological pace sometimes. That is the necessary tempering factor, absolutely. The enthusiasm over the announcement, it has to be balanced against the mechanical constraints of Congress. Even with high priority, writing, debating, voting on a $500 billion spending bill, that takes substantial time. The source material estimates this process takes a minimum of a month to maybe a month and a half after lawmakers even agree on the specifics.
Okay, walk us through the steps that absolutely must happen using the congressional calendar as our guide. What makes early 2026 seem almost unavoidable at this point?
Okay, well, first, the bill itself needs to be formally written and introduced. Then it goes to the key financial committees, that's Ways and Means in the House and Finance in the Senate. These committees, they have hearings, amendments get debated, the price tag is fiercely contested. This alone can take weeks, easily.
And right during this critical drafting and committee phase, we hit major legislative roadblocks that are just built into the calendar, right?
Exactly. We are rapidly approaching the major congressional breaks. Lawmakers are scheduled to leave pretty soon for their Thanksgiving recess. They come back for a short period, and then bang, the massive holiday break hits, the traditional Christmas and New Year break. If a bill is not passed and signed by the president by, say, early to mid-December, the entire process just stalls until Congress reconvenes, which is usually the second week of January.
So let's say, best case scenario, they manage to pass it in early December. What happens next? Does the money flow immediately then?
No, unfortunately not. Even if the bill is fast-tracked and signed by the president in December, the Treasury Department and the IRS need administrative time to actually mobilize. This is a crucial, often overlooked step. They have to program the computers, update all the disbursement files, implement the new $100,000 threshold verification system, confirm bank details for millions and millions of recipients, especially those non-filers we talked about. The logistical constraint alone, just the sheer need to disperse hundreds of billions of dollars accurately, that pushes the payment date into the start of the next year.
This strongly suggests that the term early 2026 isn't just some political excuse. It's a necessary buffer built around bureaucratic capacity and the realities of the calendar. And when Secretary Besson links it specifically to tax refunds, he's kind of hinting at the tax season schedule, isn't he?
He absolutely is. The traditional tax filing season begins usually late January or early February. By suggesting these payments will arrive then, he's aligning the administrative rollout of this new credit with the existing, very robust operational window for the IRS. This reinforces the projection that payments will likely start flowing in the latter half of January or early February 2026. It is really crucial for listeners to understand that while the announcement is exciting now, they must budget for this delay. This money is not a guarantee for your December utility bills.
Yeah, it sounds like the greatest threat to a swift payment isn't necessarily political opposition, but simply the sheer size and weight of the governmental machinery trying to move this fast, especially during the holidays. It's like trying to turn a massive oil tanker ship. It takes momentum and time, even if everyone agrees on the destination.
That's a perfect analogy, yeah. The political desire might be high, but the procedural hurdles are concrete. We also have to consider the disbursement methods. While the source details are a bit limited here, given this is framed as a tax refund advance, we can pretty safely assume the standard trio of payment methods will be employed.
Which are? Remind us.
Direct deposit is always the fastest for those whose bank information is already on file with the IRS, or, importantly, the SSA. Then, there are paper checks sent through the mail, which takes significantly longer and adds to the administrative backlog. And third, for many SSI and SSDI recipients, payments will likely be loaded onto their existing Direct Express cards. The administrative challenge and really the reason for that January-February timeline will be coordinating those three massive streams simultaneously across millions and millions of people.
Right. So the message on timing seems crystal clear. The money is highly likely to come, but you should probably pencil it in for early next year, allow time for Congress to clear the decks, and for the Treasury to actually flip the switch. Okay, let's transition now to the major elephant in the room that Congress absolutely must contend with, the staggering cost. Here is where the enthusiasm generated by that higher $100,000 income threshold runs directly into the hard reality of, well, budgeting.
This is the absolute crux of the legislative battle ahead. The decision to expand the eligibility threshold from, say, $75,000 up to $100,000. While it's certainly politically popular, it exponentially increases the number of eligible citizens and therefore the program's price tag. This isn't just an extra few $1,000,000 we're talking about. This is the difference between a large bill and a truly massive one.
Let's review the figures detailed in the source material again. Based on calculations for a broad but maybe slightly more targeted distribution, say covering 85% of the population at the old $75,000 level, the cost was already estimated at a pretty daunting $568 billion. What does the jump to the $100,000 threshold mean for the government's ledger?
Well, with the $100,000 threshold, which includes a substantially larger swath of the middle class, the total estimated cost skyrockets to approximately $600 billion. The source emphasizes the sheer, almost unthinkable magnitude of this figure. It's more than $500 billion. This level of spending just does not pass through Congress quietly. It will face intense scrutiny, resistance from fiscal conservatives, and almost certainly demands for offsets elsewhere in the budget.
Yeah, $500 billion is a number that creates serious political headaches, regardless of the merit of the relief itself. This brings us directly to the legislative strategy we need to anticipate. Given this enormous cost, how do lawmakers and the administration actually expect this bill to pass?
This is where we shift from kind of analysis to political calculus. The source raises a really critical strategic observation. While $100,000 is the current high-water mark being discussed by Besson, there's a very strong possibility, maybe even probability, that this threshold may be lowered significantly during the negotiation and legislative process.
Okay, so you're suggesting the administration might be using the high $100,000 figure as a form of political leverage, almost like an opening bid, knowing they'll probably have to give some ground later.
Exactly. It's a classic legislative maneuver. The explanation is purely economic and political. To make the bill an easier sell to lawmakers and secure the necessary votes, the overall price tag likely needs to drop. Lawmakers who might balk at a $600 billion expenditure will almost certainly pressure the administration to reduce the income limit to something more fiscally conservative, maybe back down to $75,000 or perhaps even a more aggressively targeted $60,000.
Well, why not just start at $75,000 then, if that's where they might end up?
Well, because the $100,000 figure generates maximum public excitement and puts significant political pressure on Congress now, if the administration starts high, they can afford to compromise down to a still generous $75,000 or maybe $80,000 and still claim a victory for delivering substantial relief. They'd be hailed as heroes for fighting to keep the limit high, even if perhaps they knew the $100,000 figure was potentially unsustainable from the very start.
That is a sharp insight into the political theater involved here. They use the enthusiasm of the middle class, who are now included, to push the bill forward, but the final legislatively feasible version might end up only targeting those who truly need this money, as the source suggests, likely meaning those on fixed or lower incomes.
And that strategic reduction, that's the key variable for our listeners to really track. If the income limit were brought down, the cost would be lowered substantially, and the likelihood of the bill passing would become significantly higher. The debate really boils down to this. Is this relief primarily for the most vulnerable SSI, SSDI recipients, the lowest income retirees, or is it a broad economic stimulus meant to include the entire struggling middle class? Right now, the $100,000 figure leans toward the latter, the broad approach, but legislative reality will likely force it somewhat toward the former, the more targeted approach.
Okay, so this means our listeners really need to understand that the $100,000 figure is, right now, more of a political statement, a target, not yet a legal guarantee baked into law.
Absolutely. We must treat the $100,000 as the current, let's say, optimal scenario being proposed. The ultimate fate of this $2,000 payment hinges entirely on whether Congress decides to prioritize broad political appeal at $600 billion or narrow targeting to manage the national budget. It's a big choice.
Okay, let's move to anticipating and maybe soothing some concerns. Focusing once again on our core audience, older adults and fixed benefit recipients who, deal with government bureaucracy daily. Despite all our clarity, I suspect the primary fear will resurface. I don't file a tax return, so I won't get it. We have to address this head on again.
We absolutely must put this concern to rest with total authority, drawing directly on the analysis of the payment mechanism. We have to repeat it. Filing a tax return has nothing to do with eligibility. The confusion is understandable, I get it, because the words tax credit are used, but we have to emphasize the process over the language.
Right. Let's reinforce the mechanism one last time. Focus on why the non-filer is safe and how the government actually handles the logistics for them.
Okay. The government system for distributing these advance payments, it relies on two main pillars. First, the income threshold, that's set by the upcoming law. If you meet that threshold, you are eligible for the refundable credit, period. Second, the government uses its existing federal benefit systems to locate you and pay you. Since 2020, the Treasury has really fine-tuned its ability to pull data from the SSA, the VA, the Railroad Retirement Board. If you receive monthly benefits from any of these agencies, Social Security, SSDI, SSI, VA compensation, your current address and bank information are already verified and secured within the Treasury's disbursement infrastructure. They have it.
So a non-filer on Social Security is essentially treated by the government as if they are an active filer who is simply claiming the benefit via an automated proactive system. Is that fair?
That's a great way to put it. Precisely. They do not need you to submit a Form 1040. They just need confirmation from the SSA, for example, that your income falls below the legislated limit. The system is designed to identify you automatically, deposit the money through the existing channel, direct deposit or direct express, and notify you afterward. This is a critical distinction that should provide some peace of mind. Your income is the only factor that matters for eligibility.
Okay. Beyond the logistical concerns, let's look at the political dynamic for a moment. The source suggests that public support and enthusiasm are actually vital. That is, the energy and excitement generated by discussions like this one are actually critical to pushing a, $500 billion bill through a slow-moving Congress. That seems counterintuitive.
Well, political momentum is the fuel for enormous spending bills like this. If the public remains silent or seems skeptical, lawmakers feel no urgency. The political analysis suggests that if the population doesn't engage, if they don't seem interested, lawmakers might decide, well, maybe the public doesn't give a rip about the $2,000, making it easier to just let the bill die quietly in committee.
But the opposite happens when the public shows sustained interest and lets their voices be heard.
Absolutely. When lawmakers see widespread discussion, excitement, a sense of anticipation, when our listeners share this information, when they maybe ask their representatives about it, it creates a powerful psychological effect on Capitol Hill. Lawmakers perceive that the people are all jacked up, as the source puts it, and they're eagerly anticipating this payment. This perceived demand increases the urgency and the political likelihood of the bill actually passing. It validates the need for this level of spending in their eyes.
Wow. So for our audience, staying informed and sharing this information isn't just passive learning. It's actually an active form of advocacy. By demonstrating that this $2,000 payment is important to them, they are directly contributing to the political pressure needed to overcome that $600 billion price tag hurdle.
It creates a mandate, essentially. When the public demonstrates that this level of financial relief is desperately important to them, it weighs heavily on the minds of the people who have to vote on the allocation of those funds. This is a crucial, practical way to help ensure the $100,000 target, or maybe something reasonably close to it, survives the inevitable congressional haggling.
Okay, one last crucial point. We must briefly address the potential for scams, which always proliferate when large payments like this are announced. What is the one ironclad rule our listeners absolutely must follow?
The number one rule, and it cannot be stated enough times, is this. The IRS, the SSA, or the Treasury will never call you, text you, or email you asking for money, personal information, or demanding that you pay some kind of fee to release your payment. Never. This payment is automatic for those who qualify. If you receive any contact demanding payment or threatening to withhold your money, it is 100% a scam. Trust only official letters sent through the U.S. mail or verified government websites like ssa.gov or irs.gov. Stay vigilant, please, because scammers follow these news cycles very, very closely.
Okay, we have completed a pretty comprehensive deep dive into what is arguably the most significant financial relief discussion currently unfolding in Washington. Let's summarize the key facts you need to remember as you plan your finances for the coming months.
All right. First, the amount. This proposal centers on a payment of at least $2,000 per person. Could be more, but $2,000 is the baseline.
Second, eligibility. The current political target, the goal, is individuals earning under $100,000 and married couples likely under $200,000. We must reiterate, income is the sole determining factor, regardless of whether you receive Social Security, SSDI, SSI, or VA benefits.
Third, timing. Due to the legislative process and those congressional calendar breaks we discussed, the payment is anticipated for early 2026, most likely starting in late January or early February, aligning with the tax refund schedule.
And fourth, how it works. It's structured as an advance on a refundable tax credit. This is the crucial point for our audience. You do not need to file a tax return to receive this payment if your income falls within the threshold. The government has existing benefit infrastructure to pay you automatically.
Right. And as we conclude, let's just revisit that final, maybe provocative thought. The ultimate shape of this relief, who actually gets it and how much it ultimately costs, is entirely dependent on a fierce internal debate over prioritization. Will lawmakers yield to the immense public enthusiasm and try to pass the broad but very expensive $600 billion bill, knowing they face significant resistance? Or will they prioritize legislative feasibility by lowering the income threshold, making sure the payment is tightly targeted toward the most vulnerable fixed-income citizens?
The outcome really hinges on that choice between broad reach and immediate need. Your knowledge of these specifics, what we've talked about today, is your best financial protection. It allows you to manage expectations and budget accurately. We strongly encourage you to share this valuable information with friends or family who are also anxiously watching their finances. Stay informed, stay vigilant against those scams, and we will be here to provide the next piece of critical clarity as soon as the negotiation. Okay, we are hitting the ground running today with some really big financial news, a development that could affect millions.
Absolutely. We're talking about potential $2,000 payment.
Right, a $2,000 dividend targeted directly at low and middle income Americans, the folks perhaps struggling the most right now.
And this isn't just like some think tank idea floating around.
Oh, not at all.
This is coming directly from recent, very public statements, posts and endorsements from the president.
Yeah, so the idea is an immediate cash boost. Call it a dividend, a rebate, maybe a stimulus check, whatever term you prefer.
But the key thing, the really important part for our listeners, is who it's aimed at.
Exactly. It's specifically looking at people on fixed incomes. So think Social Security, SSI, SSDI, veteran benefits too, millions of people.
The potential eligibility here, that's the strongest signal we've seen in a while for this kind of direct payment.
It really is. So if you're low income or maybe middle income, this payment, and it's a substantial $2,000 per person we're talking about, this could genuinely be for you.
Which is why we need to unpack it carefully.
That's our mission for this deep dive, really. To guide you through all the layers, we need to look at exactly who they mean by low and middle income.
Yeah.
We need to understand the funding. How are they going to pay for it? It's tied specifically to this idea of massive tariff income.
Which is a whole topic in itself.
Definitely. And then there are the big questions, the really crucial ones. Is this politically actually going to happen? Does the math even work?
And maybe most importantly for you listening, what about protections? Will this money actually help? Or could it mess up your current benefits? Those legal safeguards are vital.
Yeah, that's non-negotiable for many people.
And the politics are huge here because, well, the sources we're looking at point out this isn't the first time this idea has come up.
Right. It's like the fourth time since January.
Something like that. Different versions, different amounts, but the core idea of distributing money directly keeps reappearing.
So we have to look hard at the funding math. This tariff idea, is it really going to cover it without adding to the debt like they claim?
And we need to analyze the specific words they use. That phrase, low and middle income USA citizens, that's what gives hope, right?
It does.
But then there's this complete silence on the legal protections, the things people on fixed incomes absolutely need clarity on. It's a real contrast.
Okay, let's unpack this properly then. We're diving into this this massive update about a $2,000 payment. It's been put forward and then, really emphasized again very recently by the president.
Won't double down on it.
Exactly. And for our community, for listeners who rely on fixed income, this might be the single biggest piece of financial news this whole year, just because the language seems so, targeted this time.
And we absolutely get that anticipation. I mean, when you're living on a fixed budget, right, and inflation is just eating away at everything.
Yeah, outpacing COLA adjustments easily.
Right. A sudden $2,000 isn't just like a nice little extra.
Yeah.
It could be the difference. Paying a big medical bill, catching up on rent, utilities.
It's a potential lifeline.
It really is.
Mm-hmm.
And because of that, we owe it to you, the listener, to really scrutinize every single detail we have. Rigorously.
Couldn't agree more. So our mission today, it's really custom tailored for you, especially if you're one of the millions, low income, fixed income, receiving Social Security, SSI, SSDI, VA benefits.
All those groups.
And you've been watching these headlines thinking, okay, but will I actually get this? Or am I going to be left out again because I don't file taxes? Or just because I get benefits?
And those are valid worries based on past experiences.
They really are. We remember the confusion last time, the stress around the stimulus rollouts.
Yeah, eligibility often seemed tied directly to filing a tax return, which, immediately creates hurdles for many low-income seniors, people with disabilities, folks who just aren't required to file.
Exactly. They got left out or faced huge delays.
But this new messaging, the way it focuses squarely on income status, that feels different. It signals a potential shift, and that's something we need to celebrate, but also examine really closely.
Okay, so the core announcement, it came via these presidential posts online. Initially, it sounded quite broad, like a $2,000 payment for everyone, but then, crucially, not including high-income people.
Right, and that initial wording, everyone, that caused a bit of confusion, didn't it?
It did, because everyone could mean a lot of things. But the clarification came pretty quickly after that.
Yes, that follow-up post was key. It defined the group much more clearly as, and this is the exact quote, low and middle income USA citizens.
And that phrase, low and middle income USA citizens, that's the linguistic key, isn't it? That unlocks the potential for our audience.
Absolutely. It immediately narrows the focus. It moves away from, say, your tax filing status and puts the emphasis squarely on your economic situation, your income level.
So by cutting out the high earners and focusing on low and middle brackets.
It inherently sweeps in the vast majority of people who rely on fixed income benefits like Social Security, SSI, VA payments. Their income levels generally place them firmly in those categories.
And this is where it gets really, really interesting for the low-income community specifically. This clarification, it really suggests genuine hope for benefit recipients. It feels like an acknowledgement of their economic vulnerability. So let's guide you through the details now, starting with, okay, what do they actually mean by low and middle income?
Okay, let's start with the basics. The specifics of the payment itself, based on what the president has stated.
Right, the amount seems clear.
Yes, it's described as a dividend of at least $2,000 a person. At least $2,000.
And we mentioned the language shift. It started a bit vague, everyone. Not high income.
Correct. But that follow-up, that commitment that the $2,000 would go to low and middle income USA citizens, that's what makes this proposal feel different.
Why is that specific wording so important?
Well, it strongly suggests that eligibility will be determined using income data the government likely already has. From Social Security, the VA, maybe past IRS records for others.
Instead of requiring everyone to file a new tax return just to claim this one payment?
Exactly. Which, as we discussed, was a major hurdle for the fixed income community in the past.
Yeah, absolutely. For years, seniors, people with disabilities living solely on benefits, often falling below that income level where you even need to file taxes.
Which is a pretty low threshold for most seniors.
Right. They face these complicated delays. Sometimes they were just excluded entirely from payments distributed mainly through the IRS tax system.
So the significance of explicitly saying low and middle income, it's potentially profound for this community.
It feels like it.
It strongly suggests these groups are the intended recipients.
Yeah.
And that the method of getting the money out will probably leverage existing data from agencies like the Social Security Administration or the VA, not just the IRS.
So it shifts the focus away from the technicality of, did you file taxes?
Exactly. And puts it squarely onto the person's actual economic need, their income level.
Which makes sense, right? If the real goal is effective economic relief for people being squeezed by rising costs, utilities, food, housing, what we call the fixed income squeeze.
Then targeting low and middle income is the most direct, logical way to do it.
Yeah, it seems obvious when you put it like that.
And we really need to emphasize this. Historically, the main way stimulus has been distributed is based on income.
Okay.
What's really noticeable here is what wasn't said. The source material, the posts, they don't mention anything about needing to file a tax return. Not a word.
That's a significant omission.
It is. Based on the last couple of big stimulus rounds, the core factor seems to be your income level. And for anyone getting SSI or maybe lower Social Security payments, their income automatically puts them in that low-income bracket.
Okay, so that brings us to the big unknown, but we have to talk about it. Defining high income. Where's the cutoff?
Correct. We're definitely speculating a bit here on the high-income threshold, because the official line in the sand, that specific dollar amount defining who's high income and thus excluded, that's missing.
We don't have the legislative language yet.
Exactly. So we have to look back, use historical precedent to give you, the listener, the most likely scenario.
And what does history suggest? What were the cutoffs like for the stimulus packages a few years back?
Based on those, the speculation centers around roughly $75,000 for an individual.
Okay, $75K for a single person.
And probably around $150,000 for a married couple filing their taxes together.
Let's pause on that $75,000 figure for an individual. Why is that number so critical for our listeners, particularly those on fixed incomes?
Well, because the vast majority of people receiving fixed benefits fall dramatically below that level.
Dramatically.
Even someone getting the absolute maximum Social Security retirement benefit possible is still well under $50,000 a year.
Right. And SSI recipients, by definition, have almost no other income to even qualify for SSI in the first place.
So that $75,000 threshold, it acts like a really big reassuring buffer.
Right.
If they set the cutoff much lower, say, I don't know, $35,000 or $40,000.
It would start cutting into the middle class, maybe even some higher Social Security earners.
Exactly. But setting it up there, $75,000 or maybe even a bit higher, it confidently includes pretty much everyone listening who is retired, has a disability, or relies on fixed benefits.
And we can kind of ground that speculation in wider statistics too, right? The average household income last year was around $83,000.
Approximately, yes. So if the stated goal is to reach middle-income Americans, they really can't set the exclusion threshold below the national average household income. It wouldn't make sense politically or economically.
Yeah, that tracks.
So setting that cutoff somewhere in the $75,000 to maybe $100,000 range for individuals, that reinforces the idea that the plan is likely to include the vast majority of middle-income earners, while maybe excluding the top 10, perhaps 15% of earners.
Which lines up perfectly with saying it's for low and middle-income USA citizens.
Precisely. So wrapping up this first part, the who seems pretty clear and frankly quite promising for our audience right now.
Okay, so part one gives us strong clarity on the who. Explicitly low and middle income, which effectively means the fixed income community is almost certainly included. Great. Now we have to shift gears, big time, to part two. The complex, maybe messy financial reality. How do they plan to pay for what could be $500 billion?
Right. This is where it gets maybe less straightforward.
Yeah.
We move from social policy, who gets the money, into the weeds of political economics.
The big question, where does $500 billion or something close to it suddenly appear from, especially without sparking a huge political fight about adding to the national debt?
The proposed answer, the mechanism they're pointing to, is the source of the funds, tariff revenue.
Okay, tariffs.
The proposal specifically says the money comes directly from massive tariff income. This is presented as the key element, making the whole thing financially viable and supposedly debt neutral over the long haul.
We should probably quickly define tariffs, just for clarity.
Good idea. So tariffs are basically taxes. Taxes that the U.S. government puts on goods and services imported from other countries.
And who pays those taxes?
Technically, the importing companies here in the U.S. pay the tax to the government. But realistically, those costs often get passed along down the chain, potentially ending up in the prices consumers pay for those imported goods.
Got it. And this massive tariff income the president talks about, is it really that massive?
Well, the numbers are actually pretty staggering. Recent reports suggest the U.S. has drawn in something like $195 billion in tariff revenue just so far this fiscal year.
Wow, $195 billion already. That's a lot.
It is. It works out to roughly $30 billion coming in each month just from these import taxes.
Okay.
So if you project that pace out for a full year,
You get to.
around $350 billion over a 12-month period. That's the current annual projection based on the pace so far.
$350 billion a year from tariffs.
Okay. But I remember seeing even bigger numbers mentioned
Yeah.
long term. Yes, that's where the real scale of this proposed funding mechanism comes in. The same research projects that over the next 10 years, the U.S. could collect over $3 trillion in tariff revenues.
$3 trillion over a decade.
That's the projection. It's an almost unimaginable amount, and politically, It's what gives this proposal its financial backing, its perceived long-term stability.
Because it allows the administration to say, look, we have this huge, dedicated, ongoing revenue stream specifically for this purpose.
Exactly. It provides the necessary political cover, but, and this is a big but, we have to look at the math problem.
Yes, the math.
This is where the funding gap, at least in the short term, becomes pretty clear.
Okay, let's run the numbers. How much would it actually cost to send $2,000 to everyone who might qualify?
To get a reasonable estimate, we can look back at the last big stimulus payment. That $1,400 check reached about 85% of the U.S. population.
Okay, 85%. How many people is that?
That worked out to roughly 284 million people, and importantly, that included adult dependents as well.
Gotcha. So 284 million people times $2,000 each.
If you multiply that out, the total cost comes to $568 billion.
Okay, let's just sit with that number. $568 billion. More than $500 billion.
It's a colossal figure. No way around it.
And that immediately highlights the short-term issue, right? We just said the annual tariff projection is maybe $350 billion?
Correct. So you compare the $350 billion projected annual revenue against the $568 billion needed. Even using the most optimistic annual revenue number, there's a huge shortfall. Over $200 billion short for just 1 year.
The annual tariff income is only about 60% of what's needed for that high-end cost estimate.
Now, we should probably qualify that $568 billion figure. As we established, that's likely the highest possible estimate.
Because the proposal explicitly excludes high-income earners.
Exactly. So if we assume, maybe, that the exclusion criteria removes the top 15 or 20% of earners.
The total cost would come down?
Right. Maybe significantly. Perhaps closer to, say, the $400 billion mark. That feels like a more realistic ballpark figure once you account for the high-income exclusion.
Okay, let's use $400 billion as a working number then. Even at $400 billion, compared to the $350 billion annual tariff income.
You're still short. About $50 billion short, just based on 1 year's projected revenue.
So how can they promise a payment now if they don't have the full amount collected this year? How does that work?
This is where that 10-year projection becomes absolutely crucial, that $3 trillion figure over a decade.
Okay.
If that projection holds true, then $400 billion, while huge, becomes a relatively small fraction of the total revenue expected over 10 years. Spread out over a decade, that money is definitely there, backed by a very large projected income stream.
Right, but that leads directly back to the listener's most urgent question. Does this mean we have to wait 10 years to get the money?
And the answer has to be no, right? The whole point is immediate economic relief.
Exactly. So how would the government actually structure this? How would the payment be financed to get cash into people's hands, say, within the next 6 to 12 months?
Well, the timing pretty much dictates the method. They'd have to use a classic government financing technique, something often used for big infrastructure projects or even war funding historically.
Which is?
Essentially, they'd have to borrow the money today. They need to front the money now, get it out the door quickly,
Okay.
and then pay back that borrowed amount over time using the guaranteed stream of future tariff income that's projected to come in over the next decade.
Hold on. Let me push back on that a bit. If they're borrowing the money now, even if they plan to pay it back later with tariffs, aren't they still technically adding $400 billion or whatever the final number is to the national debt right now?
That's an excellent point and a necessary clarification.
Is calling it debt neutral just political spin for we'll pay the debt back later?
Okay, fiscally speaking, in the immediate moment, yes, you are absolutely correct. Borrowing $400 billion today adds $400 billion to the national debt figure today. However, from an accounting perspective, and definitely from a political messaging perspective, the term debt neutral gets used in situations like this. When a new spending liability, the $400 billion payment, is directly linked to and backed by a brand new, dedicated, and sustained revenue stream, the $3 trillion in tariffs that wasn't previously earmarked for something else.
So it's like taking out a loan, you have the income to repay.
Exactly. It's viewed differently than just adding spending without identifying a way to pay for it. It's more akin to securing a short-term loan that is guaranteed to be repaid by this massive ongoing revenue source. Think of it like maybe issuing revenue bonds to build a new toll road where the future tolls pay off the bonds.
Okay, that context helps make sense of the debt neutral claim, even if the debt number goes up temporarily.
Right. It temporarily increases the debt figure,
Right.
but the government views it as essentially self-liquidating debt because the repayment mechanism is built in.
Got it.
And we also need to put that $400 billion figure into perspective. As the source material we looked at points out, the government is already adding billions to the national debt every single day through its regular operations.
That's true.
So adding another $400 billion now, specifically to get $2,000 into the hands of millions of low and middle income people, especially when that borrowing is backed by the huge $3 trillion tariff projection. Well, from a government borrowing standpoint, it's financially feasible. The markets would likely see it as a manageable liability because the repayment stream is identified.
So the financial capacity seems to be there provided those tariff projections are accurate and hold up over time.
Pretty much. Which means the main hurdle shifts from can we afford it to do we have the political will to do it, to accelerate the distribution, borrow the money up front, knowing it will make the debt figures look bigger in the short term, even with that guaranteed payback plan.
The math works long term but requires action now.
Precisely. The math, yeah, it's a bit tight this year, but it works out over the decade because the projected tariff revenue is just so enormous.
Yeah.
So the possibility is absolutely real, but it's contingent on them actually moving forward.
Okay, this brings us perfectly to part 3. And this is the section that honestly matters most for our audience, especially those living on fixed incomes. Because even if the government figures out the funding and sends the money, will it actually benefit people? Or could it inadvertently cause harm by messing up their existing essential support programs? This is the crucial deep dive into the unknowns and the absolutely essential protections.
Yes, and this section highlights, I think, the most critical gap in everything that's been announced so far.
How so?
Well, while the administration has been, pretty vocal and enthusiastic about the $2,000 amount and the tariff funding.
Yeah, we've pushed that hard.
They have. But they've been completely silent on the legal nuts and bolts, the specific rules needed to actually protect the people this money is supposedly intended to help.
So even if the money could be funded and sent out relatively fast,
We still have zero details on the practical side of things, like payment schedules, when exactly would it arrive, specific dates, nothing.
or how it would arrive, direct deposit, paper check in the mail.
Or, for many benefit recipients, would it come on their Direct Express card? We just don't know. Because there's no official legislation filed yet, no formal executive order laying out these specifics.
Okay, that's the practical uncertainty. But you mentioned a more critical gap.
Yes, the financial protections, or rather, the complete lack of information about them. And this is especially vital for our audience on fixed incomes. The sources we reviewed provide no information on these crucial safeguards.
We need to explain why the absence of these details isn't just an inconvenience, it's potentially dangerous.
Absolutely. A lack of clear legal protection could turn what looks like a $2,000 blessing into a potential nightmare, costing someone far more in lost benefits down the road.
Okay, let's break down the key protections needed one by one and explain why each one is so critical for someone on, say, Social Security, SSI, or Medicaid.
All right. First up, taxability. Is this $2,000 payment going to be considered taxable income, or will it be tax-free?
Why does that matter so much for low-income folks?
Because for many people who don't normally file taxes or are right on the edge, getting an extra $2,000 classified as taxable income could suddenly mean they have to file a return, or it could lead to an unexpected tax bill they can't afford.
We saw some confusion with past stimulus payments being structured as advanced tax credits, right?
Yeah, it did. Complicated things. And this dividend language is new. If the IRS decides a dividend is just regular taxable income, it could create huge headaches for people least equipped to handle them. So clarity on tax-free status is protection number 1.
Okay, protection number 1, is it tax-free? What's number 2?
Number 2 is arguably the most critical for people on means-tested benefits. Will this $2,000 payment affect eligibility for programs like SNAP, food stamps, Medicaid, or supplemental security income, SSI, or even subsidized housing?
We need to quickly explain means-tested.
Right. Means-tested programs are benefits where your eligibility depends not just on how much income you have coming in, but also on how much you own your assets, your resources.
And SSI is maybe the strictest example.
Definitely. For SSI, a single person generally cannot have more than $2,000 in countable assets at any given time. For a married couple, it's $3,000. These limits are incredibly low and haven't been updated in decades.
So picture this. A person on SSI gets a direct deposit of $2,000.
Instantly. If that money just sits in their bank account, even for a short time, and isn't spent immediately.
It could push them over that $2,000 asset limit.
Exactly. And if that happens, even if they got the payment, if it's not legally classified in the special way like non-countable income or a disregarded asset, for a period of time, It could trigger an overlimit notice from Social Security.
Which could mean
They could lose their entire monthly SSI check, which for many is their only income, the money that pays for rent and food. Or, perhaps even worse, they could lose their Medicaid coverage.
And Medicaid is often worth tens of thousands a year in essential health care.
Absolutely critical health care. Losing that lifeline because of a one-time $2,000 payment would be financially catastrophic. It makes no sense.
This is exactly why the structure of the payment, the legal language surrounding it, is actually more important than the dollar amount itself for many people.
Precisely. In the past, emergency payments like stimulus checks were protected by specific language in the laws that created them. They were often declared disaster relief or something similar, which meant they wouldn't be counted against asset limits for means-tested programs, usually for 12 months.
But without that specific protective language in this proposal,
This $2,000 payment could be incredibly risky for SSI and Medicaid recipients.
Yeah.
Protection number 2. Explicitly state it doesn't count against asset limits.
okay, taxability asset limits. What's protection number 3?
Third, we need clarity on Medicare premiums. Will this payment impact them?
How could a one-time payment affect ongoing Medicare costs?
It relates to something called IRMAA, the Income-Related Monthly Adjustment Amount.
Okay, IRMAA. Break that down quickly.
Basically, if your income from 2 years ago, your modified adjusted gross income, or MAGI, goes above certain thresholds, Medicare charges you higher premiums for Part B, medical insurance, and Part D, prescription drugs.
So an extra $2,000 in income reported for this year could potentially trigger higher Medicare premiums 2 years from now.
Potentially, yes, especially for people whose income is already close to those IRMAA thresholds. A one-time bump could push them over the edge, leading to hundreds, maybe thousands of dollars in extra Medicare costs per year, ongoing. Again, devastating for someone on a fixed income.
So protection number 3 is ensuring this payment doesn't count towards the income calculation for IRMAO.
Exactly. It needs that specific exemption.
All right. Taxability, asset limits, Medicare premiums. Is there a fourth key protection needed?
Yes, absolutely. Garnishment protection. Is this $2,000 payment safe from being seized by debt collectors or for other debts?
Explain why that's a concern.
Many people on fixed incomes are dealing with debt. It could be medical debt, old credit card bills, maybe even federal debts like defaulted student loans or back taxes.
So if this $2,000 just lands in their bank account,
Without specific legal protection saying it's exempt, creditors who have a judgment against that person or even government agencies collecting certain debts could potentially garnish or seize those funds right out of the account.
didn't we see that happen with one of the earlier stimulus payments?
We did. Initially, the first round of stimulus checks wasn't explicitly protected from all types of garnishment. Debt collectors were grabbing the money until Congress had to rush through follow-up legislation to shield those specific payments.
So protection number 4. Explicitly make the funds exempt from garnishment by private creditors and most government debt collection.
Correct. So, to summarize the danger here, we must strongly caution you, the listener. Until we see official legislation or a formal executive order is issued, all these absolutely essential details, tax treatment, impact on SNT Medicaid SSI, effect on Medicare premiums, and protection from garnishment, they remain complete unknowns.
And without those protections clearly written into law.
This proposed $2,000 payment could, tragically, cause more financial harm than good for some of the most vulnerable people it's supposed to help.
That stark lack of clarity on protections naturally leads us to the question of credibility. The idea sounds good, the long-term funding maybe works on paper with the tariffs, but this isn't the first time we've heard promises like this. Why should anyone believe this fourth attempt is the one that will actually deliver?
That's the million-dollar political question, isn't it? Because this history of repeated promises, it creates an enormous political liability for the administration.
As we mentioned, this is now, the fourth time since January that the president has either proposed or endorsed some form of direct payment to citizens?
That pattern is undeniable. On one hand, you could say it shows consistent commitment to the idea. On the other hand, it also paints a picture of recurring difficulty in actually making it happen.
Let's quickly recap that history just for context, because it shows how the promise has kind of evolved and grown.
Okay, well, way back near the start of the year, there was that kind of out there mention of a $5,000 Doge dividend.
Right, tied to cryptocurrency. That one felt pretty unlikely.
Met with widespread skepticism, yes. But it did plant the seed of this direct cash transfer idea again. Then later, things got a bit more grounded.
With the American Worker Rebate Act?
Exactly. A formal bill was introduced, proposing a $600 rebate check,
Huh?
and the president endorsed that specific legislation. That felt more concrete.
Okay, $600. Then what happened?
Then, more recently, maybe around early October, the amount seemed to jump up again. In a separate interview, the president mentioned the idea of a distribution or dividend somewhere between $1,000 and $2,000.
Getting closer to the current number.
Right. And now we have this latest, very specific announcement. $2,000 explicitly for low and middle-income Americans, funded specifically by tariffs. It's the most detailed version yet.
The enthusiasm around this $2,000 figure, especially targeted this way, is obviously huge. Politically, it's a winner if they deliver.
Massive potential upside. But the risk associated with this pattern of promises is directly proportional to how big and specific the promise has become.
Meaning
Failing to follow through now after 4 separate endorsements, each getting more specific and raising expectations higher. That would be a colossal political blunder, potentially career-defining, in a bad way.
the sources we looked at use the phrase painting themselves into a corner.
That's a perfect description. They've set an expectation now that is incredibly specific. Low and middle income get $2,000 paid for by tariffs. If this proposal now gets floated again, generates all this buzz, and then just disappears or stalls indefinitely in Congress.
They risk losing massive credibility.
Especially with the exact group. They seem to be trying hardest to reach the low-income, fixed-income voters, people struggling with costs. It could completely backfire.
The sources use that analogy.
Yeah, the risk is becoming the political equivalent of the boy who cried wolf, or maybe more accurately here, the president who cried stimulus way too many times. People will just stop believing it.
So politically, the pressure to actually deliver this time is immense.
You could argue the only politically viable path forward for them now is to actually fulfill the promise. They've almost left themselves no other option without suffering major consequences.
Okay, so until that crucial piece of legislation or that executive order appears, spelling out the details and protections, what should you, the listener, be doing right now? Any actionable advice? What should you be wary of?
Okay, 2 key things. First, some reassurance. At this moment, there is absolutely no application needed. Don't go looking for one.
Why not?
Because based on all past stimulus payments and how this is being described, tied to income levels, eligibility will almost certainly be determined automatically using data the government already has from the IRS, Social Security, the VA.
So if you got previous stimulus checks, or if you currently receive federal benefits,
You are very likely already in the system. They probably have your bank account information for direct deposit or your Direct Express card details on file. So step 1 is just wait for official instructions. No need to apply anywhere right now.
okay, that's reassuring. What's the second key thing?
The second thing is the crucial urgent scam warning.
Always important with these announcements.
Absolutely critical. Because the details are still unofficial, based only on these public posts, scammers will try to exploit the confusion and anticipation.
How?
You need to be extremely cautious. Only trust information that comes directly from official government sources. We're talking official letters in the mail from the IRS or Social Security, or information published on verified government websites, irs.gov, ssa.gov, va.gov.
And what will government agencies never do?
They will never call you, text you, or email you out of the blue asking for your personal information, like your Social Security number or bank account details, to process your payment. They will never ask you to pay a fee or buy gift cards to get your money.
So if someone contacts you saying you need to provide info or pay something to get your $2,000 check,
It is 100% a scam. Hang up the phone, delete the email or text, do not click any links, report it if you can.
good advice. So the moment anything official is announced, like application procedures, if any, specific payment dates, how the money will be delivered, we will share that official verified update immediately.
Yes. But until then, treat any unsolicited contact about this payment with extreme skepticism. Protect your information.
Okay, let's try to bring this all together then. We've covered a lot of ground. So what does this all mean for you, the listener, especially if you're on a fixed income?
Let's summarize. We have a clear, repeated endorsement, recently emphasized again, for a $2,000 payment.
Specifically aimed at low and middle income USA citizens. That part seems clear.
Yes. And the proposed way to pay for it is through massive tariff revenue. That's the funding mechanism they're pointing to.
Which makes the long-term math seem possible, even if it requires borrowing the money up front and paying it back over the next decade using those tariff projections.
Right. So the immediate focus really shifts now. It's less about who qualifies, because the answer seems to be nearly everyone on fixed, low, or middle income, and more about will they actually follow through this time.
And crucially, will they include the protections?
That's the absolute key. The financial mechanism to borrow the $400 to $568 billion needed, backed by the $3 trillion tariff projection, it exists. The government can do that. But the political will has to translate into actual official legislation or an order.
And that legislation must include those non-negotiable legal protections we detailed. Tax-free status, no impact on means-tested benefits like SSI and Medicaid, no IRMAA trigger for Medicare, and exemption from garnishment.
Without those protections, the whole thing could unravel for the very people it's meant to help.
And we really understand the emotional weight behind this news. We know that for many people listening, $2,000 could be genuinely life-changing.
Absolutely. It could provide that desperately needed breathing room, help catch up on bills, cover a major expense, maybe just offer a bit of dignity and reduce stress for those struggling with rising costs month after month.
The anticipation, the hope tied to these announcements, it's immense. And that's exactly why the pressure now is for action, not just more talk. Rhetoric needs to turn into real relief.
And that's why we're going to keep watching this story incredibly closely, day by day, really.
What are we watching for specifically?
Our primary focus going forward will be on any movement towards official legislation or an executive order. We need to see the final legal structure. Specifically, are those benefit protections we talked about, especially for SSI, Medicaid, SNAP, explicitly included in the language?
We also need to see the final official income cutoff levels defining high income.
Yes. And ultimately, whether they actually proceed with the plan. You need these updates as soon as they happen, because you need to know if this money is coming and if it's safe for you to receive without jeopardizing your other essential support.
Okay. Now, before we wrap up, let's leave you with a final provocative thought to consider.
Okay. If, and it's still an if, but if they do successfully send out this $2,000 to low and middle income Americans.
Using the tariff money as proposed.
Right. And the president in his posts specifically mentioned that even after doing that, there would still be money left over from the tariff income to pay down our debt.
Implying the tariff income is even larger than the cost of the payments plus servicing the initial borrowing.
Exactly. So if that's true, if the math works out so well that they can distribute $400 billion or more to citizens and still have a surplus from tariffs to reduce the national debt, what does that tell us?
It raises a really interesting question about the sheer size and capacity of this tariff income stream. How much money are we actually talking about here beyond this one-time payment?
Precisely. Could this massive, dedicated revenue source, funded entirely by taxes on international trade, mean that this $2,000 payment isn't just a one-off emergency measure?
Could it be the start of something more permanent?
Could it potentially lay the foundation for a recurring citizen dividend, a new baseline of economic support for low and middle-income Americans, paid for consistently by this tariff revenue, fundamentally changing the social safety net?
Wow. That's a big thought, a recurring payment funded by tariffs.
It's definitely something to mull over. It shifts the perspective from short-term relief to potentially long-term structural change. Something to keep in the back of your mind as we wait for the next official update on the protections and the payment plan for this initial $2,000.
A very compelling thought indeed. We will, of course, keep you updated every step of the way. We'll catch you next time for the White House has really doubled down on a commitment here.
They really have. A big one.
And it could mean a $2,000 plus direct payment?
At least $2,000, yes.
Right.
Or a dividend, as they're calling it.
Right, a dividend. Landing in the pockets of, millions of people. Retirees, folks on Social Security, SSDI.
And low-income beneficiaries. We're going to break down the 5 key pieces of evidence from some really high-profile officials.
We're talking Treasury Secretary, the President's economic advisor, people who are pushing hard for this money.
Exactly.
Yeah.
We'll cover who qualifies, the source of the funding, which is tariffs, interestingly enough, and the timeline you need to know about.
And this isn't just talk, right? This feels like a clear commitment, one that puts the administration under, immense political pressure to actually deliver.
It does. So stay with us to get the facts, and just as importantly, to understand the financial protections that have to be in place for this money to truly help you.
Welcome back to the Deep Dive. This is the place where we try to cut through all the noise and just deliver the essential facts you need. And today, we are laser focused on a financial update that is, I think it's fair to say, generating a lot of hope and maybe some anxiety, too.
For sure. especially for those of you on fixed incomes.
Exactly. Are retirees on Social Security, people receiving SSI, those on Social Security disability insurance, and of course, low-income veterans.
We know how critical financial security is.
And when you start hearing high-level government officials promising thousands of dollars in direct payments, you need clarity. You need comprehensive clarity, not just bits and pieces of rumors.
And that's our mission today. It's very specific. We're going to isolate these recent high-level political commitments around this potential $2,000 dividend payment.
And really dissect the official sources.
Yes, we have to move beyond just the headlines. What do the actual words being used by the president, by his top financial advisors, what do they reveal about the real likelihood of this payment?
And the mechanics behind it, right? The funding, the legislative steps that absolutely must happen before a single dollar gets delivered.
That's the key.
Okay, so let's just anchor ourselves right away to that core promise. We are talking about a proposed payment of at least $2,000.
At least. That's the floor they've set.
And I think the biggest difference between this and, past relief efforts is just the scale of the public commitment.
I agree. By having so many different, highly visible people confirming this number.
They've kind of painted themselves into a corner. I mean, the political cost of failing on this promise now is just incredibly high.
It's huge. And to really understand the weight of that commitment, we have to start with how they're planning to pay for it, the funding mechanism.
Right, because this is not being framed as a typical stimulus check, which, usually adds to the national deficit.
No, this is deliberate. They're framing it as a rebate, or that word again, a dividend.
And it's funded specifically by tariff revenue.
Specifically, money collected from taxes on imported goods. That's the plan.
That distinction, framing it as a dividend from tariffs, that feels like the whole political game right there, doesn't it?
It's the crux of the maneuver, yes. We heard directly from the president's economic advisor, a man named Kevin Hassett.
And he said what, exactly?
He stated explicitly that the tariff revenue that's coming in would be enough to cover the cost of these $2,000 checks.
Without having to, what was the phrase, dig into the rest of the budget.
That is the pivotal claim. It's designed to immediately quiet down any concerns from, fiscally conservative lawmakers or critics of deficit spending.
Well, this is where we have to be careful, right?
This is where we need to introduce a note of critical caution.
Yes.
Well, the administration is insisting the money is there from tariff revenue.
Some outside analyses aren't so sure.
Exactly. Some external financial analyses suggest that the year-over-year tariff numbers, which can be, very volatile.
Up one year, down the next.
Right. They might not perfectly line up with the total amount of money needed for a payment of this scale to millions and millions of Americans.
So, okay, if the math is even a little shaky, why commit so heavily to the tariff funding idea?
It's all about political strategy and, frankly, optics.
Okay.
By attaching the payment to a dedicated existing revenue stream, these tariffs, they're trying to depoliticize the costs.
They're saying this isn't new spending.
This is just us returning money that was already collected at the border. It's a powerful message. If they were to back away from that tariff funding claim later on.
The criticism would be immense.
Not just from the opposition, but probably from within their own base who like that non-deficit approach.
So the commitment to the amount, $2,000, that's strong. And the commitment to the funding mechanism, tariffs, is just as strong, even if the numbers are a little debatable.
Exactly.
So what's the operational status right now? Where do things stand today?
As of this moment, the commitment level is extraordinarily high. But, this is a huge but, this is not yet approved or funded.
Not yet law.
Not yet law. Kevin Hassett was very unambiguous on this point. This requires formal legislation from Congress.
So no executive order can make this happen?
No. Unlike some other emergency actions, this specific use of tariff money and this kind of distribution, it just can't be done by executive order alone. That requirement for congressional action is the single biggest, most immediate hurdle this $2,000 proposal is facing.
Okay, so let's unpack that extraordinary evidence. We're calling this the weight of commitment because, the sources really do show a level of coordination you rarely see for a bill that hasn't even been written yet.
It's a deliberate strategy.
Yeah.
It's meant to force this entire issue right onto the congressional calendar.
To really get the weight of the promise being made to you, our listener, we need to look at the specific messaging from, 5 separate confirmations?
5. All high profile. They're all acting in concert. It's very clear.
Okay, so let's start at the very top. The 2 public presidential statements we found in the source material.
Okay, so the first statement, which came out on a Sunday, That was the original announcement that really kicked this all off.
What was the quote?
The quote we saw was, at least $2,000 in the form of a dividend to everybody except high-income people will be paid.
So right from the jump, it establishes the dollar figure and the main exclusion?
Immediately. And then, he didn't wait. The president quickly followed up to double down on that promise.
How quickly?
The very next day, on Monday, there was explicit reinforcement of that $2,000 payment amount.
Wow, so that's tactical.
Oh, it's very tactical.
Hmm.
The speed of that repetition prevents the promise from just being dismissed as, a passing comment or maybe a misstatement.
It signals this is an official priority.
Exactly. It shows the proposal has been vetted internally and is now front and center for the administration.
You said earlier that the word dividend is crucial. Let's dig into that a little deeper. Why is dividend so different from, say, stimulus check?
The semantics are absolutely key for the legislative path this has to take.
Yeah.
A stimulus check, like we saw during the pandemic relief effort.
It's CARES Act and all that.
Right. That usually implies an advanced refundable tax credit or a direct appropriation. It's meant to counteract an economic slowdown. A dividend, in the way they're using it here, it signals a distribution or a return of collected public funds.
The tariff money?
Specifically, the tariff revenue. So it's an attempt to legally and politically classify the payment as a redistribution of existing federal income, not as new spending. And that changes everything in how the Treasury Department has to account for it.
And that initial exclusion, high-income people, is also a big deal right from the start.
A very big deal. By setting that exclusion criteria up front, the administration is clearly communicating that this is targeted relief.
It's not for everyone.
No. It implies immediate high-priority support for the low-income sector, which, of course, includes our fixed-income audience, Social Security, SSI, disability beneficiaries. It positions the whole thing as a mechanism for financial equity, not just some broad cash handout.
So, okay, the president sets the promise and the tone. Now, who are the three officials who have come out and confirmed the active pursuit of this payment?
We can start with Kevin Hassett, the economic advisor. His statements were all about the feasibility, the numbers.
Right. His key quote was that he is actively studying the matter and getting the numbers straight. What does that specific phrasing tell us about where they are in the process?
It tells us they're in that crucial phase of final cost analysis and coordination. They're moving from a general idea to the nitty-gritty implementation details.
It's like calculating the exact total cost.
And confirming that tariff revenue stream. His confirmation that there is enough money from tariffs to pay for the $2,000 checks without touching the main budget, that's the administration's primary shield against deficit critics.
And Hassett also gave us the first real, tangible clue about eligibility, didn't he?
He did. He brought up the discussion of a $100,000 income threshold for families.
100,000.
Now, he was careful. He said this figure is in discussion and it's not finalized. But it gives us the first concrete idea of where they might draw that line for the high-income people exclusion.
So we can think of that number as a potential ceiling.
A ceiling for the middle class, yes.
Right.
Which, by extension, reinforces the automatic inclusion of the vast majority of fixed-income beneficiaries who earn well below that figure.
Okay, moving to data point number 4. We heard from Scott Besson, the Treasury Secretary, and of course the Treasury is the department that would actually be cutting the checks.
Besson's statement was powerful simply because of his position. He's the one who has to make it happen.
And what did he say?
He confirmed the administrative commitment, stating very clearly, the White House is committed to making that happen. Yes.
That's pretty direct.
It's not a policy advisor or a press secretary. This is the head of the financial department responsible for execution, confirming it's a priority.
He also mentioned that they're currently exploring all legal options to get it done. What does that exploration phase usually mean?
It means the legal teams are working overtime to identify the fastest and most airtight legislative vehicle.
So should it be a standalone bill?
Or should it be attached to a must-pass piece of legislation? Or maybe structured through an existing statute? The commitment to exploring all legal options shows a high level of operational intent to follow through on this political promise. They know the legislative landscape is tricky.
And the fifth piece of evidence came from the communication side of things from Caroline Leavitt, the press secretary.
Right. She reinforced the administration's commitment to this $2,000 proposal.
So when you put it all together,
When you have confirmation across policy with Hassett, finance with Besson, and communications with Leavitt, all backing up the president's initial announcement, it makes this promise nearly impossible to walk back without facing severe political backlash.
It's a really exceptional case of unified messaging.
Designed to build public momentum and, let's be honest, pressure Congress.
Okay, that political leverage is massive. But let's circle back to that big roadblock. Congress. We know it needs legislation.
That legislative reality is the center of gravity for this whole thing right now. Hassett was firm. Without legislation, the money cannot flow.
But the sources did give us a little glimmer of hope there.
A very intriguing update, yes. It noted that lawmakers are reportedly warming up to the idea of these payments.
Which suggests the public campaign is working.
It suggests the administration's public push and the enthusiasm it's generated are having the intended effect. It's softening that initial congressional resistance, which is a necessary first step toward actually getting it passed.
And for our audience, the crucial takeaway here is that this is meant to be immediate, targeted financial relief.
Absolutely. This $2,000 payment is being talked about as a one-time dividend, a cash injection.
It's not a permanent change to Social Security or SSI benefits.
No, and it's not a change to the annual cost of living adjustment, the CCOLA. It's designed to provide immediate breathing room against the current pressures of inflation. That's a very distinct goal from long-term benefit reform.
All right, let's get to the question that is on everyone's mind, the most pressing one for millions of our listeners. Who specifically qualifies to receive this $2,000 check?
This is where we have to shift from political commitment to the technical criteria. And we have to be clear. We're relying on the parameters discussed so far, but everyone must remember that the final language in the bill is what will ultimately govern eligibility.
Okay. So the only clear exclusion mentioned by the president was high-income people. Let's dissect that $100,000 tentative threshold that the economic advisor brought up.
Okay. If that figure, $100,000 for families, actually holds, it casts a very wide net.
Put that in perspective for us.
Well, that number is significantly higher than the average income for a retired person or someone who relies solely on federal disability benefits.
For sure.
For tax purposes, $100,000 often defines the upper middle class. So by setting the ceiling there, they're ensuring that the vast majority of American households, especially those who've seen their fixed incomes just get eaten away by inflation, will be included.
So if that generous threshold holds up, what's the clear inference for Social Security retirees, for people on SSDI, SSI, and our low-income veterans?
The inference is unambiguous. They are the core intended beneficiaries.
They're the target audience.
Absolutely. Whether an SSI recipient is single or married, their income levels are far, far below that $100,000 family threshold. This dividend is explicitly aimed at giving a substantial cash boost to the lower economic tiers, giving them the maximum benefit.
So if you are currently getting Social Security retirement or disability SSI or VA compensation, you should feel pretty confident you're in that target group.
You should confidently assume you are included, yes.
But, and we have to say this very strongly, that $100,000 number is not law.
That is vital. Because the legislation hasn't been written yet, the precise income thresholds are still in discussion.
Congress could change it.
Congress might choose to use adjusted gross income from your last tax filing, or they could use an even lower threshold than the $100,000 figure being discussed. We just have to watch the drafting of the bill text very carefully. But the overall intent is crystal clear. The relief is for those who need it most.
What about the logistics, actually getting the payment? For those who are already on the government benefit rolls, will there be some new application process?
Based on all the precedent from previous relief efforts, especially those aimed at existing beneficiaries, listeners should expect simplicity.
That's a relief.
It is. If you already get your Social Security retirement, SSDI, SSI, or VA benefits via direct deposit, the process would almost certainly be automatic.
No new paperwork.
No. The infrastructure at the Social Security Administration and the Treasury is already set up to handle these mass distributions without needing new applications from existing recipients.
Why is that automatic nature so important for this audience?
It's a huge accessibility issue. Many seniors or individuals with disabilities might not have easy access to online portals or just the ability to navigate a complex new application process.
Of course.
The automatic distribution ensures that the relief gets to those who are often the most difficult to reach through traditional outreach methods. The system already knows you're eligible. It knows your bank information. They can just process the payment.
Okay, what about residency? The proposal mentions U.S. citizens and everybody except high-income folks. What does that usually mean in practice?
Well, previous payments have generally targeted U.S. citizens and legal residents who either file taxes or receive federal benefits.
So for our core audience,
For our core audience, those already receiving benefits, if you are legally residing in the U.S. and getting those benefits, coverage is widely expected. That would include those in U.S. territories who are eligible for federal programs.
but there's a catch.
There's a potential catch.
Mm.
If the payment ends up being tied to tax filing status, which is pretty common for things called rebates, then the final legislation will have to spell out the specific residency and filing requirements.
All right, let's shift gears to the crucial aspect of timing. Even with this strong commitment, the big question is, when could the money actually arrive? And we have to manage expectations here while detailing what we know about the delivery sequence.
The number one message has to be absolutely clear. We do not have a confirmed payment date or timeline.
None at all.
No. And that's because, as Treasury Secretary Scott Bessent confirmed, the White House is still exploring all legal options, and more importantly, we are still waiting for congressional approval.
So let's break down that legislative hurdle. How does that political process typically translate into actual time on a calendar?
Okay, so once the legislation is introduced, it has to navigate committee hearings, then floor votes in both the House and the Senate, then reconciliation if there are differences, before it can finally be signed into law by the president.
And that whole process can take how long?
Weeks, or even months. It all depends on the priority level and how much political opposition it faces. We have to stress that the clock on the payment doesn't even start ticking until the president signs the bill.
Okay. But let's assume Congress does pass the bill. How quickly can the administration act then? We have some history to look back on here.
Yes, we do. If you look back at the CARES Act relief, the very first payments took several weeks to reach people after the law was passed.
Just because of the logistics of it?
The sheer logistical complexity of updating the systems for a mass payment. However, the subsequent rounds were much faster.
They learned from the first one.
They did. So once legislation is passed, the SSA and Treasury have shown they can process automated direct deposits within about 2 to 4 weeks for existing beneficiaries. The critical time factor here is getting over that initial political and legislative hurdle. That's the biggest source of any delay.
Okay, so assuming the legislation passes, let's get into the nitty-gritty of how the money will arrive. Since the source doesn't specify the method for this particular payment, we have to rely on precedent.
And we can confidently anticipate they'll use the 3 established channels that they've used for relief payments to Social Security and SSI recipients in the past.
The primary channel, of course, being direct deposit.
Correct. The vast majority of current beneficiaries get their payments via direct deposit. It's the fastest, it's the safest, and it's the most common method. If your current benefits arrive in your bank account, you should expect this dividend to follow the exact same path.
What about the secondary methods? Still vital for those who don't have traditional banking.
For those who rely on paper payments, they will receive paper checks. But we always have to note, this method is slower
Because of the mail.
because of postal processing and delivery times. And critically, for many SSI recipients and others who use federal benefit accounts, the money will likely be delivered to the Direct Express card.
Which acts like a prepaid debit card.
Exactly. It's a prepaid debit card for federal benefits. So making sure your Direct Express card is active and current is going to be essential for a smooth transaction.
We touched on special cases earlier. Can we elaborate a bit on how, say, international recipients or those with representative payees might be affected?
Sure. For international recipients of Social Security, the payments are usually processed through a foreign currency exchange, which can inherently add a lot of time, often several weeks compared to a domestic direct deposit.
And for representative payees.
If you have a representative payee, a person or an organization that's authorized to manage your benefits for you, the $2,000 payment would typically be routed to that payee's account or their Direct Express card, just like your regular monthly benefits are managed.
But the final bill will have the last word.
The final legislative text will confirm any exceptions, but the infrastructure for this is already standardized.
Okay, let's say the payment is approved and someone thinks they've been missed. They experience a delay. What's the protocol? They shouldn't be listening to rumors from their neighbors.
Absolutely not.
Mm.
The first and the most reliable signal will be an official letter from the Social Security Administration or the VA
In the mail.
in the physical mail. The government is legally required to communicate the exact payment schedule and the expected time frame officially. So until you get that letter, you should not assume you've been missed.
Is there a proactive step our listeners can take right now to prepare for a smooth, fast delivery?
Yes. The single most effective thing you can do is log into or set up your My Social Security portal account.
at ssa.gov.
That's right. Use this time to make sure your mailing address is correct, and most importantly, verify your direct deposit information. If you've changed banks in the last year, update it right now. A seamless delivery hinges entirely on the system having the correct destination on file for you.
We've established the intent, the logistics. Now, I want to dedicate some real time to the true value of this $2,000 payment, and that means financial protections.
This is the most critical segment for our fixed income audience.
Because without these shields, the money that's intended for relief can just be instantly lost to debt. Or it could jeopardize vital health and housing benefits.
A $2,000 lump sum is only helpful if it doesn't cause a negative consequence somewhere else in your financial life. We need explicit clarity on 4 major protection areas.
Okay, let's start with taxability. Since we're dealing with a dividend, possibly funded by tariffs, not a traditional stimulus, what are the tax implications?
This is a big unknown. Since the specific legislation isn't law yet, we cannot confirm whether the $2,000 will be taxable or tax-free.
What's the precedent?
Historically, stimulus checks were classified as non-taxable advanced tax credits, or rebates. But if this payment is structured as a true dividend or income supplement, it could theoretically be taxable.
So what needs to be in the bill?
It absolutely needs an explicit tax exemption clause in the final bill. If that clause is missing, it could force some low-income beneficiaries to file taxes just to report the income, even if they don't owe anything. The legislation must clearly state that the $2,000 is tax-exempt.
Next up, let's talk about our listeners who are working while receiving benefits, those on retirement or SSDI who have to follow annual earnings limits. Will this $2,000 payment count toward those limits?
It's highly, highly unlikely to count toward annual income limits.
Why not?
Because the annual earnings limits apply to earned income from wages or self-employment. A one-time relief payment, no matter how it's structured, is typically categorized as an excluded source of income.
Because if it did count.
If it were counted as earned income, it would immediately disqualify many beneficiaries from their benefits, which would entirely defeat the purpose of the relief. We fully expect the legislation will include specific language to make sure the payment does not count toward those limits.
Okay, now for the most complex, and I would say most dangerous area for low-income beneficiaries, benefit eligibility shields. And we need to be really clear about the difference between income limits and resource limits.
This is vital, especially for anyone receiving Supplemental Security Income, or SSI, and by extension Medicaid and SNAP food stamps. While income is what you get each month, resources are what you possess, your savings, cash, assets.
And what are the current resource limits for SSI?
They are notoriously painfully low. $2,000 for an individual.
The same amount as the payment.
Exactly. And it's $3,000 for a couple. And this resource test is rigid. If a recipient's countable resources go over that limit for even one day of the month, they can lose their SSI eligibility.
Which means they lose Medicaid, too.
Immediately. The loss of Medicaid and other linked benefits is often the most catastrophic part.
So if an SSI recipient gets a $2,000 lump sum payment, what's the immediate danger here?
The danger is that if that $2,000 is deposited into their bank account and the final bill does not explicitly exclude it from the resource test, that person would suddenly have resources over the $2,000 limit.
And they lose their benefits.
They would immediately lose their SSI. This is why advocacy groups are fighting so hard to make sure the final bill includes a resource exclusion clause. Typically, that allows recipients to hold the money for several months, say 9 to 12 months, before it counts toward the resource limit. Without that specific protection, the intended relief could instantly destroy their access to essential medical and housing aid.
So if you are on SSI, this is the #1 thing in the bill you have to watch for. What about Medicare premiums? Is there any risk there?
Medicare premiums are governed by a different set of rules. They're generally based on your modified adjusted gross income, or MAGI, from your tax returns from 2 years prior.
So this payment wouldn't affect it.
Even if the $2,000 were somehow taxable, it's a one-time event that is highly unlikely to impact the MGI thresholds that trigger higher premiums.
Oh.
So for the vast majority of our listeners, the $2,000 will have no bearing on their current or future Medicare premiums.
Okay, last one, and this is maybe the most immediate threat to the cash itself. Garnishment and debt protection. Is this $2,000 safe from creditors?
This is arguably the most crucial financial protection that's needed. Without explicit statutory language granting garnishment protection, debt collectors could seize the funds.
We saw this with the pandemic stimulus checks, right?
Yes. They required specific language in the CARES Act and the later bills to shield the funds from being legally claimed by private creditors for consumer debt, credit cards, medical bills, private student loans.
Why can't we just assume the funds are automatically protected like regular Social Security benefits?
Because federal benefits like Social Security and VA payments are protected under existing law. But a one-time dividend payment, especially one that's sourced from tariff revenue and not the traditional SSA trust fund, is legally a different animal.
It's in a gray area.
It's in a gray area. If the legislation doesn't explicitly name this payment type and declare it exempt from garnishment, creditors could have a legal right to intercept it the moment it hits your bank account. This protection is a non-negotiable advocacy point to make sure the relief actually reaches the people it's intended for.
We've covered the whole financial landscape.
Yeah.
Now let's move to the practical, actionable advice every single listener should follow right now, starting with the immediate threat of scams.
Yes. The high-profile nature of this $2,000 promise makes it a prime target for fraudsters. We need to deliver the scam warning with extreme clarity and strength.
Okay, here is the absolute unbreakable rule. The IRS, the Social Security Administration, or the VA will never call you, text you, or email you asking for money, gift cards, or personal information like your Social Security number or your bank details to receive this payment.
If you get any communication, a phone call, a text message, an email asking you to pay a processing fee or verify your identity to get your $2,000 dividend, it is a scam.
What should you do?
Hang up the phone immediately. Delete the text. Do not click on any links. Government agencies communicate official payment information through verifiable physical mail or secure government portals. That's it.
So what's the official communication rule they should stick to?
You should only trust information you get in official letters sent through the U.S. mail or on verified government websites like SSA.gov or VA.gov. If you are even slightly unsure, do not respond to the suspicious contact. Instead, independently call the official SSA or VA phone numbers you already have on file.
And if they do get a suspicious call or text, where should they report it?
The single most effective action you can take is to report the scam immediately. You can contact the Federal Trade Commission, the FTC, or the Social Security Administration's Office of the Inspector General, the OIG.
And that helps everyone.
Quick reporting helps the authorities shut down these scam operations, and it protects other people in your community who might be more vulnerable.
Let's talk for a minute about the delicate balance of managing expectations. The administration has, as we said, painted themselves into this very tight corner. What's the long-term implication of making such a public commitment?
The public commitment is a strategic move. It's meant to create political momentum. As the source material noted, the more public support and awareness there is for this $2,000 payment, the higher the likelihood that Congress will feel pressured to act quickly.
So they basically staked a lot of political capital on delivering this money.
A significant amount, yes. It makes it an inescapable topic on Capitol Hill.
And it's important to keep reinforcing that this $2,000 is a short-term fix. It's separate from long-term benefit structures.
It is. This $2,000 dividend is an immediate, one-time financial fix. It's meant to provide temporary relief. It should not be confused with the big, long-term structural solvency discussions about Social Security or the annual cost of living adjustment.
The kick away.
Right. KRO is an automatic annual increase that's tied to inflation, whereas this is a standalone cash injection designed to address the current cost of living crisis.
From an economic point of view, why is targeting low-income individuals with direct payments often seen as the most effective form of short-term fiscal stimulus?
It has to do with something economists call the marginal propensity to consume.
Which means what?
Simply put, people on fixed incomes or in low-income brackets tend to spend every dollar they receive, and they spend it immediately.
On essentials.
On essentials, rent, food, medicine, utilities. By injecting funds directly into these communities, the money rapidly cycles back into the local economy. It creates a faster, more effective ripple effect than payments that are targeted at high-income earners who might just save or invest the money. It's an immediate, powerful economic catalyst for local communities.
This has been a really exhaustive deep dive into an evolving financial commitment that could genuinely provide life-changing relief for millions. So let's summarize the absolutely essential facts one last time.
Okay. The commitment from the highest levels of the White House to a $2,000 plus payment is robust. It's been confirmed by 5 separate high-profile sources, including the Treasury Secretary and the Economic Advisor, who confirmed it's being actively pursued.
The proposed way to pay for it is specifically the surplus from tariff revenue, structured as a dividend, and the administration insists this funding is fiscally sound.
But crucially, this promise still requires congressional legislation to become law. It is not approved yet, and the timing hinges completely on that legislative action.
Eligibility is focusing clearly on non-high-income families, with discussions centering on a possible $100,000 threshold for families. And this means that retirees, SSDI, SSI recipients, and low-income veterans are the clear intended beneficiaries.
And most importantly, for your financial protection, the final bill must include clauses guaranteeing it's tax-exempt, that it's excluded from SSI resource limits, and that it has garnishment protection from debt collectors. No action is needed from you yet, but please be vigilant against scams.
So what does all this political pressure mean for you, the listener, right at this moment?
It means the political cost of failure is enormous. This public commitment puts incredible, unprecedented pressure on Congress to deliver this payment. The next few weeks, as lawmakers get back to session and debate the legislative vehicles, will determine if this strong intent translates into actual law.
And if this $2,000 can provide the dignity, the breathing room, and the relief that so many people are hoping for as they continue to face these rising costs, we want you to be the very first to know the moment there is a definitive legislative update, a payment date, or the final eligibility rules are set. Please subscribe right now and turn on your notifications so you never miss an official update from our deep dive team.
And please share this deep dive with anyone else in your life, a family member, a friend, a neighbor who relies on these benefits and needs the factual clarity we tried to provide today. And leave your most pressing questions in the comments below.
We really appreciate you trusting us to guide you through this complex, critical financial news. Stay safe, stay informed, and we will catch you next time for the... Welcome back to the Deep Dive. Okay, today we're looking at something pretty big. A proposal that, if it actually happens, could put thousands of dollars directly into the pockets of folks who really, really need it.
That's right. We're talking about a specific, high-level discussion, really, about a significant payment, a $2,000 dividend payment.
And this isn't just some vague idea floating around, is it? It seems pretty concrete, or at least the idea itself is being confirmed at the highest levels.
Exactly. It's been repeatedly endorsed. And look, if you're listening to this, maybe you rely on Social Security or SSI, any kind of fixed income. Well, $2,000 is huge.
Oh, absolutely. It can make a massive difference, right? Like covering rent or unexpected bills. It gives you that breathing room.
It really does. That's why we need to dig into this.
So our mission today for this deep dive is to cut through all the chatter, the speculation. We've got the source material stacked up, recent posts, official statements, some historical financial context too.
And we're aiming to pull out 3 key things for you. First, who exactly is this dividend aimed at? Who gets it?
Right. Second, how realistic is the funding? They talk about how it'll be paid for, but does the math actually work given the huge cost?
And third, maybe the most critical point.
Yeah.
What's the track record here? This isn't the first promise like this. Does that history tell us anything about whether it'll actually, land in people's bank accounts?
Yeah, that's crucial context, especially for our audience. We're talking retirees, folks on low income, people with fixed benefits. They need clarity, not just headlines.
Absolutely. When you're talking about thousands of dollars, the details matter. The income limits, how it gets delivered, that's the stuff that really counts.
Okay, let's unpack this. So the proposal itself, what are we actually looking at? The source material, you said, it's recent posts from the president.
Yes, very recent, very public posts, confirming the idea. It's been called a few different things, hasn't it?
Yeah, I saw that, like $2,000 stimulus check or a $2,000 dividend distribution rebate.
Or even just a $2,000 payment to all of us. That last one sounds broad.
Right. But the key now is to get past those catchphrases and look at the actual language. Who is supposed to get this money? That's where we need to start.
Exactly. Let's nail down the specifics.
So Section 1, who's the target for this $2,000 payment?
Well, the amount seems pretty consistent. It's proposed as $2,000, sometimes phrased as at least $2,000.
Okay, so the number itself is clear, $2,000. But the who gets it part, that seems to have shifted a bit.
It really has. Over just the last few weeks, it went from a very broad initial statement to something much more focused.
What was that first message? I remember it causing a bit of a stir.
It did. The first post we looked at, the key words were something like a dividend of at least $2,000 a person, not including high-income people, will be paid to everyone.
Everyone. That's the word that jumps out. But then that little catch, not including high-income people.
Right. And that immediately creates confusion, doesn't it? What does everyone mean if it excludes a group? And more importantly, who counts as high income?
Exactly. And for people on fixed benefits, that everyone phrasing, it's tricky. Does everyone include someone just getting Social Security or retirement who doesn't file taxes the usual way?
Or someone on SSI? Their income is needs-based, often below tax thresholds. Are they part of everyone? That ambiguity is a real problem when people are trying to figure out if this applies to them.
It causes anxiety, definitely. You see $2,000 for everyone, and then you wonder, wait, but do they really mean me?
Precisely. Which is why the follow-up clarification was so important.
So there was another post. What did that one say?
Yes, almost right away, a second, more specific post came out, and this one sharpened the focus quite a bit. The language changed.
How so?
It stated the $2,000 payments were explicitly for low and middle income USA citizens.
Ah, okay. Low and middle income. That's much clearer than everyone except high income.
Much clearer. And that shift in language, that specific focus on low and middle income people,
Yeah.
it matters tremendously for our listeners.
Why specifically? How does that address their concerns?
Because it directly tackles those long-standing worries for seniors, people with disabilities, folks with very little income, or those living only on government benefits. Think about past stimulus efforts.
Right. There was always that question of how they'd find people not in the regular tax system.
Exactly. The administrative hurdle. How do you determine eligibility for someone outside that standard W-2 employee structure? By tying eligibility clearly to income level, not the type of benefit someone receives, it simplifies things massively for millions.
So it doesn't matter if you get Social Security retirement or SSDI or SSI. It's about how much money you actually have coming in overall.
That's the core idea based on this new phrasing. If you get Social Security, that's based on your work history. SSDI, disability and work history. SSI, that's needs-based, so your income is already defined as very low.
So in pretty much all those cases, your annual income would put you in the low or middle income bracket anyway.
Almost certainly.
Yeah.
By any standard government definition, yes. This takes the focus off which benefit you receive and puts it squarely on your total income.
Okay, so this is a key point we can pull from the source material and past actions. Income is the main thing they look at.
Income is the sole metric. Historically, for these big distributions, income is number one. Doesn't matter if you file taxes, don't file taxes, get Social Security, SSI, SSDI. If your income fits the definition of low and middle, then according to this proposal, you'd be eligible.
What's fascinating here is, well, the reassurance that gives people on fixed benefits, right?
Absolutely. If you're getting, say, the maximum Social Security benefit, or if you're on SSI where the income limits are already very strict, you're almost certainly going to fall well within any reasonable definition of low and middle income.
So people can stop worrying about, do they know I exist if I don't file taxes? Or does SSI count? It's just about the total income figure.
That seems to be the clear message from the updated phrasing. It moves the conversation away from the source of the income and focuses purely on the level of income.
And let's be real, for so many of our listeners, their monthly income might be, what, $1,500, $2,000, maybe $2,500.
Exactly. And in that context, a one-time $2,000 payment isn't just helpful, it's transformative. It could literally be a full month's income, or close to it.
That could clear up overdue utility bills, cover a major car repair, pay for needed medication. It's a real material difference.
It's a significant safety net, even if temporary. That's why we're taking this proposal seriously and breaking it down.
Okay, one other detail in that phrasing. USA citizens. That seems pretty clear-cut.
Yes, that handles the residency requirement up front. Based on this specific language, non-citizens, regardless of their income level, wouldn't be included in this particular proposal.
Got it. So the big takeaway from this first section is the target is explicitly low and middle income U.S. citizens. If that's you, based on your income, you're the intended recipient.
Correct. The focus is clear.
Okay, but that leads directly to the next big question. If it's for low and middle income and not for high income, where's the line?
Ah, yes. Section 2, defining high income and figuring out those eligibility thresholds.
And this is where the source material gets a bit vague, right? They didn't actually put a dollar figure on high income.
No, they didn't. The posts clearly state who isn't getting it, high income people, but they don't give an exact number for that cutoff. That's the missing piece right now.
And that number is everything, really, because where they draw that line determines who in the middle class actually qualifies.
Precisely. The entire eligibility for millions of middle-income earners hangs on that definition.
So since the legislation isn't written, we have to look elsewhere, like past programs.
Exactly. We have to rely on historical context. And thankfully, we have some pretty good recent examples, especially the big stimulus checks that went out in 2021 under the American Rescue Plan.
Right, those had income limits, so we can use those as a guide.
They're vital for setting realistic expectations. Based on those programs, we can make a reasonable estimate.
What are we thinking? What were those limits, roughly?
Well, for an individual tax filer, the point where payments started to phase out was generally around $75,000 per year in adjusted gross income, or AGI.
Okay, $75K for a single person? What about couples?
For married couples filing jointly, that threshold typically doubled. So around $150,000 per year AGI.
75K and 150K, those were the common phase-out points before, so it's likely they'd use similar numbers again.
It's a strong possibility. These figures are sort of the established benchmarks for where broad stimulus payments started tapering off in the recent past.
But why those numbers specifically? Couldn't they set the high-income bar much lower, say $50,000 to save money?
They could, but it would contradict the stated goal. Let's look at the bigger picture, the economics mentioned in the material.
Okay.
The average household income in the U.S. last year was around $83,000. If the administration truly wants this payment to go to low and middle income people.
Setting the cutoff below the national average wouldn't make sense.
Exactly. If they drew the line at, say, $60,000 or even $70,000 for an individual, they'd be excluding a huge chunk of people who most would consider middle class. People who are definitely feeling the pinch of inflation but aren't technically low income.
So it wouldn't really be a middle income benefit then, would it? It'd just be a low income payment.
Precisely. To genuinely include the middle class, as the phrasing low and middle income implies, those estimated thresholds of $75,000 for individuals and $150,000 for couples seem necessary. They need to be high enough to capture a broad swath of working families.
Okay, that logic makes sense. So bringing this back to our listeners on fixed incomes.
Right. Let's connect it directly. If your total annual income is, say, below $30,000 or $40,000, which is true for the vast majority of people receiving Social Security retirement, SSI or SSDI.
Then you are absolutely, unquestionably within the low income category for this dividend.
Your eligibility, assuming the proposal goes through based on these likely thresholds, is practically guaranteed. You're well below those 75K, 150K marks.
And maybe we should quickly clarify again the different benefit types, just to be sure.
Good idea. Social Security retirement and SSDI, disability insurance, are technically earned benefits based on your work record and contributions. SSI, supplemental security income, is different. It's purely needs-based. It's a safety net for the lowest income seniors and people with disabilities.
So because SSI has such strict income and asset limits already, those recipients are probably the most certain to qualify.
Absolutely. Their income is already determined to be very low by definition of the program. For Social Security retirees, even those who might have had higher earnings during their career and get a larger monthly benefit now.
Their current retirement income still usually falls well below that $75,000 individual limit.
Generally, yes. Even the maximum Social Security benefit is considerably less than $75,000 a year.
So if income is the only factor, what about someone working, say, a minimum wage job, not getting any federal benefits? Are they in?
Yes, absolutely. If an individual works full-time and earns maybe $30,000, $35,000 a year, they're clearly low income by these metrics. They would qualify just the same as a senior living on a similar amount from Social Security.
It's purely about the income number, not where it comes from.
That's the takeaway from the current proposal's language. Income level is the gatekeeper.
There was also something in the source material about the sheer scale of this plan, right? How many people they expect to cover.
Yes, that's another clue about the income thresholds. When they calculated the potential cost, which we'll get to next, the model assumed about 85% coverage of the population.
85%? That's huge. That's similar to the big stimulus checks in 2021.
Exactly the same metric used for the $1,400 check back then. We're talking about potentially reaching around 284 million people, including dependents.
Wow. Okay, and to cover that many people, 85% of the population. The income limits have to be set pretty high, right? You can't reach that number if you cut off eligibility too low.
Precisely. It reinforces the likelihood of those higher thresholds, the 75K, 150K figures. You need those levels to be inclusive enough to hit an 85% coverage target. It has to include a large part of the middle class.
So what does this all mean? Let's synthesize the eligibility part.
It means eligibility seems to hinge solely on your income level. Based on the specific language targeting low and middle income and the historical context, if your income is below those likely thresholds, maybe $75K for individuals, $150K for couples, you'd probably qualify for the proposed $2,000 payment.
And for most people on fixed federal benefits, that means they are very likely included.
Very likely, yes.
Okay. Now, before we dive into the money part, the funding mechanism, which sounds complicated, maybe we should quickly address some of those missing details that people worry about.
Good point. While we don't have final answers, we can talk about expectations based on past practice, especially regarding financial protections.
Like garnishment. That's a big one. If someone gets this $2,000, can a debt collector just snatch it?
That's a major concern, understandably. Historically, large federal relief payments like the stimulus checks often came with specific legal protections against garnishment, especially for federal benefit recipients.
So the money was protected.
Often, yes. Congress included language to shield those funds. Now, the Trump proposal doesn't specify this yet because it's just a proposal. But
if it follows the pattern.
if it follows precedent for a payment of this nature and size, there's a strong historical likelihood that anti-garnishment protections would be included, particularly for vulnerable groups.
But we have to stress that's not guaranteed yet. No official word.
Absolutely not guaranteed. It's something that must be clarified in any final legislation. It's a critical point of concern we'll be watching.
And the other big one, taxes.
Yeah.
Would this $2,000 be taxable income?
Another unknown right now. Past stimulus payments were generally structured as tax rebates, meaning they were not considered taxable income.
And this payment is being called a dividend distribution rebate sometimes.
Right. That phrasing, tying it to tariff revenue as a sort of rebate, suggests the intention might be for it to be non-taxable. But again, intention isn't law.
We need the final legislative language to be sure.
Exactly. Garnishment protection and tax status are two huge missing pieces. We absolutely urge listeners not to make assumptions about either one until official government sources confirm the details.
Okay. So eligibility seems fairly clear based on income, but key details on protection and taxes are still missing. Let's move to the money itself. Section 3, the financial mechanics. How are they proposing to pay for this?
Right. We know who they want to give it to, but where does potentially more than $500 billion come from?
$500 billion, is that the estimated cost?
Yes. Based on that 85% population coverage metric we mentioned, sending $2,000 to roughly 284 million people, the total cost is estimated at a staggering $568 billion.
$568 billion. Okay. That's a lot of money.
It is indeed, and the source material is very specific about the funding source. It explicitly says these proposed $2,000 payments are tied to revenue generated from massive tariff income.
Tariffs. Okay, maybe quickly explain what a tariff is, just for clarity.
Sure. A tariff is basically a tax. It's a tax imposed by a government on goods or services that are imported into the country.
So stuff coming in from other countries gets taxed.
Right. It serves two main purposes. It generates revenue for the government, and it often aims to make foreign goods more expensive, hopefully encouraging people to buy domestically produced goods instead.
Got it. So the idea is this $568 billion comes from those import taxes.
That's the proposal. But this is where we hit the core mathematical challenge laid out right there in the source material.
Okay, let's hear the numbers. Cost is $568 billion. How much is coming in from tariffs?
Well, the report states that so far this year, and remember, we're well into the year now, about $195 billion has been collected in tariff revenue.
$195 billion collected. Okay,
Yeah.
That's not $568 billion.
Not even close. Yeah, and it gets worse. The projected annual tariff revenue, so for a full 12-month period, is estimated to be around $350 billion.
So even over a whole year, they only expect to collect $350 billion from this source, but they need $568 billion for the payout.
Exactly. Yeah. The immediate problem is crystal clear. You need $568 billion for the checks. But the maximum you expect to get from your dedicated funding source in a year is only $350 billion.
That leaves a shortfall.
Yeah.
Carry the one, about $218 billion short, just for 1 year's worth.
Precisely. So based purely on the current annual revenue coming in from tariffs, funding this distribution is, well, logically, mathematically impossible on a short-term cash-on-hand basis. They just don't have the money right now from that source.
Okay, this is really important for people to understand. If the payment depends only on the tariff money collected this year, it's not happening at the scale.
Correct. They are hundreds of billions short based on current and projected annual collections.
So how do they plan to do it then, if the dedicated funding source isn't enough right now?
This leads directly to the mechanism they have to rely on: looking further out, long-term projections, and crucially, borrowing.
Ah, the future money. What are the projections?
The source material throws out a much bigger number to try and bridge this gap. A 10-year tariff projection. Over the next decade, they project collecting over $3 trillion from tariffs.
$3 trillion over 10 years. Okay, that's a massive number compared to $568 billion.
It is. And that's the argument. They'd say, look, the immediate funds are short, yes, but the future revenue stream is enormous. A $568 billion payout today is sustainable when you measure it against $3 trillion coming in over the next decade.
So the plan is to pay for it with future money?
Essentially, yes. But let's be really clear about what that means operationally. If you don't have the $568 billion today,
You have to get it from somewhere else today.
you have to borrow it. The source material says it clearly. They would have to borrow the money today, send it out, and then use the incoming tariff revenue over the next 10 years to pay back that loan.
So wait, borrowing against a projection of income over 10 years, isn't that just a fancy way of saying they're adding $568 billion to the national debt right now and just planning to pay it back later with tariff money?
That is precisely the critical question. It absolutely involves deficit spending up front. You're issuing debt, financing the payout now, with the promise that future tariff revenues are earmarked for repayment.
It sounds like the government taking out a huge mortgage on its future earnings to cover a big expense today.
That's a pretty good analogy.
Yeah.
Conceptually, that's how it works. The immediate impact is that this $568 billion cost gets added, at least temporarily, to the national debt. It's financed through borrowing, even if the plan is to pay it off later with specific revenue.
And the context here matters too, right? The source mentioned the current rate of debt increase.
Yes, it points out the nation is already accumulating debt very rapidly, billions every day. So financing this $2,000 payment by borrowing against future tariffs uses that same mechanism of increasing national debt, even with the repayment plan. The immediate effect is more debt.
But if they really do collect $3 trillion over 10 years, $568 billion is what, less than 20% of that?
Correct. The scale comparison is important. If that $3 trillion projection holds true, then financing $568 billion up front is easily manageable against that massive future stream. They could justify the borrowing based on the long-term income.
But the key point remains. They don't have the cash now. They need to borrow it first.
The current math confirms that. The $568 billion isn't sitting in a tariff fund waiting to be spent today. It requires upfront financing.
Now, there was another point in the source material about this funding that sounded confusing. Something about paying down the debt.
Yes, this is a really tricky, almost contradictory claim made in the posts. The claim was that after sending out the $2,000 payments to low and middle income people, there would still be so much money left over from the tariffs that they could actually use it to pay down the national debt.
Wait, how does that work? If they need $568 billion and they only collect $350 billion a year and they have to borrow the difference, how is there money left over right away to pay down other debt?
It's mathematically very difficult to square that circle in the short term. If the cost, 568B, exceeds the annual revenue, 350 betters, you're operating at a deficit for this specific payout initially. The only way there could be money left over in a broader sense is if you consider the entire $3 trillion projected income stream.
So they're talking about the long-term projection again, saying the total projected income is more than the payout cost.
That seems to be the implication. They're saying, yes, we have to borrow now, but look how much money is coming in over 10 years. This $568 billion is just a fraction, and the rest can go to debt reduction. But claiming an immediate surplus or money left over after the checks go out, while simultaneously needing to borrow hundreds of billions to send the checks, it's a confusing message.
It sounds more like optimistic accounting based on future hopes than current reality.
It definitely leans heavily on the long-term projection holding true. For you, the listener, just be aware that this claim that the payments will happen and other debt will be paid down simultaneously from this source is part of the political messaging. It's intended to make the proposals sound fiscally responsible, even if the short-term mechanics involve borrowing.
Okay, so summing up the financials. Huge cost, 568 boobies. Immediate tariff income isn't enough. 195B collected, $350 projected annually. Success hinges entirely on that long-term $3 trillion tariff projection and requires borrowing the money up front today.
That's the financial reality presented in the sources.
Which leads us nicely into the next section, context and credibility. Because this isn't the first time we've heard about big payments, is it?
Not at all. Section 4. Context and credibility. This is where we look at the history and the implications of making repeated promises.
Because if we connect this to the bigger picture,
Right.
the fact that this $2,000 idea isn't new is pretty significant, right?
Hugely significant. The credibility and the risk associated with this specific proposal need to be understood in light of recent history. The source material actually details this timeline. This is, believe it or not, the fourth time since January. So in less than a year that this administration has endorsed a major cash distribution concept.
4 times in under a year. Wow. Okay, let's quickly recap those. What were the others?
Let's walk through it. First, way back in February this year, there was talk and even an endorsement of something called the $5,000 Doge dividend. Sounds odd, but it was a real proposal that got high-level attention.
Okay, the $5 K Doge dividend. What was next?
Then, more recently, in August, we saw the endorsement of a $600 rebate check. That one was more formal, introduced as part of the American Worker Rebate Act of 2025.
$600 rebate. Got it. And the third?
The third instance was just on October 2nd. In a specific interview, the president indicated a distribution or dividend was being considered, somewhere in the range of $1,000 to $2,000.
$1,000 to $2,000 in October. And now this latest explicit post about a dividend of at least $2,000.
Exactly. February, August, early October, and now again. 4 times in about 10 months, the idea of sending out thousands or at least hundreds of dollars directly to Americans has been floated and endorsed at the highest level.
So what does that mean? Promising something 4 times? Does that make it more likely or less likely to happen?
That's the million-dollar question, or maybe the $568 billion question. It leads right to the strong warning highlighted in the source material about the need for follow-through.
Because repeating the promise raises the stakes.
Dramatically. While the messaging itself is powerful, who wouldn't want $2,000? And it generates hope, especially for people struggling financially. Repeating that message over and over without actually delivering creates a massive risk. A trust risk, a political risk.
Yeah, the source said something about it being a really, really bad messaging campaign if it doesn't happen now.
Precisely. The analysis shared was that if you flip this idea 4 times and then fail to execute, it just looks bad. It completely undermines credibility. The phrase used was that the administration is effectively painting themselves into a corner.
Meaning the only way out now, credibly, is to actually do it.
That's the argument. The political pressure, largely self-inflicted through these repeated endorsements, is now immense.
And what does this mean for you, the listener? How should people interpret this repetition?
It's a double-edged sword. On one hand, the repeated high-level endorsements suggest genuine intent. It's clearly something they want to do. On the other hand, it highlights the potential for disappointment.
It's like the kid who cried wolf analogy the source used.
Exactly that. If you keep promising significant financial help to vulnerable groups, seniors, low-income families, people with disabilities, and it never materializes, you erode trust. The next time a genuine proposal comes along, people might just roll their eyes and think, yeah, right, heard that before.
It could actually hurt future efforts to provide real relief.
It absolutely could. The stakes are incredibly high now, not just for this specific payment, but for the administration's overall credibility on economic promises, especially to these communities.
It's pretty unusual to see this level of repeated public endorsement without immediate, concrete legislative action following right behind it.
It is unusual. It signals strong intent, but it also dramatically increases the political cost of failure.
Okay, so the history suggests they really need to deliver this time, but let's circle back to the practical side again. Since it's still just a proposal, endorsed but not enacted, all those crucial operational details are still missing.
Completely missing. The sources confirm. This is an idea that's been backed, not a finalized plan. So there is zero specifics on the how and when.
We need to be really clear about what the source material does not say. No payment dates.
No mention of dates. Could be November, December, sometime next year. We simply don't know.
No details on how the payment arrives. Direct deposit, paper check, direct express card.
Nothing on the method of payment, which is crucial as many fixed-income recipients rely specifically on their direct express cards.
And critically, as we discussed, no final word on taxes or those garnishment protections.
Correct. No official confirmation on tax implications, or, importantly, whether the funds would be shielded from debt collectors.
So for our listeners, especially someone maybe juggling old debts or on SSI with strict asset limits, knowing if that $2,000 is protected is absolutely vital information for managing their money.
It's paramount. But for now, we have to emphasize, those details only emerge once official legislation is passed, or an executive order is issued and made public. Right now, we're analyzing the proposal and the intent, not the finalized implementation plan.
So while the eligibility criteria look promising for many, especially based on income, people need to stay patient about the logistics.
Patience and vigilance are key. The implementation phase, the nuts and bolts of getting the money out, is always the hardest part. That's where things can get bogged down in rules, regulations, and debate,
What's the best thing someone can do right now, then?
honestly. The most practical step is to ensure your current payment information is up to date with the relevant agency, likely the Social Security Administration or the VA if you receive benefits there. Make sure your direct deposit info or your direct express card details are current.
Because if this payment does happen, they'll likely use the existing systems.
Almost certainly. Using the established payment rails is the fastest way to get money out.
Yeah.
So having accurate information on file is the best preparation you can do right now.
Okay. So the repeated messaging ramps up the pressure to deliver. The eligibility looks good for low-middle income folks. Funding is tricky, but potentially doable via borrowing. But the actual how and when remain big question marks.
That sums up the situation based on the available source material. The pressure is definitely on.
All right, let's move to our final section. Section 5, the need for trust and looking ahead.
Right. Given all this uncertainty around a high-profile proposal, we need to talk about trust and security.
Especially avoiding scams, right? Whenever there's talk of government money, the scammers come out.
Absolutely. Even though the source material didn't explicitly detail a scam warning for this specific proposal yet, based on every previous stimulus payment, we must issue a strong warning now.
What's the key message?
Rely only on official sources. Get your information directly from verified government websites, SSA.gov, IRS.gov, VA.gov, or wait for an official letter in the mail.
And nobody official is going to call or text asking for info.
Absolutely not. This is critical. No one from the Social Security Administration, the IRS, the VA, or any other government agency will ever call you, text you, or email you out of the blue asking for your Social Security number, your bank account details, your credit card number, or demanding a fee or gift card payment to release or process this $2,000 dividend.
If you get a call like that,
Hang up immediately. Don't engage. If it's a text or email, delete it. Do not click any links. These are scams, plain and simple.
and report if possible.
Yes, report suspicious contact to the relevant agency or the Federal Trade Commission, FTC. Remember, if this dividend happens and you're eligible, especially if you already receive federal benefits.
The money should arrive automatically. No need to apply or give out info.
Exactly. It should use your existing payment method on file. No application needed for most people. Be incredibly wary of anyone telling you otherwise.
Okay, very important warning. Now, let's connect this $2,000 idea to the bigger economic picture. Is this part of some larger reform, or is it just a one-off?
Based on the source material, this is being framed as an idea for a one-time relief payment. It's meant to help people cope with current economic pressures like inflation.
So it's not like a permanent increase to monthly Social Security checks, or a change to the annual COLA calculation?
No, it doesn't appear to be part of any long-term structural reform of the Social Security system or other benefit programs. Think of it as emergency financial aid, a shot in the arm to deal with current high costs, not a permanent raise.
That's a really important distinction for managing expectations, right? This is temporary help, not a change to your base benefit.
A crucial distinction. People need to budget and plan accordingly, knowing this is likely a one-time event if it happens.
And the economic thinking behind it. Why do this kind of payment?
Well, if it were enacted, putting $568 billion directly into the hands of low and middle-income individuals and families is a very direct form of economic stimulus.
Because those groups tend to spend the money quickly.
Exactly. People living on tight budgets generally use extra funds immediately for essential needs, groceries, rent, gas, repairs. That money flows right back into local economies, supporting businesses and jobs. It provides a rapid boost.
Which is part of the political appeal. Besides just helping people, it stimulates the economy from the bottom up.
That's the theory, yes.
Yeah.
It's seen as an efficient way to get money circulating quickly where it's most needed.
Okay. So as we wrap up this deep dive, what's the main message going forward?
Vigilance. We have to remain vigilant. We'll keep monitoring the status of this proposal, tracking any legislative movement, watching the financial projections, seeing if the political follow-through actually happens.
Because the credibility of the whole thing depends on what happens next.
Entirely. We have the baseline from the sources, the promise made repeatedly, the target audience, low middle income, good news for fixed income folks, and the proposed funding, tariffs, but needs borrowing.
Sure.
Now we wait for action.
And that vigilance is crucial for our listeners, too. Managing a fixed income is tough. You need reliable, up-to-date information.
And we promise to provide that. As soon as there's definitive news, official legislation, and executive order, those crucial details on dates, taxes, garnishment, we will bring it to you.
Okay, let's quickly summarize the absolute most important takeaways for everyone listening.
Let's do it.
First, the proposed amount is significant, at least $2,000 per person.
Second, the target group is now explicitly stated as low and middle income USA citizens. This strongly suggests inclusion for almost everyone on Social Security, SSI, SSDI, based on typical income levels. Your income is the key.
Third, the funding is tied to tariff revenue, but the math shows it requires substantial future borrowing, likely against 10 years of projected income to cover the immediate $568 billion cost. That's the big financial hurdle.
And fourth, this is a proposal that has now been publicly endorsed 4 times in less than a year. This repetition massively increases the pressure on the administration to actually deliver, making follow-through critical for their credibility.
Got it. $2K, low-middle income focus, tariff-funded borrowing. 4th time's the charm. Hopefully.
Hopefully, and maybe a final provocative thought for people to chew on.
Go for it.
The very fact that such a huge $500 billion payout is being planned based on borrowing against projected future tariff income. It raises really fundamental questions, doesn't it, about the long-term sustainability, the fiscal transparency of using this specific revenue stream for this kind of immediate broad relief.
You mean, is this a genuinely new way to fund help or just creative accounting for more borrowing?
Exactly. Is it a sustainable model for future relief efforts? Or is it essentially just repackaging standard deficit spending with a politically appealing label like tariff income? How reliable are those 10-year projections anyway? That whole debate about whether this sets a new precedent for financing federal aid, that's something really worth thinking about as this develops.
That's a powerful point. Is it real fiscal innovation or just shifting labels? Definitely something to keep an eye on.
Indeed.
Well, that brings us to the end of this crucial financial deep dive. Thank you for joining us. If this analysis of the $2,000 dividend proposal is important for you or for someone you know, a friend, a family member,
please subscribe to the deep dive. Hit that notification bell. That way you won't miss any updates on this or any other financial news that directly affects Social Security, SSI, SSDI, VA benefits, or your fixed income.
And please, share this deep dive. If you know someone who needs this clarity about the $2,000 promise, send it their way. Knowledge is power, especially when managing tight finances.
Absolutely. Until next time, stay informed.
Attention. A major financial announcement is on the table, potentially delivering a $2,000 dividend directly to millions of Americans.
And this isn't just for tax filers. We are talking about a significant payment targeting low and middle income individuals, seniors on Social Security, and recipients of SSI, SSDI, and VA benefits.
If you earn under $100,000 a year, this proposed payment could be coming your way in the form of a tariff rebate or a dividend check.
We're diving deep into the proposal, who specifically qualifies, why political leaders are opposing the idea, and the shifting timeline for when this $2,000 per person could arrive.
This is the financial update you need to understand right now. If you are one of the millions of Americans who, relies on a fixed income, maybe you receive Social Security, SSI, or VA benefits, and you're really struggling to keep up with the cost of groceries.
Which is almost everyone in that situation.
Exactly. Then the sound of a potential $2,000 check coming straight to you is probably, well, it's dominating your financial thoughts right now.
It absolutely is. I mean, this is a major, highly publicized financial announcement. It has captured the attention of every senior and low-income beneficiary in the country. It represents a potential, a very tangible lifeline.
Right.
So today we are analyzing a very specific proposal for a significant proposed payment, a dividend, that targets low and middle income individuals. And it explicitly includes seniors, those on disability, and our veterans.
That's right. Our mission today is, well, it's straightforward, but our approach has to be deep and analytical. We are diving deep into this proposal for a $2,000 dividend check.
And we have to move beyond the headlines.
Well, we have to. We need to clarify exactly who qualifies, understand the really novel funding mechanism that's tied to tariff revenue, and crucially, we have to address the significant political conflicts and that moving timeline that suggests this relief is, well, it's far from guaranteed.
We've seen incredible sustained interest in relief efforts over the last few years, and this proposal, it cuts directly to the core financial anxiety that's felt by so many on fixed incomes.
It really does.
The central claim is a proposed dividend or stimulus check of at least $2,000 per person. So, we have to analyze the source material very thoroughly, clarifying the eligibility rules, especially for beneficiaries, and really dissecting that funding mechanism.
And we have to confront the serious political and logistical hurdles that are, already delaying action.
They really are.
Okay, so let's unpack this crucial detail right out of the gate, because this is the fundamental difference between this proposal and previous federal aid programs. When we talk about this financial announcement, the amount is framed as a dividend of at least $2,000 a person.
Yes.
Let me just emphasize that again. Not per household.
And that distinction is not just important, it's, I would say, revolutionary in the context of federal relief. In past stimulus efforts, while dependents often generated a credit, the primary payment structure frequently revolved around the tax filing unit, the household.
Right, the house.
The source material here explicitly clarifies that this proposed check is for each individual. That means adults and dependents who meet the income criteria would be eligible to receive $2,000.
Okay, so let's break that down for a minute. If you are, say, a married couple with 2 eligible children, and you all fall within that low-income threshold because you're on fixed benefits or maybe low wages, you are potentially looking at $8,000 in total.
$8,000, yes.
That just drastically shifts the potential financial impact, especially for working families and low-income households with multiple dependents, when you compare it to a flat $2,000 per household payment.
Exactly. I mean, this structure, it acknowledges the reality that costs scale with the number of people in a household, right?
Yeah.
And it delivers a much, much more substantial boost to larger families who are struggling at the lower end of the income scale.
So it's an explicit mechanism to distribute wealth based on what individual need and household composition, rather than just tax filing status.
That's a perfect way to put it. It's about the people, not the paperwork.
Now, you will hear this payment referred to by a few different names: a tariff rebate, a stimulus check, or a dividend check. While these terms are, used interchangeably in public discussion, the source material really anchors the payment mechanism to the tariff rebate idea.
Which brings us to our first major analytical section, the funding.
Right.
And this is where the proposal presents itself as fiscally unique and, frankly, quite challenging to execute legally.
This is where it gets really interesting, not just in terms of the money, but the method. Where exactly is this massive pool of money supposed to come from? Because the proponent of this proposal is absolutely adamant this is not deficit spending.
And that's the key selling point. The primary mechanism cited for funding this is the massive tariff income it's supposedly pouring into the U.S. from foreign countries. The idea is essentially to treat this specific revenue stream, these are taxes collected on imported goods, as a kind of surplus income.
A surplus.
A surplus that should be returned to the citizens who, ultimately bear the burden of those trade taxes through higher prices.
So that makes the payment, at least conceptually, a direct rebate from trade revenue. It's not a draw from the general Treasury fund that's funded by our income taxes, or even worse, deficit spending. But let's pause and analyze that term for a second. Massive tariff income.
That is a key phrase, isn't it? It implies that recent trade policies, specifically the imposition of tariffs on goods from countries like China, have generated a windfall. A windfall that's large enough to sustain a multi-billion-dollar payout to the American people.
You have to wonder about the numbers, though. I mean, to put this into perspective, for the government to issue $2,000 checks to even, say, 50 million Americans, that's $100 billion.
$100 billion.
The claim that current tariff revenue can support that scale of payment, that is a very bold economic statement.
It's an incredibly bold statement, and it suggests a level of success in trade policy that allows the proponent to declare this revenue stream as, ready for disbursement. But there is a very specific dual purpose cited for this money that attempts to make the proposal politically unassailable from a fiscal perspective.
Right, and that's the strategic brilliance of the messaging, isn't it?
It really is. The money would first be used to issue the $2,000 dividends to low and middle income U.S. citizens. That's the immediate public-facing priority. But critically, any money left over after the dividend payments, that will be used to substantially pay down the national debt.
Paying down the debt, which, the source material cites it at a staggering $37 trillion and explicitly characterizes it as a national security issue.
And that pairing of goals, immediate tangible relief for citizens and a major reduction of the national debt, is so strategically important. By linking the dividend payment to a self-sustaining source like tariff revenue, the proposal attempts to portray itself as economically responsible.
So it's basically saying, look, we are tackling the national debt crisis while we are simultaneously addressing the severe personal debt and the rising cost crisis that's facing everyday Americans.
Exactly. It's presented as a win-win.
But I have to challenge the feasibility here for a moment. If the national debt is $37 trillion, even if you dedicate, I don't know, $50 billion of residual tariff funds to debt reduction after the payments are made, well, that's commendable. It's a fraction of the total debt.
A drop in the ocean.
It really is. So it raises a skeptical question. Is the debt paydown component a serious fiscal plan? Or is it primarily a political tool designed to neutralize criticism that the dividend is just irresponsible spending?
That is precisely the analytical lens we have to use. The optics are paramount here. While the source material emphasizes the intent to reduce the debt, the sheer scale of the national debt means that the impact would be symbolic, really, rather than truly structural.
But the intent to use non-borrowed funds for relief, that is structurally sound, you have to admit.
Oh, absolutely. It completely avoids the inflationary critique that's so often leveled against standard deficit-funded stimulus checks.
Okay, so this isn't just a concept, though. The White House commitment, according to the sources we have, confirms that the administration is committed to making that happen. And by that, they mean the proposed $2,000 payment.
Yes. And this is where we transition from a policy goal to, operational reality. The source indicates that the team of economic advisors is currently exploring all legal options to issue these checks to millions of Americans.
Hang on a second. If the administration is committed to making that happen, why are they still only exploring all legal options? That suggests the core mechanism for using tariff revenue for direct distribution is, well, it's fundamentally shaky or maybe unprecedented, doesn't it?
It absolutely does. Standard tax revenue goes through the congressional appropriations process. That's how it works. Tariffs are collected by the Treasury, and they are generally dedicated to specific, legally mandated purposes.
But this is different.
Very different. Direct cash distribution of tariffs to individuals who haven't necessarily paid those tariffs directly. That is a novel application. This implies they are searching for a new interpretation of existing law, or perhaps using executive order authority in a unique way to bypass traditional congressional appropriations for relief payments.
And that search for a novel legal mechanism, that explains the major caveat mentioned in the initial confirmation, right? That at the time of the reports, there was no specific timeline or further details available regarding the mechanism?
Exactly. They confirmed the intent, the what, but the how was still being desperately figured out.
And this lack of detail creates all the confusion and the shifting timelines we're going to discuss later. But for now, let's focus on the most important section for you, the listener, eligibility. Who specifically qualifies for this potential $2,000 check, and what are the definitive boundaries?
Right. The first and most crucial detail is the income threshold, which is designed to ensure this is truly targeted relief. The proposal is very clear. High-income people would not qualify for these payments.
This is explicitly meant to target those who have struggled most recently with inflation and rising costs.
And we have a very clear hard income cap cited in the source material. Eligibility applies to U.S. citizens who make $100,000 or less in a year. And crucially, this includes people who have zero income, like certain SSI recipients or non-filers who rely solely on fixed benefits.
So why $100,000? In previous discussions, federal relief often used $75,000 for individuals or maybe $150,000 for couples. This $100,000 limit, while it still covers what we'd consider middle and lower income, it's relatively generous for an individual. It ensures that even moderate income families who are feeling the pinch of inflation are included.
It serves as a very clear dividing line, targeting that broad demographic of middle and lower income people. For many Americans, particularly those relying on fixed government benefits, $100,000 is, it's multiple times their actual annual income, making them unquestionably eligible for this relief.
And this is a massive point of reassurance for our core audience, which is heavily represented by those relying on federal benefits. We need to explicitly detail why these groups are not excluded by that income cap.
Let's do that. Let's just run through the list of specific beneficiary groups that are explicitly provided in the source material, confirming they fall under that $100,000 income umbrella.
Okay.
First, seniors receiving Social Security retirement benefits. Then you have individuals receiving SSI, which is supplemental security income.
Right.
Also individuals receiving SSDI, Social Security disability insurance, veterans receiving VA benefits, whether that's compensation or pension.
Okay.
And it also includes recipients of railroad retirement benefits and recipients of spousal or survivor pay benefits.
So that encompasses virtually every major federal fixed income program. But let's talk for a moment about the distinction between SSI and SSDI, because our listeners often confuse the two, and that confusion relates directly to financial protection later on.
That's vital context. SSI is supplemental security income. It's a needs-based, means-tested program. It's designed for the lowest income elderly and disabled individuals. Because it is means-tested, it has very strict income and asset limits, and that makes SSI recipients the most vulnerable when they receive a large lump sum payment like $2,000.
Okay, and SSDI.
SSDI, Social Security Disability Insurance, that's for those who have worked and paid into the Social Security system but are now disabled. Their income is derived from their past contributions, not their current financial need, so they're not generally subject to the same strict asset tests as SSI recipients.
So the $2,000 payment poses less of a risk to their ongoing eligibility, though it could still potentially be taxable.
Exactly. And by explicitly including both SSI and SSDI recipients, the proposal is clearly acknowledging the demographic most impacted by inflation and most dependent on federal aid. It recognizes that disability payments, regardless of their source, are rarely enough to cope with a 21% rise in grocery prices.
The reassurance here is definitive then. Since these benefits count as income, as long as that total income from benefits, or a mix of benefits and maybe some limited work, is under $100,000, these recipients are confirmed as eligible.
Yes, the proposal targets them directly.
And one final standard constraint that's mentioned in the proposal, we have to stress this: the payments will be made exclusively to U.S. citizens.
Yes, that remains a boundary for the distribution of these funds. It's consistent with most direct financial aid programs tied to federal revenue streams, whether it's general taxation or, in this case, tariff revenue.
Okay, so we have the amount, we have the target, and we have the funding source. Now we have to turn to the messy part, the timeline and the politics, because this is where the proposal starts to look less like a certainty and more like a political aspiration.
The timeline has been a complete roller coaster. It's caused significant confusion, and it's driving intense political commentary. Initially, the suggestion was extremely optimistic, right? It created a sense of urgency and immediate relief.
It did. The proposal was that checks could be sent out in just a few months after the confirmation of the administration.
Just a few months suggests immediate relief. It suggests maybe late this year or early next year. That's a timeline that corresponds to the perceived urgency of the current economic crisis faced by fixed-income Americans.
Exactly. But that timeline was later drastically shifted. The source material reports that the proponent later clarified the timeline, moving the potential arrival of the checks all the way to the middle of next year.
That is a fundamental change. I mean, you're moving from potentially within a quarter to essentially a year away.
Yeah.
And given the administration's stated commitment, we have to analyze the implication. Is this delay logistical because of the difficulty of creating that novel legal mechanism for tariff distribution?
Or is it purely political timing?
I think that's the real question. Experts and analysts cited in the source material are quick to point out that timing the payment to the middle of next year places it intentionally just before the midterm election. From a political calculus perspective, a check arriving just as people are heading to the polls is an undeniable attempt to give the proponent a major political advantage.
This shift just changes the narrative entirely, doesn't it? It moves from immediate humanitarian relief driven by a crisis to a calculated, politically timed incentive. If the legal options were truly viable and the commitment was immediate, why not push this through now?
Well, the logistics of establishing a new payment system via tariff funds, they must be complex. But analysts are suggesting that the political benefit of that timing is just too great to ignore.
And the delay also gives the opposition more time to mount a challenge, which leads us to another area of major contradiction: the nature of the payment itself. We need to analyze the conflicting statements from within the administration on this.
Yes, this is a huge one.
Exactly. Treasury Secretary Scott Bessent noted that the dividends would go to working families and then suggested the dividends could come in the form of tax decreases.
Okay, this is a massive contradiction that we have to dissect for our low-income listeners. A tax decrease, by its very nature, benefits those with high tax liability. It is fundamentally contradictory to the goal of helping low and middle income people who often pay fewer taxes.
Or who are primarily reliant on fixed benefits, which are, often non-taxable or only partially taxable.
Precisely. If the relief comes as a reduction in tax liability, like a lower marginal rate or larger non-refundable credit, it disproportionately benefits high-income earners who have substantial tax liabilities to offset.
So for our audience, for someone making, say, $30,000 on Social Security or SSI, who might already owe zero in income tax, tax decrease often translates to nothing.
Absolutely nothing. They don't have taxes to decrease. The only way to provide them with the $2,000 promised is through a direct, refundable cash dividend.
The moment the payment is framed as a tax benefit, it potentially cuts out the exact demographic the proposal claims to be targeting.
It does. It cuts out those receiving SSI, SSDI, and low retirement benefits, unless it's structured as a 100% refundable tax credit. But the source material referred to it as a tax decrease, which implies a very different mechanism.
And this conflict created immediate widespread confusion. I mean, is this cash relief or is this tax reform?
The source material highlights this inherent contradiction, which forced the primary proponent to step in and clarify.
And the clarification was crucial, wasn't it? The source material later reinforces that the primary proposer clarified the payment would indeed be a dividend check, specifically excluding high-income people.
Right, so it returned to the original intent of a direct cash payment, not a tax decrease.
That clarification attempts to close the loophole that was introduced by the Treasury Secretary, ensuring the benefit remains targeted as cash relief to those below the $100,000 income cap. But the fact that this deep internal contradiction even arose, it just highlights the lack of clear, unified policy and the underlying difficulty in implementing this novel funding structure.
And speaking of a lack of consensus, we have to address the significant internal division that's reported in the source material: political opposition. Republicans are reportedly opposing the idea of sending these $2,000 checks to millions of Americans.
Which is a crucial detail because this opposition is coming from within the proponent's own party. For a proposal driven by the party's leader, opposition like this suggests significant ideological or fiscal disagreement regarding the concept of direct cash payments.
Even if they are funded by tariffs and tied to debt reduction.
Exactly. So we need to analyze the specific arguments that the political opposition is likely deploying based on the general reporting. What are the opposing arguments against a direct tariff rebate?
Well, we can deduce a few major lines of attack. First, there's the inflation argument. Even if the funding is non-deficit, critics will argue that pumping billions of dollars directly into the economy, especially close to an election, is inherently inflationary.
And that could potentially offset any benefit gained by recipients. For low-income Americans, that is a genuine fear, because inflation just erodes the value of their fixed benefits.
Then there's the market distortion argument. Critics might argue that diverting massive tariff revenue away from other governmental uses like infrastructure projects or defense spending and using it purely for a consumer dividend, well, that distorts market signals and sets a risky precedent for trade funding.
And the third argument?
The legal precedent argument. Opposition will likely challenge the legality of using tariff funds in this manner without explicit congressional appropriations. That could lead to lengthy legal battles that would ensure the checks are delayed well past that middle of next year target.
And the source material highlights a very poignant debate on funding priorities that underscores this opposition. There is an internal conflict noted, a willingness to give billions to other nations versus the resistance and questioning the if and buts regarding the national debt when discussing aid for low-income Americans.
This points to a fundamental philosophical clash, doesn't it? On one side, you have the immediate tangible need of struggling Americans who are often facing a survival crisis due to economic factors beyond their control.
And on the other side?
On the other, there is a strict fiscal ideology that resists any perceived handout, especially if it involves allocating funds that could theoretically go towards symbolic debt reduction or other globally focused spending.
It just raises a powerful question of priorities. Why is the national debt cited as an immediate national security issue when it comes to supporting our own low-income citizens, but perhaps less of a concern when discussing foreign aid or other expenditures?
That perceived inconsistency is highlighted directly in the source material, and it fuels the skepticism surrounding the opposition's true motivation.
It really shifts the focus from an economic debate to an ideological one, then. The political opposition seems to be battling not the existence of the tariff revenue, but the method of distribution, a direct cash dividend to the most financially vulnerable populations.
That's right. And to fully grasp the importance of this ideological battle, we need to transition now into the broader economic context. Why is this $2,000 proposal so critically important right now for the millions of Americans we are targeting?
Because the urgent need for relief is profoundly real and, sadly, very easily quantifiable. We need to connect this proposal directly to the current economic hardship that's facing everyday citizens, especially those living on fixed incomes.
And the source material provides a deeply concerning data point from a Gallup report. According to Gallup, the prices of groceries are up by a staggering 21% in the past 3 years.
21%. Let's just sit with that number for a moment. Inflation, by its nature, it hits fixed-income seniors the hardest because their Social Security cost of living adjustment, their CLA, it often lags behind the actual real-time increases in essential goods.
Oh, absolutely. A COLA increase might offer 3, 4, maybe 5%, but a 21% jump in the cost of food is a sustained financial gut punch that requires immediate intervention.
Catastrophic is the only way to describe the effect on survival budgets. We see the direct impact on daily life cited in the source material. Americans are reportedly unable to afford 3 meals a day.
They're resorting to relying on credit cards just to purchase necessities. And many are struggling to pay rent because they have to prioritize grocery expenses above everything else.
This struggle forces people into just agonizing decisions. Should I buy the medication I need, or should I fill my pantry? I mean, this is not just belt-tightening. It is a crisis of dignity and survival for our most vulnerable citizens.
It is. And this desperation creates a perverse situation where the massive national debt, that $37 trillion cited as a national security issue, it completely overshadows the mounting personal debt crisis among millions of struggling Americans. The source material draws a powerful contrast here.
Think about that trade-off. Politicians focus on the massive abstract number, but millions of people are facing immediate insolvency, forced onto high-interest credit cards just to buy basic goods.
And the $2,000 payment is intended to provide immediate debt relief, or at least allow someone to pay for groceries for several months without relying on high-interest credit. It's effectively buying them crucial breathing room.
The source material is very clear in contrasting the political focus on that macro-level debt with the often overlooked issue of mounting personal debt. Many are forced to live on credit cards, which only compounds their financial instability.
So this $2,000 dividend is pitched as a way to allow people to pay down a small credit card balance or cover crucial expenses, offering a temporary bridge over this 21% inflation gap.
Now, briefly, the source material does mention a related executive action taken by the administration, the signing of an executive order concerning the well-being and care of foster kids. This highlights other priorities, but it's tangential to our core discussion of the financial dividend.
Agreed. For our deep dive, the $2,000 check remains the central topic, which brings us to the most critical section for our audience, the practical details, or rather the concerning lack thereof, regarding financial protections.
And this is absolutely paramount for our listeners, particularly those who rely on means-tested programs like SSI, Medicaid, and SNAP. Since this is still a proposal drawn from initial statements, the source material does not contain specific details on crucial financial protections.
And that silence is extremely dangerous for the most vulnerable.
So what exactly are we missing, and why must we stress caution here?
We are missing confirmation on several fronts. First, the specific mechanics. We don't know the exact payment dates beyond that broad middle of next year speculation, but more importantly, we don't know the specifics regarding taxability.
Right. Is this $2,000 dividend tax-free, like some past pandemic relief, or will it count as taxable income? For someone whose income is already barely above a threshold, making the dividend taxable could trigger unforeseen tax consequences.
And for those on low-income assistance, the impact on benefit eligibility is the ultimate concern. Will this payment be protected from garnishment? And how will it affect eligibility for means-tested benefits like SNT, Medicaid, or housing assistance?
Let's focus intensely on the SSI and Medicaid recipients for a moment. SSI and Medicaid eligibility relies not just on income, but also on asset limits.
Yes, often capped at just $2,000 for an individual or $3,000 for a couple.
So this is the crux of the danger, isn't it? If a one-time $2,000 payment lands in the bank account of an SSI recipient and is not specifically shielded, it instantly pushes them over the $2,000 asset limit.
Instantly. And even a temporary breach of that limit could result in a loss of their SSI payments and, critically, a loss of their Medicaid health coverage.
Which would defeat the entire purpose of the relief. Giving someone $2,000 only to strip them of their essential health insurance is it's financially and ethically irresponsible.
And when Congress passed previous stimulus payments, they included explicit language making those payments non-countable as income or assets for 12 months for means-tested programs. That's the precedent.
So if this proposal is enacted, it absolutely must contain similar explicit language shielding the $2,000 payment from being counted toward the SSI or Medicaid asset and income limits. Without that assurance, recipients on SSI should be extremely cautious about how and when they receive or spend these funds.
We also lack details on how it might affect Medicare premiums. Typically, a one-time payment wouldn't change the long-term income calculations used for premium adjustments. But that needs explicit confirmation, especially if the dividend is determined to be taxable income.
And we have to consider garnishment. If this money is not specifically protected by law from garnishment, for example, for outstanding private debts, court judgments, or even past child support, that $2,000 could instantly be seized by creditors upon deposit.
Meaning it would never reach the struggling American it was intended for.
Furthermore, we do not have specific information on application requirements. Now, we can reiterate that historically, for recipients of Social Security, SSI, SSDI, or VA benefits, no application is needed. The government typically uses existing benefit rolls to send payments.
However, given this proposal's reliance on a novel tariff mechanism, there is a remote possibility that non-filers, such as those relying solely on SSI, might need to file a simplified tax form to register, as was required in some previous rounds. We must stress that until specific legislation or executive order details are released, we cannot guarantee that no application is needed.
And finally, because we're discussing a major financial announcement that targets vulnerable populations who are so often the targets of unscrupulous actors, we have to include the strongest possible warning against scams.
That is a necessary public service. Scams are already proliferating around the mere suggestion of a $2,000 payment. You must remember this fundamental truth. The government, whether it's the IRS, SSA, or VA, does not call, text, or email you asking for money or personal information related to benefit checks.
If this proposal moves forward, scammers will absolutely try to capitalize, demanding processing fees or personal data to process your check. Always rely only on official, verified government communication.
That typically comes through the mail or through secure portals like the My Social Security website. Never give your bank details, Social Security number, or payment card information to anyone who contacts you unsolicited regarding this $2,000 dividend.
This deep dive has clarified the details of the proposed payment, but it has also revealed the immense uncertainty surrounding its execution and protection. The political will is clearly articulated by the proponent, but the legal mechanism and the internal opposition pose serious threats to its timely arrival.
So let's quickly summarize the key takeaways, focusing on the factual elements we know before we offer a final provocative thought for you to consider.
The essential facts are these. First, the proposed amount is $2,000 per person individual, not per household. This unique structure drastically increases the potential payment for low-income families with dependents.
Second, eligibility is strictly limited to U.S. citizens earning $100,000 or less annually. This explicitly includes virtually all recipients of Social Security, SSI, SSDI, Railroad Retirement, and VA beneficiaries.
Third, the intended funding source is tariff revenue. This connects the payment to national trade policy and positions it as a non-deficit measure, so it avoids that major inflation critique leveled at previous stimulus rounds.
And finally, we have to reinforce the uncertainty and the conflict. The shift from an initial a few months timeline to the later politically charged middle of next year timeline creates deep skepticism. This, coupled with the fundamental internal political conflict and confusion over whether it's a direct cash dividend or a tax cut, means this proposal is very far from a done deal.
And critically, for you, our audience, the source material lacks details on the essential protections against garnishment and the impact on means-tested programs like SSI and Medicaid. These protections are non-negotiable for the successful, responsible delivery of this relief.
And this brings us to the ultimate question raised by the source material, circling all the way back to the funding mechanism and the political dynamics. If the proposed tariff revenue is indeed massive, as it's claimed to be, massive enough to fund both $2,000 payments to millions and substantially pay down the $37 trillion national debt, what does this imply about the current structure of global trade?
That is a fundamental economic policy question, isn't it?
Yeah.
If tariffs are bringing in such substantial surplus revenue, it suggests that the economic cost of these tariffs is either being absorbed by foreign exporters or the U.S. consumer is paying an extraordinary amount in hidden taxes through import fees.
And if that revenue stream exists, why does this specific mechanism for distributing it, a direct cash dividend aimed at relieving the financial pressure caused by a 21% increase in grocery costs, face such strong, immediate opposition, even from within the proponent's own party?
It suggests that the resistance might not be purely about the economics. I mean, using tariff revenue for debt reduction is usually lauded, but rather about the political optics or the mechanism of direct cash handouts to low-income populations.
It raises an important question about whether this is truly seen as an economic solution to inflation or merely a perceived political benefit timed perfectly for the next election cycle.
Regardless of the political maneuvering, we have to acknowledge the immediate, life-changing potential of $2,000 for those struggling today. We started this discussion by citing the 21% rise in grocery costs. For those struggling to put 3 meals a day on the table, that money offers not just breathing room and debt relief.
It offers essential financial stability and dignity.
It really does. Staying informed is crucial. This is a developing story, and the legal details regarding the implementation mechanism, protection from garnishment, and the final timeline will be what truly dictates whether this proposal can deliver meaningful, safe relief to those who need it most.
We encourage you to keep tracking these developments with us, especially the crucial updates regarding SSI and Medicaid protections, and we will update you immediately as soon as more facts emerge. Thank you for joining us for this crucial deep dive.
Until next time.
Welcome to the Deep Dive. If you are an older adult, a retiree, a veteran, or, frankly, anyone relying on Social Security SSI, SSDI, or VA benefits, you're going to want to listen very closely.
You really are, because the conversation that is absolutely dominating Washington right now involves a proposal that could put significant, and I mean immediate, financial relief right into your bank account.
We're talking about a major piece of financial news, the discussion around a potential $2,000 direct payment.
That's the number, $2,000.
Now, some people are calling it a stimulus check, others are calling it a dividend payment.
Right.
But whatever you call it, the number is concrete.
And the single most urgent question, the one that we know causes the most anxiety for anyone on a fixed income, is this. Are beneficiaries included?
Or is this just for people with, traditional jobs?
Exactly. So our mission today is to take the direct comments from Treasury Secretary Scott Bessent, he's the one leading this, and really use them as a roadmap to clarify who is eligible and hopefully provide some real reassurance.
Because let's be honest, with the cost of living pushing everyone's budget to the absolute limit, that $2,000 could be the difference.
It could be everything.
Okay, let's unpack this.
So to start, just to lay the foundation, this is real. This proposal is well beyond just an idea being floated around.
It's not just talk.
Not at all. Treasury Secretary Scott Bessent has confirmed it. The administration is actively discussing and developing a plan to send $2,000 direct payments to average Americans. This is an active initiative.
And what I find fascinating right from the start is the language they're using.
The terminology, yeah.
It's not just one thing. He's using the term we all know, the $2,000 stimulus check.
Right, which everyone remembers.
But he's also using these more, policy-sounding phrases like $2,000 dividend payment or even a refund. Why are they doing that?
It's a really crucial distinction, both politically and legally. When you say stimulus check, it immediately makes you think of the past emergency payments, like from the CARES Act.
It frames it as emergency help.
Precisely. It's aid to stabilize a struggling economy. But when you start using words like dividend or refund, you're subtly changing what the payment is.
How so?
Well, a dividend, that implies the government is returning money from, say, economic success to its shareholders, the American public.
And a refund.
A refund suggests it's just giving you back taxes that you overpaid. It's your money to begin with.
So it's a messaging strategy. It lets them frame the payment in a way that appeals to different groups, different political ideas.
That's it exactly. You can see it as essential relief, or you can see it as money you were owed all along.
Right.
But the objective, no matter what you call it, is the same.
And that objective seems pretty clear.
Oh, absolutely. The Secretary said this is a direct response to the very real and severe concerns people have about inflation and the rising cost of living.
So they see this as a tool to get spending power back into people's hands.
Yeah.
immediately.
Yes. And he was careful to point out this wasn't some rushed, last-minute idea. He framed it as part of a long-term strategy.
Right? He said they've been working on solutions since day one of the administration. He even mentioned some earlier executive orders.
And that continuity part is really important for you, the listener, because it suggests they're committed to this. It's not just a political soundbite they're going to forget about next week. They want to see it through the whole process.
And this commitment is part of what he called their two-pronged strategy for relief,
A two-pronged attack on high costs, really.
which is designed to hit the problem from two different directions at the same time.
That's right. Strategy one is the direct cash. The $2,000 payment, the refund, the dividend, whatever its final name is, that's the immediate money-in-your-hand relief.
And strategy two.
Strategy two is a parallel effort. It's more structural. It involves changing trade policy with the specific goal of lowering the prices of everyday things you buy.
I do like that they're looking at both sides of the budget. They're trying to raise your income with the payment.
And lower your expenses with the policy changes. We are going to get into the trade stuff a bit later because it's really interesting.
But for now, the main takeaway is that this isn't just a simple handout. They're trying to use all their economic tools.
Yes, it's a blend. An immediate cash injection mixed with these longer-term adjustments to fight inflation. It's different from the last stimulus rounds.
But none of that matters if they can't actually get the money out. And that brings us to the big roadblock.
Congress.
Right.
The secretary was very, very clear on this, and it's so important for managing expectations. This payment requires Congress.
This is not something the president can just sign into existence tomorrow.
Absolutely not. This isn't an executive fiat. The Treasury can't just start sending checks.
So for our listeners, that means it has to go through the whole process. It has to pass the House of Representatives.
Then it has to pass the Senate.
And only then does it go to the president to be signed into law. And given how things are in Washington right now, getting a majority in both chambers is, well, it's a huge hurdle.
It's a massive hurdle, and that's exactly why the conversation immediately shifts to other ways of getting it done.
Alternative pathways.
Right. Lawmakers have already started talking very seriously about using the budget reconciliation process.
Okay, reconciliation. That's a term a lot of people have heard, but they might not know exactly what it means or why it's so important here. Let's really dive into that.
We have to, because it represents the best hope for getting this done quickly. Reconciliation is a special procedure in the Senate. It's mainly for bills related to federal spending, revenue, budget stuff.
It's a superpower.
Its superpower is that it can't be filibustered. So instead of needing 60 votes to pass something in the Senate, a reconciliation bill only needs a simple majority.
51 votes. Or 50 plus the vice president's tie-breaking vote.
Exactly.
Yeah.
That's the hope. It's a potential shortcut around all the gridlock.
But if it's that easy, why don't they pass everything that way? There have to be limits, right?
There are big ones. It's called the Byrd Rule, and it basically says you can only use reconciliation for budget measures. You can't stick in extraneous stuff.
Meaning things that don't have to do with spending or taxes.
That's right. You couldn't, for example, attach a huge new healthcare law to a reconciliation bill that's just supposed to authorize a payment. It keeps the bill focused.
So if they structure this $2,000 payment as, say, a tax refund, like they've done before,
then it fits perfectly. It's a prime candidate for reconciliation. It just means the bill itself has to be clean, lean, and focused only on that spending.
which helps us understand why lawmakers are already saying more reconciliation bills are coming. They're signaling they have a high priority item like this that they might need to push through without bipartisan support.
It shows their strategy. And the secretary's comments really reflect that flexibility. He said the president is all about solutions and that everything is on the table.
Which is code for, we'll try the normal way first.
But we are fully prepared to use reconciliation if we have to. They just want to get the money out.
And this all ties back to some of the administration's other financial promises, right?
Mm-hmm.
The secretary mentioned things like no tax on tips, Social Security, overtime.
He did. He connected it all to a very specific prediction. He said that because of all these efforts, including this potential $2,000 refund, Americans are going to see a big bump in the first quarter with the refunds and the real incomes.
That phrase, real incomes, is key. It's not just about more dollars. It's about what those dollars can actually buy after inflation.
It's about purchasing power. He's building a narrative of sustained effort that will lead to real, tangible results early next year.
But that other phrase he used, working Americans and working families, that creates a huge risk. And it brings us right to the main fear our listeners have.
This is it. This is the moment we have to address the #1 source of anxiety from everything the Secretary said.
Because when he keeps saying for working families,
If you are a senior who hasn't worked in 20 years, or you're on SSDI because you can't work, that language makes you think, I'm going to be left out.
it's an immediate and completely understandable fear. The language is vague. But this is where we need to stop and provide the definitive clarity that comes from looking at how these things have always worked.
This is where the policy analysis is totally different from the political rhetoric.
And where it gets really interesting.
The crucial, definitive clarification from every single analyst who knows these payment systems is this. Eligibility is based on your income, period.
It's an income test, not a job test.
It's an income test, not a job test. I want to say that again. They check your total adjusted gross income, your AGI.
But let me just challenge that for a second. Couldn't they, if they really wanted to, write this bill to specifically exclude people who aren't working? To save money?
I mean, theoretically, Congress can write a bill any way they want, but the political fallout, not to mention the logistical nightmare of trying to do that, would be catastrophic.
It would go against all the precedent.
Completely. When the government sends out mass payments, they don't send people door to door to see if you have a job. They look at one thing, the income number on the tax forms they have for you.
So in every previous stimulus or refund program, the threshold was based on that adjusted gross income number.
Every single time. And that number includes more than just wages. It includes the taxable portion of your Social Security, pension payments, interest, any taxable income.
So let's be as explicit as possible here. Based on that clear rule that income is what matters, we can confirm that recipients of Social Security retirement, SSDI, SSI, survivors benefits, VA benefits, railroad retirement, all of you.
You are intended to be included as long as your total income is below whatever limit they set.
It would be completely contradictory to the whole point of the program to leave you out.
Think about it. The payment is designed to help people struggling with the cost of living. Who is most vulnerable to inflation?
People on fixed, low income.
Exactly. Seniors, the disabled. Excluding the most financially vulnerable group would make the entire policy ineffective.
So the source of your income doesn't matter as much as the amount of your income.
Right.
A 9-to-5 job, Social Security, a VA pension. If the total is under the limit, you should qualify.
And this is backed up by the political analysis in our sources, too. The analyst said that creating a policy to specifically cut out federal beneficiaries would be, and I'm quoting, very bad. Very bad.
You're talking about tens of millions of people. A huge, engaged group of voters.
The analyst pointed out that the 2026 election is not that far away. Intentionally creating a relief bill that ignores such a massive part of the low-income population would be, quote, a really bad, not smart move.
It's just not politically survivable.
So when you hear the secretary say working families, you need to translate that. In government speak, in policy terms, that means households below a certain income threshold.
Don't get hung up on the word working.
Don't. Just focus on the income number that will be in the final bill. That's the only thing that will matter for you.
Okay, so we've established income is the key. So let's get into the actual dollars. What do we know about the income limits they're discussing for this $2,000 payment?
The secretary didn't give a final locked-in number in this particular clip, but he has given a very clear range recently. And the general idea is that it would be for individuals or households with an income under $100,000.
Under $100,000.
Yeah.
That's interesting. Because previous stimulus payments often started phasing out much lower, around $75,000 for a single person.
It's a crucial comparison. The fact that they're even talking about a ceiling as high as $100,000 suggests they're trying to cast a much wider net this time.
They're targeting more of the middle income group.
Right. People who might not have qualified before, but who are really feeling the squeeze from inflation now. It's an acknowledgement that everyone's purchasing power has gone down.
But he did say that number isn't set in stone. He said it could be 75, it could be 60. That's a pretty big range.
It is a huge range. The difference between a $60,000 and a $100,000 cutoff impacts millions of people. And that uncertainty is why we keep saying, don't worry about the speculation. You have to wait for the final text of the bill.
That's what will have the exact numbers for single filers, married couples, and so on.
Exactly.
Now for the question that causes so much stress for so many of our listeners, the non-filers.
The what about me question, I'm on SSI, my income's too low to file taxes, what happens to me?
And that anxiety is so valid. In the past, Non-filers have had the hardest time getting their money.
They have. But from a purely qualification standpoint, the news is actually very reassuring. If you don't file a tax return, it's almost always because your income is below the standard deduction.
And what does that mean when we're talking about an income limit?
It means that for the government's purposes, your income is effectively zero for tax calculations.
So the math is pretty simple. Is $0 less than $100,000?
Yes. Is it less than $60,000? Yes. You are highly likely to be eligible because your income is so low.
So not filing a tax return isn't a barrier. In a way, it's proof that you qualify.
That's a great way to put it. The lack of a return is often proof of your low income status.
But, and this is a big but, qualifying is one thing. Actually getting the money is another. We saw the government struggle with this before.
Immensely. They didn't have current bank information for millions of non-filers. So let's talk logistics. In the past, they set up an IRS non-filers tool online.
Which was difficult for a lot of people to use.
It was. But for beneficiaries, for people on Social Security, SSDI, SSI, or VA benefits, the process was different and much easier. The Treasury worked directly with the SSA and the VA.
To use the direct deposit information they already have.
Exactly. So the most important advice for you if you rely solely on benefits is this. If your monthly benefit is direct deposited, you should be set to receive this $2,000 payment through that exact same channel.
And what if you get your benefits on a Direct Express card?
The same thing applies. That card works just like a bank account for these purposes. They loaded the previous payments right onto those cards.
So as long as your info is up to date with the SSA or the VA, you shouldn't have to do anything extra.
You shouldn't. The anxiety is really for people who might get paper checks or whose bank account has changed recently.
So the key action item is to make sure your address and your direct deposit info are current with the agency that sends you your benefits.
That is the single best thing you can do right now to prepare. It's the simplest way for the government to find you and get you the money quickly.
The bottom line is they want to get this money to low-income Americans. Don't let the fact you don't file taxes make you think you'll be forgotten.
Let's shift gears now to that second prong of the plan. The part that isn't about giving you more money, but about making things cost less.
The trade policy changes.
Right. The secretary mentioned his team has been working on these trade deals for 6, 7, 8 months. They're just recently finalized.
And how do these deals actually lead to you saving money at the checkout counter?
The mechanism is tariffs. A tariff is just a tax the government puts on imported goods. By making these new deals, mainly with countries in Central and South America, the U.S. has agreed to get rid of those taxes on certain products.
And what products did he mention specifically?
He was very specific. He named everyday items: coffee, cocoa, bananas, and he said many other items as well.
And the idea is that when you remove those taxes, the prices here in the U.S. should come down.
That's the anticipation. These are not luxury goods. These are staples in most people's weekly grocery budget.
Do we have a sense of how much prices could drop?
He didn't give a percentage, but we know tariffs on food can be pretty significant, sometimes 5, 10%, or even more. So if you remove, say, a 7% tax on imported coffee beans, that savings should theoretically get passed on to you.
So the $2,000 payment is the immediate, shot in the arm.
The defibrillator, yeah.
And the trade deals are the long-term plan to keep prices stable. It's an interesting mix.
It is. And it's also smart politics. It lets the administration say, look, we're not just handing out money. We are fixing the structural causes of inflation with better policy.
Speaking of politics, let's circle back to why it's basically impossible for them to exclude beneficiaries from this payment.
It comes down to leverage and logistics. Economically, beneficiaries are the group hit hardest by inflation, so leaving them out makes no sense.
And politically.
Politically, it would be suicide. You would alienate millions of seniors, veterans, and disabled Americans who are all feeling the pain right now. That analyst's warning about the 2026 election is not an exaggeration.
And it's just harder to do bureaucratically.
It's so much harder. It's far more efficient to just use the existing SSA and VA systems to send money to everyone below the income line than it is to build a whole new system just to filter some people out.
So their inclusion is basically a political and a logistical necessity.
Which just reinforces what we said earlier. The test is income, not your job.
Okay, now for the practical concerns. Let's assume the bill passes and you qualify. People need to know the logistics, the timeline, and the protections that come with a payment this big.
And let's start with the most stressful part. When?
Yeah.
We know it depends on Congress, but what does that actually look like?
If a bill is introduced tomorrow, what are the steps?
Well, Based on past spending bills, it's unpredictable. First, the bill has to go through committee in the House. That's where they hammer out the final details. That alone can take weeks.
Then a vote in the full House.
Then it goes to the Senate. And that's where things usually slow down the most, especially if they don't use reconciliation.
So when the Secretary talks about a big bump in the first quarter,
Mm.
that's a really aggressive timeline.
Extremely ambitious. For you to get a payment in, say, January or February, that bill needs to be passed and signed into law by early December at the latest. That gives the Treasury time to set things up.
That would require a massive amount of political cooperation.
Or the immediate use of reconciliation. The point for you to understand is that any delay will be because of politics in Washington, not because the Treasury is slow.
Okay, delivery. We touched on this. For most beneficiaries, it should be automatic, right?
It should be. In every past round, if you are already getting federal benefits by direct deposit, the Treasury just used those payment files. It's the fastest, easiest way.
So the $2,000 should show up in the same bank account your Social Security does.
Would be loaded onto your Direct Express card.
Yes.
As long as your information is current, you shouldn't need to go to some special IRS website or fill out a new form.
That's a huge relief. Now, financial protection. Is this payment going to be taxed?
Based on all the precedents, no. This kind of payment is almost always structured as a tax credit or a refund, which means it is not considered taxable income.
More importantly, does it affect your eligibility for other benefits, like SSI, SNAPI, Medicaid?
That is the critical question. If getting $2,000 suddenly pushes you over the asset limit for SSI, you could lose your monthly benefit, which would be a disaster.
It would defeat the whole purpose.
It would. And that's why past legislation has always included specific protections. They usually write the law so that these payments don't count as income or a resource for 12 months.
So it shouldn't affect your other federal benefits.
We have to assume the final bill will include that same vital protection. It's something everyone needs to look for in the final text.
And what about debt collectors? If someone has private debts, can this money be garnished?
Another great question. In the past, these payments were protected from garnishment by private creditors, so credit card companies, medical debts, things like that.
But not from government debts.
Generally not. Things like back taxes or overdue child support could still be taken out of the payment. So, again, the final text of the law is what matters. The expectation is protection from private debt, but not necessarily from federal or state debt.
And finally, we have to issue the warning: scams.
We have to be so loud and clear about this.
The Treasury, the IRS, the Social Security Administration, the VA.
They will never, ever call you, text you, or email you asking for your personal information or for a fee to get your payment. It will never happen.
If anyone contacts you and says you need to pay a fee to expedite your $2,000 dividend, it is a scam. 100% of the time.
Hang up. Delete the email. Block the number. Only trust official letters in the mail from a government agency or information you get by logging into your own secure My Social Security account online.
Our main message here is to stay calm. Don't worry that you'll be left out because you're not working 9 to 5.
Focus on the income requirement, make sure your benefit information is up to date, and then we just have to wait for the political process to play out.
So to wrap all this up, let's just summarize the 2 most important facts that we've pulled from this deep dive.
Let's do it. First, the payment is real. It's being actively developed for $2,000, maybe more. But it needs Congress to act either the normal way or through that reconciliation shortcut.
And the timeline for that depends entirely on political speed.
Second, and most importantly, eligibility is all about income, not about your job. The limit is likely to be under $100,000, which means Social Security, SSDI, SSI, VA, all beneficiaries with low incomes are expected to qualify.
Don't let the phrase working families cause you any more worry.
Please don't.
So what does this all mean for you? We've talked about this dual strategy, the immediate cash from the payment and the longer-term relief from lower prices through trade. We've established that your inclusion is almost a certainty, politically and logistically.
So the provocative thought we want to leave you with is this. When you think about your own household budget, how will these 2 solutions interact? Which one do you think will provide the fastest and most meaningful relief for you personally?
Is it the one-time check that helps you catch up on bills right now? Or is it the ongoing, steady relief of slightly lower prices at the grocery store, week after week?
It's something to think about. Your next step now is just to keep an eye on the legislative process. Seeing how quickly that bill moves will be the best clue you have as to when that money might actually arrive.
Stay informed, stay calm, and focus on the facts as they come out in that.
Okay, let's jump right in because this is big. A potential payment of at least $2,000 is on the table.
And this is money specifically for you. We're talking about low-income individuals, fixed-income folks, retirees, veterans.
And the key thing here is the commitment. This isn't just talk anymore.
No, not at all. The White House and the Treasury Secretary have both publicly confirmed they are committed to making this happen.
They're calling it a dividend or a rebate, and it's all funded by this massive stream of tariff revenue.
And we have the critical detail, the thing everyone's been waiting for, the income threshold.
Right.
It's confirmed to be under $100,000, which means that Social Security, SSI, SSDI, and VA beneficiaries are absolutely included.
So stick with us. We're going to guide you through all the facts, cut through the confusion, and give you what you need to be prepared for this.
Welcome back. We are doing a deep dive today into something that has, frankly, captured the attention of millions.
It really has. A proposal for a payment of at least $2,000. And it's being called a dividend, a distribution, a rebate.
And, you know, this started with the president, but it's been doubled down on again and again. It's moved way past just a social media post.
It's become a public commitment.
It really has. This is being addressed at the highest levels of the administration, which, you know, turns political talk into something much more solid.
So let's talk about the sources here, just to give this the weight it deserves.
We should.
We're talking about direct confirmation from the White House press secretary, Caroline Leavitt.
And also the Treasury Secretary, Scott Bessent. I mean, when officials at that level start confirming dollar figures and delivery plans.
The stakes just go way, way up. For them and for you listening.
Absolutely.
Yeah.
I mean, Caroline Leavitt's quote was that the White House is committed to making that happen.
She also said they're exploring all legal options to get that done.
Which is not soft language. That's not a casual endorsement. That's a high-pressure, very public promise.
And that's exactly why we need to unpack this. So let's get into the core of it. Why is this happening right now?
And where is this money? This pretty significant amount of money supposedly coming from.
Okay, so the why seems tied to the economy, right? The volatility.
It's directly connected. And the where is all about international trade policy. The plan they're putting forward is really specific.
They're saying they want to pay this out from tariff revenues.
Massive tariff revenues that are right now just flowing into the country from, you know, various trade policies and disputes.
I think we need to pause on the scale of that revenue for a moment.
Yes.
Because it helps explain how they can even talk about a number like $2,000 per person.
The numbers are, frankly, staggering. I mean, the tariffs are bringing in about $1 billion.
$1 billion a day.
Every single day. So if you project that out, you're looking at something close to $350 billion a year.
Wow.
And over the next 10 years, the projection is $3 trillion. It's just an enormous, sustained flow of cash.
And it's separate from our usual income tax or sales tax revenue.
Completely separate. And that's why the administration is using that fact to call this payment something unique.
Right. It's not stimulus.
No, they're explicitly calling it a dividend or a distribution or even a profit share.
That's a really critical political distinction they're making.
It is, because by framing it that way, as a dividend from tariff money, they're trying to say, hey, we're just giving you back the money the country earned from trade policy.
So it separates it from stimulus, which, you know, a lot of people associate with deficit spending.
Exactly. And it separates it from, say, welfare, which can carry a stigma for some people.
Yeah.
They're basically saying this is your share of the country's new trade income.
That reframing is probably essential to getting this past certain lawmakers.
It makes it much more politically palatable, especially for people who would normally be against these big cash distributions.
Okay, that brings us to the most important question for anyone listening. Eligibility. Who actually gets this money?
This is it.
The president's first announcement was pretty broad. He said everyone, but then he added, not including high-income people.
And that one little phrase immediately causes worry, right? For millions of people on a fixed income.
Of course. You're sitting there thinking, wait, am I considered high income? Even if I'm just living on my Social Security check.
We have to address this head on. For anyone receiving Social Security, SSI, SSDI, or VA benefits, the answer is a definitive yes.
You are expected to be included.
Overwhelmingly yes. Based on all the analysis, the historical precedent, and what the officials themselves are saying.
And the reason for that is so important for peace of mind. The key metric here is always income.
It's always income. It is not your status. It doesn't matter if you're working or retired or have a disability.
It just matters what your total income is compared to the threshold they set.
That's absolutely right. And historically, the government never excludes Social Security beneficiaries just because they're on a fixed income. If your annual income is below that line in the sand,
Even if that income is 100% from your Social Security benefit.
you qualify. You qualify just like a low-wage worker would.
Okay, so let's define that line in the sand. What are they actually calling high income?
This is the big news. We have a solid number now from Treasury Secretary Scott Besson.
Okay.
He confirmed the discussion is centered on an income threshold of less than $100,000 for an individual.
Wait, 100,000. That feels very high.
It is.
If you look back at the stimulus checks in 2021,
Yeah.
wasn't the cutoff usually around 75,000, sometimes even lower?
It was. The second check had an even lower threshold, so you're right to question that. Is the administration setting an expectation that's a little unrealistic?
Or are they starting high, knowing they'll have to compromise and bring it down later?
That is the political tension here. $100,000 is incredibly inclusive. I mean, if they stick with that number, it covers almost every retiree, every fixed income person, and a huge chunk of the middle class.
But like you said, there's a political reality and a financial one.
And that reality is the price tag.
It's always the price tag. So while the official talk is about that $100,000 level, logic
Yeah.
and all the analysis, suggests that final threshold might be lower.
So they might bring it down to 75,000 again, or even 60.
It's very possible. Bringing it down to, say, 60 or 75,000 for an individual would dramatically reduce the overall cost.
And that makes it a much easier pill for some fiscally conservative lawmakers to swallow.
A much easier pill. So, for you listening, the key takeaway is that if your income is, say, below 60,000, your eligibility is almost guaranteed. If your only income is your fixed benefit check.
You are definitely the person this money is intended for.
Absolutely. The debate is really about where that middle income cutoff will land. The inclusion of low income and fixed income folks is rock solid.
Okay, let's move on to something that I know causes a lot of stress for our audience.
The tax return question. The tax return myth. So many retirees, they haven't filed a tax return in years. And they hear tax credit and they panic, thinking they won't get the money.
We need to be very, very clear about this. Filing a tax return is, for almost everyone in this situation, completely irrelevant.
You do not need to file a special form. You don't need to do anything just to get this payment.
Correct.
So why do people believe they have to? Where does that confusion come from?
It comes from the legal jargon. The legal structure of past payments was an advance of a refundable tax credit.
And that just sounds complicated. It sounds like you need to be involved with the IRS.
It does. Let's try to break that down, maybe with an analogy.
Yeah, please do. We need the explain it like I'm 5 version.
Okay, so think of it this way. A tax credit is just money the government promises you if you qualify for something.
Right.
A refundable credit means even if you don't owe any taxes, they'll still send you the full amount in cash.
Yeah.
And the key word here is advance. The government is basically saying, hey, we already know you qualify for this credit because we know your income is low, so we're just going to advance you the money right now.
Ah, so you get it now, long before you would ever even think about filing a tax return for next year?
Exactly. It makes perfect sense when you put it that way. They call it a tax credit for legal reasons, but really it's just a mechanism.
A way to get cash into people's hands quickly.
That's all it is. And the reason they can bypass the whole tax return process is because the Social Security Administration
And the VA and the Railroad Retirement Board.
they already have all the information they need for every single beneficiary.
You've called this the plumbing before. The idea that the government's systems are already in place.
The plumbing is already there, and it's foolproof for this group. The SSA has your name, they have your current address, they have your direct deposit details,
And most importantly, they already know what your annual income is.
because they're the ones paying it to you. For anyone getting a monthly check, the system is designed to send this money out automatically.
Using the exact same bank account information that your benefits go into every month.
The exact same information. No need to file, no complicated application to fill out. The data is already on file, ready to go.
So to be crystal clear, if you get a fixed benefit, the government already knows where to send the $2,000.
Yeah. The only time this ever got complicated in the past was if for some reason a payment didn't arrive, or if someone had other complex income that put them right on the edge of the cutoff. But for the vast majority, it's automatic.
Okay, so we've established they're talking about this and that Low-income folks are the target. But, talk is cheap. How real is this commitment? And is the funding plan even realistic?
Well, the commitment is, I'd say, exceptionally high. And that's because they've tied the names of the most senior officials to this promise.
Right. When the White House press secretary goes on the record saying they are committed to making that happen.
They're putting a huge amount of political capital on the line. It's not something you can easily walk back.
So let's talk about the money, the funds they need versus the tariff revenue they have. This is where the math gets a little rough, right?
This is where it gets critical. We need a price tag reality check.
Yeah.
So let's do a quick calculation.
Okay.
Based on the last stimulus rounds, we can estimate that targeting low and middle income people means you're covering about 85% of the population.
Which is how many people?
It's roughly 284 million people.
Okay, so 284 million people, each getting a $2,000 payment. What's the total cost?
The total cost comes out to approximately $568 billion.
Wow.
And if they use that very generous $100,000 threshold, the cost could push up closer to $600 billion.
Okay, but you said earlier the tariff revenue is projected at about $350 billion per year.
Exactly.
The numbers don't add up for an immediate payment. They don't have $568 billion just sitting in a tariff piggy bank today.
They don't. And that contradiction right there exposes the real financial mechanism they'd have to use.
So how would they do it? How do they send out checks right away?
This is the deep insight. Even though they're calling it a dividend from tariff money, they would essentially have to borrow the entire $568 billion today.
So it adds to the national debt.
It adds to the national debt, yes, in order to issue the payments immediately.
Hold on. If they have to borrow it, does that completely undermine the story they're telling? That this is a profit share from tariffs?
It absolutely contradicts the narrative, and that's the tension. They are using the future tariff revenue that projected $3 trillion over the next 10 years.
As the collateral.
As the collateral or the backing for the debt they're taking on today. Their justification is, well, we know this money is coming in eventually, so we're just giving you the dividend a little early.
So it's debt financing no matter how you slice it, even if they strategically call it a tariff dividend. That's a crucial distinction.
It's crucial for understanding the political game here. The immediate payment requires fronting the cost. It means attaching nearly $600 billion to the national debt right now.
And just hoping that $3 trillion in future revenue actually materializes to justify it.
Precisely.
Let's zoom out a bit and look at the pattern here, because this isn't the first time we've heard about a big payment.
No, it is not.
Yeah.
The repetition is what makes this feel different. It adds political weight.
This is now the fourth time the president has endorsed a major financial distribution in less than a year.
And the pattern is, it's pretty unmistakable when you lay it out.
So walk us through it. What was the escalation?
Okay, so it started back in February with a mention of a $5,000 Doge dividend, which, was widely seen as a bit of a political stunt. It never happened.
Right.
Then by August, the idea got more formal. There was discussion around a $600 rebate check, and that one was actually introduced in the Senate.
And then in October, the number suddenly jumped.
It jumped dramatically. The president started talking about a payment of somewhere between $1,000 and $2,000.
And now, here we are in November, and it's a definitive at least $2,000 confirmed by the Treasury Secretary.
There's a clear analysis from our sources on this. The quote is, every time he talks, the dollar amount gets bigger.
And that pattern creates this immense self-imposed pressure on the administration.
They are, as we said before, painting themselves into a very, very tight corner.
And the only way out of that corner is to actually follow through.
It is. Regardless of the huge cost of fronting that $600 billion.
Because if they fail to deliver on this $2,000 payment now,
especially after repeating it, increasing the amount, and having top officials confirm it,
it would be a massive loss of credibility.
a huge loss of trust, especially with the very people they're trying to reach. The political cost of failing to deliver might actually be higher than the financial cost of the payment itself.
All right, let's move on to the question that is probably on everyone's mind right now.
When do I get the money?
When could this money actually arrive? We know it won't be tomorrow, given how Washington works.
We have to be direct about this. There is no exact date because the legislation hasn't even been written yet. But we do have some official guidance.
From who?
From Treasury Secretary Scott Bessent. He indicated that people can see substantial tax refunds early next year.
early 2026.
Early 2026.
Okay, so early next year suggests what? Maybe January, February. Around the same time people usually get their tax refund.
That seems to be the implication.
Yeah.
And if you look at the broader political calendar, the timeline makes sense. The window for action is really between now and the midterm elections in November 2026.
And if they want this to have a political impact, they need to do it well before the election.
Right. They probably have about an 11-month window to get this done.
So why the delay? I mean, if the commitment is so strong, why can't they just push a button and send the money now?
It all comes down to the legislative process.
Yeah.
It's slow. Lawmakers are notoriously slow.
And we have holidays coming up, Thanksgiving, the December recess.
Exactly. So a formal bill has to be drafted. Then it has to be introduced, debated, passed by the House, passed by the Senate, reconciled.
And then finally signed by the president.
And even if they fast-track it, that whole process takes weeks, sometimes months. It just naturally pushes any real distribution into the new year.
Which makes that early 2026 target seem pretty realistic.
It does.
So when this money is approved, how does it actually get to people? For the millions of beneficiaries who don't file taxes every year.
It goes back to that plumbing we talked about.
Oh.
Because the systems are already in place, the money would be delivered through the methods already on file with the SSA or the VA.
So direct deposit.
Direct deposit paper checks or the direct express cards that a lot of beneficiaries use.
So no new application, no sign up needed.
No, it should be automatic.
Okay, this next part is vital. We have to talk about the caveats for our low-income audience, the financial protections, and the potential offsets.
This is so important because getting $2,000 could, in theory, mess up your eligibility for other benefits if it's not handled correctly.
Right, like SSI or Medicaid.
We have to be a little cautious here because the final law hasn't been written. But we can look at what's happened in the past.
Okay.
The payment is being framed as a tax credit or a dividend. Past stimulus checks with that structure were generally tax-free.
So we can expect this will be too.
We have every reason to believe so, but
Yeah.
you have to wait for the final text of the law for 100% confirmation.
Let's talk about the two big traps, the situations where the money could be taken away before you even see it.
Right. Garnished or offset. This can be devastating for someone on a fixed income.
So what are they?
The sources identify two main exceptions. The first is federal tax liability.
So if you owe back taxes to the federal government.
To the federal government, yes. Not state or local, but federal. If you owe, say, $3,000 in back taxes, they can keep this $2,000 payment to reduce your debt.
And the second one?
Past due child support. This happened with past stimulus payments. The money could be intercepted and garnished for outstanding child support obligations.
But it's really important to stress that private debt collectors, for credit cards or medical bills, they typically can't touch this money.
That's a critical distinction. These payments are usually protected from private debt collection. The garnishment exceptions are almost always for federal debt or legally mandated things like child support.
Okay, and finally, the most critical protection for many, the effect on other benefits. SSI, Medicaid, SNAP.
This could be the most important part of the conversation for some listeners.
How will this payment affect eligibility for those means-tested programs?
Again, we have to look at history here since the new law isn't written. With the past 3 stimulus checks, Congress was very careful. They specifically wrote into the law that the payments were excluded from being counted as income or as a resource,
For how long?
usually for 12 months.
So the expectation is that they will write similar protection into this new law.
That is the strong expectation. But until that clause is written and passed, you can't assume it.
Because for someone on SSI, having an extra $2,000 in your bank account,
It could push you over the asset limit, which is often just $2,000 for an individual.
and you could lose your benefits, your health care.
It's the single most important caveat. You need to get absolute confirmation that this specific payment will be protected and won't be counted as a resource for at least a year.
Before we wrap up, we have to spend some serious time on fraud and scams.
Oh, absolutely. This is critical.
Our audience, seniors, people with disabilities, they are so vulnerable whenever these big government payments are announced. Scammers just come out of the woodwork.
They do, because they know this money is a lifeline. We have to urge extreme caution. Remember the #1 rule. The government, whether it's the SSA, the IRS, or the VA, will never, ever call you, text you, or email you asking for money.
They will never ask for your banking details or personal information over the phone.
And they will never demand you take immediate action to get your dividend.
So let's get specific. What are the common scams we think will pop up around this $2,000 payment?
I think we need to watch for three main things. First is the verification fee scam.
Okay, what's that?
You get a call from someone claiming to be from the Treasury. They say that to release your $2,000 check, you first have to pay a $50 processing fee.
And they want you to pay with a gift card or Bitcoin or something untraceable.
Exactly. It's a total scam. The government will never ask you for a fee to get your own money.
Okay, what's the second one?
The Direct Express update scam. Scammers know that a lot of people use Direct Express cards.
Right.
So they'll call or text and say, your card has been locked because of the pending deposit. They'll ask you to confirm your PIN and the 3-digit code on the back to unlock it.
And if you give them that, they drain your card.
Instantly. The SSA will never ask for your PIN, ever.
And the third one is probably the most common, the phishing email.
Yeah, the wrong payment email. You'll get something that looks official from the IRS or SSA. It'll say, you received the wrong amount. Click here to correct it and update your bank info.
And that link goes to a fake site that just steals all your information.
It does.
So the bottom line is, if anyone contacts you claiming to be from the government, asking for a fee, asking for your card details, or pressuring you to act now,
Hang up. It's a scam, period.
the only places to trust are official government websites or the physical mail that comes to your address.
Or your My Social Security account online.
Yeah.
It is the only place you should be verifying your information.
Let's connect this back to the bigger economic picture. Why are we seeing the president bring this up 4 times in a year?
It's a symptom, really. It connects directly to a kind of systemic economic instability, even if the top-line numbers look good.
The economy feels very divided right now. People call it a K-shaped recovery.
That's a perfect way to describe it.
Can you explain that for our listeners?
Sure. Imagine the letter K. The top arm is going up. That's high-income folks, large corporations. Asset values are rising. Luxury spending is up.
But the bottom arm of the K is going down.
That's low-wage workers, fixed-income families, retirees. They are getting crushed by the high cost of essentials. Food, gas, utilities.
There's a massive divide.
There is. And this $2,000 payment is a political attempt to help the people on that bottom leg of the K.
And what are the other factors pushing lawmakers to consider this now?
I think they're preparing for a potential downturn. There are a few catalysts. Continued inflation is eating away at fixed incomes. There are serious concerns about the stability of the private credit market, and global tensions are keeping costs high.
So historically, when the economy starts to look shaky,
Lawmakers scramble to approve some kind of stimulus to cushion the fall. So these discussions are happening because they might be getting ready for a worst-case scenario.
and finally, let's just set expectations. Is this a permanent fix or a one-time thing?
It is explicitly being framed as a one-time distribution, a dividend from the tariffs.
So it is not a permanent increase to your monthly benefits?
No, it is not a COLA. It is not benefit reform. It's a short-term fix. It's designed to give you immediate financial breathing room.
It's emergency cash, help to pay off a bill, cover medical expense. It's not a change to your long-term income.
Exactly. It's relief, not reform.
Okay, let's summarize the key takeaways, the confirmed facts you need to know about this potential $2,000 payment.
We can do a quick rundown. The 5 W's.
Let's do it. What is it?
At least a $2,000 payment framed as a tariff dividend or rebate.
Why is it happening?
It's proposed to be funded by those massive tariff revenues, though the money will have to be borrowed up front.
Who gets it?
Low and middle-income individuals. That is expected to include everyone on Social Security, SSI, SSDI, and VA benefits, with that income threshold currently being discussed at under $100,000.
When will it arrive?
The official guidance is pointing to early 2026, but the political window is really any time in the next 11 months.
And finally, how will you get it?
It will be delivered automatically through your existing payment method, direct deposit, paper check, or direct express card.
You know, a $2,000 payment could be a genuine lifeline for so many people right now.
It really could.
It's money that can offer some relief, some dignity, a way to catch up on bills that have been piling up.
It's a significant amount, and the fact that the commitment is coming from such a high level suggests they really do intend to deliver on this.
And that brings us to our final provocative thought for you to consider as we watch this unfold.
The administration, from the president down to the Treasury Secretary and the press secretary, has now painted itself into an exceptionally tight political corner.
They have repeatedly endorsed this payment. They have officially confirmed their commitment to it.
So now they face a choice. The financial cost to front that $568 billion is immense. It will add to the national debt. That's a real cost.
But what's the other cost?
The cost of lost credibility, the cost of broken promises among their core supporters, retirees, low-income families, if they fail to follow through after all this.
That cost might be even higher than the financial price tag.
It might be. So the question is, which cost will they ultimately choose to bear? The financial one or the political one?
Something to think about as we await the formal legislation. Keep watching.
We have a major financial update to talk about today. It's coming directly from discussions, right inside the Oval Office.
Well,
We're talking about a potential large-scale payment. Some are saying $2,000, others are just saying thousands of dollars.
yeah.
And this isn't just another rumor. The level of public commitment we're seeing from the president, from the Treasury Secretary, it's unusually high.
It really is. And for you, for everyone listening, especially if you're on a fixed income retirees, people receiving SSI, SSDI, the question really splits in two, doesn't it?
Okay.
First, is this money real? Is it concrete? And second, if it is it coming soon, or is it just, being dangled out there on a political calendar way off in the future?
Right. The immediate need versus the political game.
That tension is the single biggest thing we need to clear up today.
And we have to get this point across right from the very start. The conversations they're having explicitly cover a huge, huge percentage of the population. So if you get Social Security, if you get SSI, SSDI, or VA benefits, and you've been hearing this confusing government speak about working families and getting worried.
Yes, a lot of people are.
Exactly. We're going to spend a good amount of time today taking those fears apart piece by piece with facts and history and just basic political logic. You are not being left out of this conversation.
And we're also going to dive deep into the mechanics of this thing. I mean, how they plan to pay for it. A $2,000 payment? That's nearly $600 billion.
So it's $100 billion.
The plan is to fund it all through tariff revenue, which, well, it creates a huge logistical puzzle. It's a massive reprioritization of how the government spends its money. And that's why the timeline is so uncertain, even though, as you said, the commitment from lawmakers feels overwhelming right now.
So that's our mission for this deep dive. We're going to unpack these brand new statements. We'll clarify the sheer size of this plan, analyze the two very different timelines, the political one and the economic one, and most importantly, we're going to give you the straight facts you need about whether you're eligible for this money. So let's get into it.
Welcome.
Welcome to the deep dive. Today we are jumping right into the latest official statements on this proposed financial distribution. It's being called a few different things, right? A dividend payment, a rebate.
Right, but functionally, it's a stimulus check. The goal is to put cash directly into people's hands.
And our source material is as fresh as it gets. We're talking about statements made by the president just today, plus comments that Treasury Secretary Scott Bessent made over the weekend. So we're getting a really complete picture of where the administration stands right now.
And that combination is so important. You have the president's direct remarks, the big picture, and then the Treasury Secretary's perspective, which gives you the financial nuts and bolts. But what's really fascinating to me is the speed and the intensity of it all. It's not just one or two officials anymore. We're hearing from high-profile lawmakers. We're hearing from senators, the economic advisor, the Treasury Secretary himself. They're all giving updates almost every single day on this $2,000 idea.
It feels like they're all singing from the same song sheet, which is rare.
It is. And that intensity, it suggests that the political price for not doing it is already huge. After this much public talk, after all these promises, I mean, politically, logistically, it almost has to be a certain thing at this point. The train has left the station.
Okay, so let's unpack the heart of the plan. This potential $2,000 payment and, as you said, the surprisingly tricky way they plan to fund it.
Let's do it.
First, the benefit itself. A $2,000 lump sum payment for an individual. For families, we're talking thousands of dollars. For so many people right now, especially on fixed incomes, where the COLA increases just aren't keeping up with inflation, this isn't pocket change.
Not at all. It's breathing room. It's help with groceries that cost a fortune or prescription copays. It's real life-stabilizing relief.
And the administration is being very careful with their language, calling it a dividend or a rebate.
They are. The idea is to frame it as returning money to the public, not just printing it out of nowhere. But it's the sheer scale of it that makes the financing so difficult.
Yeah.
To really get why this has been such a challenge, you have to look at their funding source, tariff revenue. The plan is to take a huge chunk of that money, about $600 billion, and send it straight out as these payments.
That's a huge shift. So if they're only using tariffs, we need to understand what that $600 billion means compared to what they normally collect. What does that actually look like?
Well, this is what puts the whole challenge into perspective. Let's do the math from the sources. To send $2,000 checks to their target audience, which is about 85% of the population, or roughly 284 million people, they need something like $568 billion.
So they just rounded up to $600 billion.
Exactly. Now, compare that to normal operations. In a typical year, the U.S. brings in about $350 billion from all tariffs combined.
Hold on. If they need $600 billion, but they only collect $350 billion a year, that's almost 2 full years of tariff money.
That's it exactly. They would have to dedicate nearly 2 full years' worth of incoming trade revenue just for this one single program. And you have to remember, that's not money that's just sitting in a spare stimulus fund.
Right, it's already spoken for.
It's critical for the rest of the federal budget. It pays for everything from infrastructure projects to defense spending to, just paying interest on the national debt. So when you reallocate $600 billion, you create this massive immediate hole in the general budget.
Which then has to be filled somehow.
Right. Either by moving money from other departments, which is politically very difficult, or, and this is more likely, just by increasing the deficit. This whole logistical mess is why the sources are saying the administration is still, quote, winning it. They don't have a fully written, detailed proposal yet.
Which brings up a really important question. You said there's this huge commitment from the top. If the funding is this hard, if it requires this much planning, why are they talking about it so much in public? Why announce it before all the details are locked down?
Because the politics of it create this self-fulfilling pressure. Think about it. If the president, the Treasury Secretary, the economic advisor, if they all go out and publicly promise a $2,000 payment over and over again,
the cost of not delivering becomes catastrophic.
Exactly. The political fallout would be severe. The sources say it would create a lot of very, very upset people. At this point, the cost of backing out is probably higher than the cost of just figuring out the messy funding part.
So the constant updates, the daily press hits.
Yeah.
They're a kind of commitment insurance. They're building up public expectation to basically force their own hand.
That's a great way to put it.
But let me play skeptic for a second here. If the plan is still preliminary and the math is hard, what happens if they fail? What if they can't deliver the full $2,000 or they have to delay it again and again?
The sources are pretty clear on that. Any failure to deliver on the promised scale and timeline would just crush public trust, especially for lower income folks and people on fixed incomes who are hanging on every one of these updates. If they came out and said, sorry, it's only going to be $1,000, it would be seen as a major betrayal. It would turn a logistical problem into a massive political crisis.
So the PR strategy they're using, it signals their intent, but it also creates this huge liability if they can't actually pull it off.
An enormous liability. So for now, we have to assume they are 100% dedicated to finding that $600 billion, even if the when of it all is still up in the air.
And that brings us perfectly to the biggest question of all, the timing. When exactly could people expect to see this money?
Right. And there are two very different answers to that question.
Let's start with the official one. I'm going to relay the president's statement from today directly about the timeline. He said the money is, quote, likely coming sometime in the middle of next year, or possibly a little bit later than the middle of next year.
Okay, so let's break that down. Middle of next year means summer. A little bit later could mean late summer, early fall. And that timing aligns perfectly. And I mean, it is perfectly aligned with the political calendar.
You're talking about the midterm elections.
Of course. That timeline puts the distribution of these checks right smack in the window just before the midterms.
And we should be clear, as analysts, we're not making a political comment here. We're just pointing out a historical pattern.
It's just a recognized trend. It's a fact. If you look back at the big stimulus payments, that $1,400 check, even parts of the $600 one, they were timed with a very keen eye on major elections. The source material is very blunt about it. They call it a vote-gathering exercise. It's a proven strategy. You provide a big financial boost right before a major election using, taxpayer or tariff funds to build up goodwill.
And the fact that the administration is comfortable saying that timeline out loud, middle of next year, that's almost an admission of the strategy itself.
It really is. It signals that this is the plan.
Okay, but let's push back on that a little for the sake of our listeners on fixed incomes who are struggling right now. If this is all about getting votes, why would they target reliable voters? Seniors, retirees, But they are already a very reliable voting bloc. Wouldn't it make more sense politically to focus the money on younger, less reliable voters to try and boost turnout there?
That is an excellent question, and it gets at a deeper level of the political math here. It's about more than just trying to convert non-voters. It's also about affirmation and scale. So yes, seniors are reliable voters, but they're also a massive organized bloc that is feeling the most acute financial pain right now because their incomes are fixed.
So you're saying it's about shoring up your base.
It's about shoring up your base, and it's about the sheer scale of the payment. These payments are designed to be broad. By including the fixed income community, they make sure the money touches nearly every household in the country in some way. You get huge political capital by rewarding a reliable bloc while also reaching the wider electorate, trying to exclude them just to chase a few new voters. It's a huge risk for a very small reward. The sources are clear. The scale is what gives it political power.
So the default plan, the political plan, is for mid-next year, assuming the economy stays
No.
stable.
Right.
But you mentioned there's a huge wild card in all of this, a massive contingency that could speed everything up, the economic uncertainty factor.
Yes, this is the big one. That mid-next year timeline is only the plan if the economy is considered fine, or at least stable enough for the next 8 months or so. But there is an immediate catastrophic trigger that changes everything. If the economy, quote, crashes and burns in the next few weeks or months, the sources say the money would go out practically immediately.
That is a critical distinction.
Yeah.
But what does crashes and burns actually mean? We can't just leave it as a vague term. What are the specific economic signs they'd be looking for?
That's the key question. The president didn't list specific triggers today, but the economists cited in our sources suggest we should be watching for 3 main indicators. First, a rapid jump in the unemployment rate. If it spikes up over, say, 5.5%, 6% in just a month or two, that's a huge red flag.
Okay.
Second, 2 straight quarters of negative GDP growth. That's the textbook definition of a recession. And third would be some kind of major instability in the banking system or the housing market, something that signals a systemic crisis is brewing. If any one of those things happens, or even if there's just a really severe slowdown that feels like a recession, which frankly a lot of people think we're already in, that becomes the catalyst. That's what forces them to distribute the money immediately and forget all about the political timing.
And if they do have to pivot to an emergency distribution because the economy collapses,
Yeah.
the whole plan changes, right? The funding, the scale. The source material mentioned a whole lot of money printing and helicopter money. We need to explain what that actually means for people listening.
This is absolutely crucial context. When we're talking about funding through tariffs, that's the slow, politically timed plan. When we're talking about an emergency response, we are talking about a totally different beast. We're talking about direct monetary intervention from the central bank. Helicopter money might sound a little silly, but it's a real term economists use. It was popularized by Milton Friedman, and it describes an emergency action where newly created money is injected directly into the economy, into the hands of the public.
It's like it's literally being dropped from a helicopter.
Exactly. It's a last resort measure to fight off deflation and spark demand when just cutting interest rates isn't enough.
So how would this emergency approach compare to what we saw during the pandemic?
The language in the sources is very, very strong on this point. During the pandemic, the total response involved printing something like $6 trillion, which was unprecedented. The analysis suggests that if the next economic crisis is seen as being deeper or more severe than the COVID lockdown crisis, the government's response could actually dwarf that. The context is, if $6 trillion felt nuts a few years ago, the next response could be significantly larger. Some projections are even throwing around numbers as high as $15 trillion in new stimulus.
Wow.
It just shows that if the economy really does falter, they are prepared to act with immense, overwhelming force almost overnight. And that would pull the timeline for these payments from mid-next year to, practically right now.
Okay, this is a perfect pivot to what is probably the #1 cause of anxiety for our listeners, eligibility. Over the weekend, Treasury Secretary Scott Bessent said this money would be for working families. And that one phrase, it caused immediate panic among fixed income recipients. Retirees, people on Social Security, SSI, SSDI, they heard that and thought, well, that's not me. I'm not working. I'm out.
And we have to address that fear directly, with absolute clarity. Please, if you're listening, do not let that language discourage you or worry you. The phrase working families it's political shorthand. It's government jargon. It has, and I want to be very clear, Nothing to do with whether you are currently employed and drawing a paycheck.
It's a broad catch-all term.
It's a term designed to signal that the money is going to productive members of society. And receiving Social Security is an earned benefit. You worked for it. You are absolutely part of that demographic.
So if I'm a retiree listening to this, or I'm on SSI, I should just mentally translate working families to families who are under a certain income level.
Precisely. That is exactly right. The true and the only determining factor for your eligibility will be your income, not your work status. The government has no system, and certainly no desire, to try and audit your current employment for a broad payment like this. If you are retired, if you are disabled, if you're a survivor, your eligibility is all about your adjusted gross income, or AGI.
So let's get into those income numbers, based on the sources. The administration has thrown around the figure under $100,000, but history tells us it will probably be a bit lower than that.
That's right. The general consensus is that 100,000 is more of a political talking point, to signal that millionaires aren't getting checks. But the final practical income cap will almost certainly be lower, just so the money is more targeted to the people who will actually spend it and stimulate the economy. The expectation is that the final limits will look a lot like the last stimulus rounds,
Which were roughly $75,000 for a single person.
and $150,000 for a married couple filing their taxes together.
So for the vast, vast majority of our listeners on fixed incomes, it boils down to one simple question. Is your total annual income, including your Social Security and any other money, below that $75,000 or $150,000 line?
And if the answer to that is yes, then all the other language from the Treasury Secretary doesn't matter. You are eligible. Retirees, SSI recipients, SSDI recipients, VA beneficiaries, you are all included if you meet that income test. We really have to tune out the panic from vague political words and just focus on the technical facts.
And this goes right back to the political logic we were talking about before. Let's just hammer this point one more time, because I think it's the most reassuring thing we can say. If this payment is timed to influence an election, what would be the political reality of excluding fixed income recipients?
It would be political suicide. I mean, it would be completely destructive. When you look at who votes in this country, seniors, retirees, Social Security beneficiaries, they are one of the largest, most engaged, and most reliable voting blocs there is, period.
They show up.
They always show up. So to design this massive, expensive handout to generate goodwill right before an election and then deliberately exclude that huge, powerful group, the sources say that's just not a realistic scenario. It's politically impossible. Any politician who proposed that would face an immediate and severe backlash.
And this isn't just a theory, right? We have three very clear, very recent examples to back this up.
Exactly. This isn't guesswork. The three big stimulus checks in 2020 and 2021, the $1,200, the $600, and the $1,300 payments, every single one of them included every major fixed income group: Social Security retirees, people on disability, SSDI and SSI survivors, VA beneficiaries. They were all included as long as they were under the income limit. And since they were included all three times before using the same basic system, the expectation has to be that they'll be included again.
Okay, now let's get into some of the technical details. I know tax rules can sound a little dry, but understanding the actual mechanism they use to send this money is the key. It's the reason why people on fixed incomes, even people who don't file taxes, are included automatically.
This technical definition is really the core protection for our audience. A stimulus check isn't legally defined as some kind of, random government handout. It is officially structured as an advance of a refundable tax credit that is tied to your federal tax return.
Okay, let's spend a minute on that, because the difference between refundable and non-refundable is everything. That one word is the firewall that protects fixed income recipients.
It is. Let's start with a normal tax credit, a non-refundable one. That kind of credit can only lower the amount of tax you owe down to zero. So if you owe $1,000 in taxes, a $1,000 credit is great. It wipes out your bill. But if your income is so low you owe zero in taxes, you get nothing. The credit is worthless to you.
Right. Now, what about the stimulus mechanism?
The stimulus uses a refundable tax credit. And this is the magic key. A refundable credit means it can reduce your tax bill below zero. Even if your total income is so low that you owe $0 in federal taxes, which is the case for many people living only on Social Security or SSI, you still get the full amount of the credit as a cash refund check. The government is, in effect, fronting you the cash no matter what your tax bill is.
And that's the legal structure that ensures low-income people who aren't working, in the traditional sense, still get paid.
That's it. And it directly answers that other huge question we always get. I don't file a tax return because my income is too low. Will I still get the money?
And the answer, based on the last 3 rounds, is a clear yes.
Yes. Receiving the payment is tied to your income being below the line, not to the physical act of filing a tax form. What happened in 2020 and 2021 is that the Social Security Administration, the VA, and other agencies shared their payment data directly with the IRS. That allowed the IRS to just automatically process and send out direct deposits or paper checks to beneficiaries, even if they hadn't filed a tax return in years. The system is built to find and pay people who are outside the normal tax filing system.
Now, it's worth noting that while this refundable tax credit is the standard way to do a big, broad stimulus, the government has used other, more targeted methods in the past.
They have, yes. The sources point to one example back in May of 2009. There was a dedicated $250 economic recovery payment that was sent specifically and only to Social Security beneficiaries. So it shows they have the ability to do these very targeted payments. But because this current plan involves the whole population and this whole tariff revenue idea, the refundable tax credit is almost certainly the path they'll take. The infrastructure is already there.
Okay, finally on the mechanics, we have to talk about garnishment. This is a big deal. Normally, fixed income benefits are very protected from debt collectors. But the stimulus checks were sometimes a different story. What should people be watching for?
This is a really vital point. You're right, Social Security benefits are generally protected from being garnished by private debt collectors. But with the last stimulus payments, Congress didn't pass specific laws to protect those particular checks, so they were sometimes treated differently. There were a few rare but very important exceptions where the money could be seized.
Who were they?
The two main vulnerabilities were, first, garnishment for back taxes that you owed directly to the IRS itself. If you owe the IRS, they can take it. And second, garnishment for back child support payments. And we should also just quickly mention the other non-garnishment issues. If you were claimed as an adult dependent on someone else's tax return, you wouldn't get a check. Or if your funds are managed by a representative payee who, mismanages the money, those are other ways the payment could be missed.
So the big takeaway here is that while most people got the money with no problem, there were these loopholes for things like back taxes and child support. And we'll have to see if Congress adds specific protections this time.
Exactly. Until a law is passed to explicitly protect this specific payment, that risk is still there. But the overall message for the vast majority of fixed income beneficiaries is clear. You are included, and the system is designed to get the money to you.
We have gone through a ton of detail today. So before we wrap up, let's do a quick high-level summary. Let's reinforce the core facts from the administration's latest statements and our analysis.
Okay, let's boil it down to the certainties and the variables. The certain part. The payment is likely $2,000, maybe more for families. The political commitment to do something is overwhelming, and the funding plan is ambitious, right? Nearly $600 billion from tariffs.
And the variable part is the timeline, which is split into two very different possibilities. Possibility 1 is the political timeline.
Right. That's the default plan. Assuming the economy holds steady, the money comes in the middle of next year, timed for the midterms.
And then there's possibility 2, the economic timeline.
The wild card. If the economy takes a nosedive in the coming months, that distribution speeds up dramatically. It becomes an emergency stimulus, and it happens practically immediately, likely with a lot of newly created money.
And let's restate the most important reassurance for everyone listening who is on Social Security, SSI, SSDI, or VA benefits.
Your eligibility is based on your income. That's it. It will likely be around $75,000 for an individual, $150,000 for a married couple. It is not based on your employment status. The legal structure, the historical precedent, and the political reality all point in the same direction. Fixed income recipients are expected to be fully included. So please, do not let vague terms like working families cause you any stress. If your income is below the line, you are included.
Let's also talk about scams for a moment. While we're all waiting for this to play out, this is when the scammers come out of the woodwork. What should our listeners be watching out for?
This is so important. Every time a payment like this is discussed, the scams explode. So let us be extremely blunt. The IRS, the Social Security Administration, the VA, they will never call you. They will never text you. They will never email you asking for your personal information or your bank account details for this payment.
Never.
It will not happen. These agencies only communicate through official letters mailed to your address on file or through the secure government websites like the My Social Security portal. If you get a call, a text, or an email, it's a scam. Do not engage. Do not click any links. And please tell your friends and family the same thing.
Okay, so final thoughts on all this.
Yeah.
We have this really frustrating situation, right? This high level of commitment, but this deep uncertainty about the timeline.
It is frustrating. The waiting is stressful. But I think the forces pushing this payment forward are just immense. You have the overwhelming political pressure on one side, and on the other, you have the very real possibility of an economic downturn that would force their hand. When you combine those two things, it strongly, strongly suggests that some kind of significant payment is going to happen within the next 12 months. We just need to watch the economic news very closely because that's the wild card that could change the timeline overnight.
And that's really the essential message we want to leave you with today. For so many of you, these potential payments aren't just a number. They represent real stability. They can provide that crucial breathing room, help you catch up on bills, or just offer a little bit of dignity during what are very tight financial times. And that's true whether the reason it comes is political or economic. We are tracking every single update on this, and we will be right back here the moment a definitive plan is announced.
So continue to monitor all the official communications. Be prepared for that political timeline next year, but just stay aware that economic events could accelerate everything very suddenly.
We really encourage you to keep following these updates. If this deep dive gave you some clarity and maybe a little peace of mind, please subscribe to the channel, like the video, and share it. Share it with your friends, your family members, anyone on a fixed income who needs these facts right now. We really appreciate you joining us for this comprehensive deep dive.
Thank you for listening.
Okay, welcome back to the deep dive. Today we are cutting straight through all the noise.
A lot of noise.
So much noise around what might be one of the biggest financial updates we've seen in a while. We're talking about the very real possibility of thousands of dollars in direct payments.
Right.
Specifically, that number we keep hearing is $2,000, and it could be coming to you as emergency relief.
And that's the keyword, relief. And for those of you on a fixed income, and we know that so many of you listening, whether you're a retiree or you're receiving Social Security, SSDI, SSI, VA benefits, your biggest question is always, am I included?
Of course.
We're going to make it crystal clear today why this payment is, well, it's pretty much designed with you in mind.
Yeah, this money could provide that breathing room everyone needs for bills, for rising costs, and we're going to break down the timeline, who's eligible, and how to protect yourself right now.
Let's do it.
Okay, so let's really set the stage. Our mission today is to focus on these really high-profile updates. They're coming directly from the administration. We're talking the president, the Treasury Secretary,
Yep.
and they're using this specific term, dividend payments.
Right. And we need to translate that immediately. When you hear dividend payment, just, think stimulus check.
Exactly. It's a direct payment.
It's a direct payment. And the number that keeps coming up over and over is $2,000. Or sometimes they'll phrase it as thousands of dollars.
And what feels different this time, and you've pointed this out, is the sheer political commitment. It's not just a vague idea anymore.
No, not at all. You have lawmakers, senators, the highest profile people in the administration giving, almost daily updates. It suggests this is highly, highly likely to happen.
So the goal here is to filter out that noise, like we said, and really speak to the concerns of everyone on a fixed income. Retirees, people on Social Security, SSI, SSDI, VA benefits. You need clarity.
You need to know if you qualify, and just as important, when that money might actually show up.
Absolutely. The political momentum is building, and it seems like they're really committing their reputation to this.
They really are. And that's important because when they commit this hard, politically, it becomes very, very difficult for them to back out. The public backlash would just be enormous.
Okay, so let's unpack maybe the most interesting and unique detail about this whole thing. Where is this $2,000 payment actually supposed to come from?
Yeah.
Because it's not like the last stimulus rounds.
No, not at all. This is not the same playbook. Those were funded through, massive borrowing, just straight up deficit spending.
Right, printing money, basically.
This is completely different, and that's why they're using that very specific word, dividend.
Okay, so what does that mean? A dividend from what?
The entire plan is to fund these payments using tariff revenue.
Tariff revenue. Okay, explain that.
So, money the government collects on imported goods. The plan is to peel off about $600 billion of that revenue money that's already in the government's accounts and then distribute it back out to the people.
$600 billion. That is not a small number.
That's a massive number.
Before we even get to how they'll send it out, what does taking $600 billion from tariffs do to the rest of the budget? That money usually goes somewhere, right?
That is the multi-hundred-billion-dollar question, isn't it? And yeah, it's a major political trade-off. That revenue normally just flows into the general fund.
So it helps pay for everything.
Pretty much. Government operations, infrastructure projects, maybe paying down a tiny piece of the deficit. So if you divert $600 billion, you're essentially choosing not to fund other things.
So it isn't really free money.
Oh, absolutely not. Nothing is. It's a redirection. They're taking money that could have, say, repaired highways or funded federal agencies, and they're putting it directly into your pocket.
And that must be facing some serious opposition.
It is, of course it is. But this is where the political messaging comes in. By calling it a dividend or rebate to the American consumer, they're framing it differently.
They're saying it's your money anyway.
Exactly. They're basically saying you paid for these tariffs through higher prices on goods, so we're just giving it back to you.
Yeah.
And politically, that's a much easier sell than we're going to borrow another $600 billion.
And that amount, the $600 billion, it's a huge number. How much tariff revenue is that really?
To put it in perspective, it's nearly 2 full years worth of tariff collections.
Wow.
So it's a gigantic bet. They are betting that the political win from sending you $2,000 is bigger than any political fight over the budget.
So how does that $600 billion figure connect back to the $2,000 checks for everybody?
It lines up almost perfectly. The math works out. I mean, we're talking about a huge logistical operation here.
Yeah, I'll bet.
The goal is to send $2,000 to about 85% of the population.
Yeah.
That comes out to roughly 284 million people. And if you do the math, $2,000 times that many people is about $568 billion.
So the $600 billion covers it with a little buffer.
Exactly. The funding pool is specifically designed to cover the full cost. It's not an accident.
All right. That makes the funding part much clearer. It's a redirection. Now, let's get to what is, I think, the most critical part for our audience. Eligibility. We have to address the confusion and, honestly, the anxiety that was caused when officials, including the Treasury Secretary, used the phrase working families.
That phrase, it caused immediate panic. We saw it in the comments, the emails. I'm on disability. I can't work. Does this mean I'm left out?
Right. I'm a retiree. I'm not a working family anymore.
And we need to just state this as clearly as possible.
So let's be definitive. Are people on fixed income, Social Security, SSI, SSDI, VA benefits excluded because of that phrase?
No, absolutely not. 100% no. That phrase, working families, is just. It's political jargon, it's shorthand, it's meant to sound inclusive and relatable to a broad audience.
So it doesn't literally mean you have to have a job.
It does not mean you must be currently employed. The administration knows, I mean, they know full well, that excluding seniors and people with disabilities from a major payment like this would be political suicide.
Okay, so if it's not about having a job, what is the actual rule? What's the real criteria they'll use?
Well, it's one thing, your income.
That's it.
That's it. Specifically, your adjusted gross income, or AGI. They are not checking your employment status. They don't care if you have a job. The only question they ask is your income below the cutoff?
And what do we expect that cutoff to be?
Well, nothing is final until a bill is passed, but if we look at the past 3 stimulus rounds and other proposals, all signs point to a threshold of around $75,000 for an individual.
And for a couple.
And $150,000 for a married couple who files their taxes together.
Okay, let's quickly define AGI, because a lot of our listeners might not file taxes, so that term might be new to them.
Right, good point. So adjusted gross income is basically your total gross income minus a few specific deductions. For most people on a fixed income, your AGI would be the taxable part of your Social Security benefits.
Not the whole amount.
No, just the taxable portion. Plus, any pension income, money you take out of a traditional 401k or IRA, things like that.
What about things that aren't taxed?
Critically, non-taxable income doesn't count. So certain VA benefits or the non-taxable part of your Social Security, that's excluded. And that's really helpful because it means your AGI is often much lower than your total cash in hand.
So it's very likely that most people on Social Security or disability will fall well below that $75,000 line.
The vast majority, yes. So if your AGI is below that line, you qualify, period. End of story. The phrase working families is noise. Your AGI is the signal.
And let's just hammer this home with the historical proof, because I think it's the most reassuring thing we can offer.
It really is. The evidence is concrete.
Why are we so confident?
Okay, first, just pure politics. Seniors and retirees are one of the largest, most reliable voting blocs in the country.
They show up to vote.
They absolutely show up. alienating that entire group by denying them a $2,000 check right before an election. It would be, well, it would be politically ridiculous. It would backfire spectacularly.
So there's the political motivation, but there's also the plumbing, right? The system is already built to do
The
that.
plumbing is already there.
Yeah.
Exactly. Look at the last 3 stimulus checks, the $1,200, the $600, the $1,400 payments. In all 3 of those cases, the system was already set up to send money directly to Social Security retirees, to SSDI recipients, to people on SSI, to VA beneficiaries.
Right.
They didn't have to invent a new system. They just used the payment info they already had.
And you even brought up a really specific example from back in 2009.
Yes, this is a perfect historical precedent. Back in May of 2009, during that crisis, the government sent out a special $250 payment, and it went only to Social Security beneficiaries, railroad retirees, and veterans.
So they've specifically targeted this exact group before?
They have. It proves they have the ability and the willingness to do it. So when you hear working families, I want you to replace that little bit of anxiety with the confidence of history. The system is built for you.
It's incredibly clear. Let's talk a bit more about those income thresholds, the 75 and 150,000. What about people who are right on the edge? Say someone makes 76,000. Are they just out of luck?
That's a great question. And no, they're usually not just cut off completely. These kinds of payments almost always use what's called a phase out.
Phase out.
Yeah, so your benefit doesn't just drop from $2,000 to 0 the second you make $1 over the limit.
Okay, so how does that work, typically?
Usually, the payment amount starts to decrease gradually over a certain income range. For example, they might reduce the payment by, say, $50 for every $1,000 you earn above that $75,000 threshold.
So someone making 80,000 wouldn't get the full 2,000, but they'd still get something.
Exactly. They might get, say, $1,750 instead. It protects people who are right on that borderline from losing the entire benefit just because they're a little bit over. We fully expect to see a similar phase-out rule for this payment.
That's really helpful. Okay, now let's move to the legal structure of the payment. This is a bit technical, but it's maybe the most important detail for anyone with low or zero taxable income. What is this payment legally?
This is the absolute key to the whole thing. Legally, these stimulus checks, these dividend payments, they are all structured as an advance of a refundable tax credit.
Okay, 2 big phrases there, advance and refundable tax credit. Let's break down refundable tax credit first.
Right. So think about it like this. A non-refundable tax credit can only lower the taxes you owe. If you owe $500 in taxes, a $2,000 non-refundable credit will wipe out that $500, and the other $1,500 just disappears.
You don't get it back.
You get nothing back. But because this payment is refundable,
It's different.
completely different, a refundable tax credit is treated like actual money you've paid to the government. Even if your income is so low that you owe 0 in taxes,
You still get the money.
you still get the full $2,000. The government literally cuts you a check or makes a direct deposit for the full amount.
That is the guarantee. That's the mechanism that makes sure everyone on a fixed income, even with no taxable income, gets the money.
That's the whole ballgame. And the advance part just means they give you the money now based on your status instead of making you wait to claim it on a tax return next year.
Which brings up the next question. What about filing taxes? So many people on fixed incomes don't have to file. Will they need to file a tax return just to get this money?
It is highly, highly unlikely. Just like with the last stimulus rounds, the Treasury and the IRS will get the data they need directly from the Social Security Administration and the VA.
So if you're already getting a federal benefit.
They know who you are. They have your payment information, whether it's a bank account for direct deposit or a mailing address for a check or a direct express card. As long as your income is below the threshold, you should not need to do anything at all. No tax return required.
That is a huge relief to hear. Okay, so we've covered the money, we've covered who gets it. Now, the big question, when? When might this $2,000 actually arrive?
Right, the timing. So the official word coming from the president is that the money is, and this is the quote, likely coming sometime in the middle of next year, or possibly a little bit later than the middle of next year.
Okay, so let's translate middle of next year or a little bit later. What does that mean in terms of months?
We're looking at a window of, say, late summer to early fall of next year.
So not next week.
Definitely not next week. Everyone needs to manage their expectations. This is not immediate. There's a whole legislative process to get through first. This money is not scheduled to arrive in the next few weeks or even couple months.
But let's look at that timing. Late summer or early fall of next year. That's not an accident, is it?
Oh, not at all. You just have to look at the calendar. That timing is perfectly calibrated.
For the midterm elections.
Right before the midterm elections. It is a classic textbook political strategy. You deliver a huge, tangible financial benefit to millions and millions of voters just a couple of months, maybe even a few weeks, before they go to the polls.
And make sure the payment is fresh in their minds.
Top of mind. It's
Yeah.
designed to have maximum political impact.
And we have to keep saying this is still a preliminary plan. It's not law yet. What has to happen for it to become real?
Well, it has to pass through Congress. It'll likely be part of a larger bill, maybe an appropriations bill, or it could be a standalone piece of legislation. That process takes time. Debates, votes. That's why the target is the middle of next year. The final date won't be set in stone until that bill is actually signed into law.
Okay, so that's the planned timeline. But you mentioned an accelerator. What could happen that would make this money show up much faster than the middle of next year?
One thing, really. A major economic shock.
A crash.
A crash, a severe recession, a major market downturn, that crash and burn scenario. If that were to happen in the near future, say, in the next couple of months.
The political timeline goes out the window.
Completely. The need for emergency fiscal stimulus would override everything else. In that situation, the government's priority shifts from political timing to just getting cash out the door.
And they would move immediately.
Practically immediately. An economic crisis like that triggers an emergency response. You'd see massive money printing, what people call helicopter money, just to stabilize consumer spending and prevent a total collapse.
You've mentioned a number before in a scenario like that, a staggering number.
Yeah.
$15 trillion. Can you put that in context? That sounds astronomical.
It is. And to be clear, that $15 trillion isn't just for stimulus checks.
Okay.
That's an estimate of the total government and central bank intervention that would be needed to stabilize the entire financial system in a crisis on the scale of, say, 2008, but in today's much larger economy.
So that includes bailing out banks, liquidity for markets, everything.
Everything. It's the whole financial war chest. The stimulus checks would be one of the first and most important parts of that, but they'd be a piece of that much larger response. The point is, if the economy hits a wall, this payment becomes almost certain, and it becomes immediate.
Okay, that makes sense. We're talking about a potentially life-changing amount of money here, $2,000. So we have to spend some serious time on safety, security, and financial protections.
This is a top priority, paramount.
Let's start with garnishment. If you owe money to a credit card company or a debt collector, can they just take this money from your bank account?
Great question. Based on all the previous stimulus checks, the answer is almost certainly no. Those payments came with very strong protections against garnishment.
So most creditors couldn't touch it.
For the vast majority of people, yes. Now, there were a few rare exceptions.
What were they?
Things like federally owed back taxes or court-ordered back child support. In those specific cases, the money could sometimes be intercepted. But for your typical debts, credit cards, medical bills, personal loans, the money was protected. We fully anticipate this $2,000 payment will have those same protections built in.
What about other benefits? So many of our listeners rely on programs like SNAP food assistance, Medicaid, or housing assistance. Will getting this $2,000 suddenly make them ineligible for those things?
That's a vital concern, and the answer, again, should be no. Because the payment is legally a tax credit, a one-time thing, it's not treated as regular income for these programs.
So that doesn't count against you.
Right. In the past, the rule was that the stimulus money didn't count as income or as a resource for at least 12 months. The whole point is to help you, not to accidentally kick you off other essential benefits.
And for those on disability who work part-time, what about SGA, the substantial gainful activity limits?
It does not count towards your SGA limit, not at all. This is a federal benefit payment. It is not earned income from a job. Your eligibility for the $2,000 is based on your total AGI, not on how it interacts with SSA's work rules.
Perfect. Now, the big one, scams. The second there's a whisper of thousands of dollars, the scammers just come out of the woodwork. They target seniors. They target vulnerable people. We need to be loud and clear about this.
We have to be. So if you are listening, please commit this to memory.
Yeah.
The IRS, the Social Security Administration, the VA, They will never, ever call you, text you, or email you to ask for personal information or money to release your payment.
Never. What are the red flags to look for?
Any message that creates a sense of urgency or fear, your account is frozen, or you must act now to claim your money.
High pressure.
Exactly. Anyone asking you to pay a processing fee or an admin fee to get your benefit, that is always a scam.
What about gift cards?
If anyone, for any reason, tells you to go buy gift cards, Apple, Google Play, Target, whatever, and give them the numbers on the back to pay for something, hang up. It is 100% a scam every single time.
So where do people get real trusted information?
Only from official sources. That means a physical letter in the mail from the IRS or SSA, or a government website that ends in .gov. That's it.
So if you get a suspicious call,
You hang up. You don't argue. You don't engage. Just hang up. And if you can, report it. You can call the Social Security Office of the Inspector General hotline to report scams.
okay, let's say the payment is approved, the dates are announced next year, and for some reason, a listener's payment doesn't arrive, or it's the wrong amount. What should they do?
First thing is, don't panic. With millions of payments going out, there are always some delays, especially if you've recently moved or changed bank accounts.
Banks is key.
It is. The best place to check for official updates if you're a Social Security recipient is your online My Social Security portal. That will have the most accurate, personalized information for you.
So wait for the official word before assuming it's lost.
Exactly. The government will set up official channels to report missing payments, just like they did before. It'll probably be a tool on the IRS website. But wait for that to be announced. Don't call random numbers or click on suspicious links.
Okay, let's pull back for a moment. How does this $2,000 payment fit into the bigger economic picture? This is just a one-time political fix.
It's a signal. It signals a huge vulnerability in the economy, especially for people on fixed incomes. The fact that the government feels it needs to do a nearly $600 billion direct payment tells you that the normal systems, like the annual COA, aren't enough.
The cost of living adjustment isn't keeping up.
It's not with this kind of sustained inflation. It's a good mechanism, but it lags. This $2,000 payment is an admission that people have fallen behind and need a big, direct boost to catch up.
So if it goes out next year as planned, it's a targeted boost.
It's a targeted boost, but as we talked about, if it